Hello everyone, good evening to all of you. आज है 17th of January 2025, last trading session for this week. Welcome once again to this live analysis. स्टार्ट करते हैं आज का सेशन. फिलहाल के लिए देखो क्रूड ऑयल को तो कुछ खास किया नहीं है. मॉर्निंग पे एक रेजिस्टेंस एरिया था, वहीं पर मार्केट रुका हुआ है. थोड़ा नीचे आ जाता तो बेटर रहता है. एक एफईजी है, अगर सपोर्ट लेता है 6773, नहीं तो फिर अगर ऊपर गया तो अब नेक्स्ट रेजिस्टेंस कल का हाई रहेगा 6940 वाला. उस एरिया के आसपास कहीं वापस सेल करना. ठीक है, नीचे आता है तो एक एफईजी है जहाँ पर रुक सकता है. अगर एफईजी होल्ड नहीं किया तो फिर हम एक्सपेक्ट करेंगे थोड़ा नीचे वाला जो सपोर्ट है 6600 वाला, वहाँ तक प्राइस आए. रेंज बाउंड मार्केट है काफ़ी ज़्यादा ही. नीड टू सी होल्ड करता है नहीं करता है. डेटा की बात करें, बिल्डिंग परमिट का डेटा है 7 PM पे. गोल्ड और सिल्वर को इम्पैक्ट करेगा. गोल्ड के लेवल देखोगे फिलहाल के लिए थोड़ी बहुत सेलिंग चल रही है. पुल बैक आता है तो वापस सेल कर सकते हो. रेजिस्टेंस अच्छा है 2710 के आसपास. एक सेलिंग का प्लान रखा जा सकता है ऊपर. ठीक है. बाकी इसके ऊपर फिर एक रेजिस्टेंस हमारा 2718. नीचे आया तो 2695 के आसपास एक सपोर्ट मिलेगा. सिल्वर और गोल्ड को भी देखते हैं. अभी सिल्वर और गोल्ड के लेवल क्रिएट नहीं करें. इंडियन मार्केट हो चुका है क्लोज. तो क्वांटिटी साइज का ध्यान रखना, ज़्यादा हैवी क्वांटिटी ट्रेड मत करना अभी आज. एंड जिन लोगों ने लाइक नहीं किया फटाफट से लाइक कर सकते हैं. सब्सक्राइब द चैनल एज वेल, डोंट फॉरगेट टू सब्सक्राइब द चैनल. वीकली एनालिसिस कल करेंगे बाकी. बाकी देखते हैं कोई अगर न्यूज़ वगैरह आती है तो. लेट्स सी द लेटेस्ट न्यूज़ राइट नाउ. चांसेर वाली जी सर, नेचुरल गैस का चार्ट अभी लेवल क्रिएट नहीं करे. नेचुरल गैस और सिल्वर में वेट करना पड़ेगा थोड़ा सा. नेतन्याहू सेज इजराइल हमास डील टू पॉज गाजा वॉर ऑन ट्रैक. कल न्यूज आ रही थी कि शायद हो सकता है ना हो, बट लग रहा है कि शायद. इजराइल हमास डील फाइनलाइज हो ही जाएगी बिफोर 20th ऑफ जनवरी. यूएस के प्रेसिडेंट की सेरेमनी है. इनॉग्रेशन सेरेमनी उससे पहले. लाइक करते रहो गाइस, डोंट फॉरगेट टू द स्ट्रीम एंड सब्सक्राइब द चैनल एज वेल. निफ्टी बैंक निफ्टी भी देखोगे तो हायर लेवल से काफ़ी अच्छी सेलिंग आई थी. कल हिंडनबर्ग वाली रिपोर्ट की वजह से थोड़ा बहुत ऊपर मार्केट गया जरूर था, बट होल्ड नहीं कर पाया. आज वापस फॉल. China hits 5% GDP target, but Trump tariff threaten further growth. Chinese hackers access Yellen computer in US Treasury breach. Wow.
News when you want it with Bloomberg News Now. I'm Caroline Hepker.
And I'm Stephen Carroll.
Israel's Prime Minister says his government has finalised an agreement with Hamas to pause the war in Gaza. In a statement released this morning, Benjamin Netanyahu said his
की कैंडल गैप अप गैप डाउन जैसे क्यों आ रही है? वॉल्यूम कम है इसलिए है वो. थोड़ा बहुत मॉर्निंग पे वॉल्यूम कम आ रहा है आजकल. कल भी वैसा ही था. एक्सपेक्ट कर सकते हो अभी 5:30 6:30 के बाद वॉल्यूम बढ़ जाए। मॉर्निंग पे वॉल्यूम ही कम रह रहा है, लंदन सेशन से भी कुछ खास वॉल्यूम आ नहीं रहा। 1:30 पे लंदन सेशन ओपन रहता है, बट इवन आफ्टर दैट वी कांट सी एनी दैट काइंड ऑफ कंटिन्यूअस वॉल्यूम कह सकते हो। इसलिए वो कैंडल थोड़ा गैप अप गैप डाउन हो रही है इवन 15 मिनट टाइम फ्रेम पे भी, बट इवनिंग पे अच्छा मूव कर रहा है। नेचुरल गैस तो ठीक ही है खैर बाकी।
Held in Gaza. In exchange, Israel will the prospects for the future.
I am
News when you want it with Bloomberg News Now. I'm Caroline Hepker.
And I'm Stephen Carroll.
Israel's Prime Minister says his government has finalised an agreement with Hamas to pause the war in Gaza. In a statement released this morning, Benjamin Netanyahu said his security cabinet would meet later to approve the truce, suggesting that it would begin on Sunday. That's despite his office yesterday accusing Hamas of reneging on some commitments. US Secretary of State Antony Blinken is optimistic about the prospects for the future.
I am confident, and I fully expect that implementation will begin, as we said, on Sunday. It's not exactly surprising that in a negotiation that has been this challenging and this fraught, you may get a loose end.
Antony Blinken speaking there. The ceasefire is backed by US President Joe Biden and his successor Donald Trump, and will see Hamas release 33 of about 98 hostages still held in Gaza. In exchange, Israel will withdraw troops from populated areas of the Palestinian territory and free around 1,000 Palestinian prisoners.
China's economy grew by 5% in 2024, beating estimates and hitting the government's growth target. The data comes after a stimulus blitz and export boom boosted activity. Helen Chow, chief Greater China economist at Bank of America, says government intervention spurred the expansion.
There was some hope that actually after the policy package was delivered on September 24th, there could be some turnaround in the data. So I think that's on the industrial side, which is very much helped also by the front-loaded export orders. So that I think clearly helped.
Bank of America's Helen Chow speaking there. China has vowed further monetary easing and stronger public spending this year as the economy braces for Donald Trump's return to the White House. The US President-elect has threatened tariffs of as high as 60% on Chinese goods.
The UK economy may be in a worse state than expected after retail sales missed by a large margin. Economists had predicted a 0.4% rise in December. Instead, sales fell by 0.3%. Our Markets Today editor Sam Onstead says the numbers are worrying.
Actually, a lot of the reporting we've had from retailers over the course of the last 2 weeks has been very good. So the big retailers are doing well. So the indication from this is that actually underneath that, so if you're looking beyond the Marks and Spencers and the Tesco's of the world, things are not so strong.
Bloomberg Sam Onstead speaking there. The surprise adds to fears that the UK is facing a stagflationary trap where high inflation meets low growth. The pound this morning is currently down by 0.3%, trading at 121.96. The pound index has slid nearly 3% since the start of this year.
Ahead of Donald Trump's inauguration, his closest UK ally says there are deals to be done with the new administration. Reform UK leader Nigel Farage will be attending the ceremony on Monday. In an interview with Bloomberg's UK Politics podcast, Farage said Elon Musk should be kept away from direct economic policy.
Musk is a force for good in terms of open democratic argument. When it comes to power and influence, I think the important thing is he mustn't be seen himself to be dictating what the Treasury Department do. And that is important.
You can hear that full interview with Nigel Farage on the Bloomberg UK Politics podcast. His Reform UK party is vying to replace the Conservatives as the main right-wing force in British politics, with a recent poll putting their support just behind that of the governing Labour Party.
TikTok looks poised to win a reprieve from a US ban. Under the law, it faces a shutdown on Monday, but the incoming president has pledged not to close the popular social media app. Bloomberg's James Wilcock has more.
What does the incoming US administration's China policy look like? Trump has been characteristically hard to pin down, threatening tariffs, but also inviting President Xi to his inauguration. TikTok is set to be one of the first tests of the government's instincts, and many are watching to see how they handle economic and business ties with China. That may include Chinese intelligence, who Bloomberg have learned hacked Treasury Secretary Janet Yellen's computer in their recent cyber attack. In London, James Woolcock, Bloomberg Radio.
And shares in mining companies Rio Tinto and Glencore are rising in London after Bloomberg's been reporting that the companies conducted an early stage of talks around a merger. Now, reports say the discussions are not currently active, but if a merger were to happen, the tie-up would be the largest ever mining deal, creating a rival to sector leader BHP. The mining industry has seen a wave of deal-making in recent years, driven largely by big producers' desire to expand copper production. Representatives for both Rio Tinto and Glencore have declined to comment.
Donald Trump's nominee for US Treasury Secretary Scott Bessent is set to be confirmed in the role following his hearing yesterday. The veteran fund manager emphasised the importance of tax cuts and aligned himself with Donald Trump's economic goals.
This is the single most important economic issue of the day. If we do not fix these tax cuts, if we do not renew and extend, then we will be facing an economic calamity.
Scott Bessent there testifying before the Senate. It's unclear when the Republican-controlled Senate will vote on his nomination, despite suggesting that they will oppose other cabinet picks from the President-elect. No Democratic member stated specific objections to Bessent taking the Treasury job yesterday.
Well, those are your top stories on the markets. The FTSE 100 hit a new intraday record high earlier. It's currently up 1%, boosted by those mining shares. The CAC around 9/10 higher. The Stock 600 up by 0.7%. On Wall Street, S&P E-minis are 0.3 higher. Nasdaq futures up by 0.4%. And the weakness in the pound continuing. 0.4 weaker against the dollar this morning, 121.96.
That's news when you want it with Bloomberg News Now. I'm Caroline Hepker.
I'm Stephen Carroll, and this is Bloomberg.
I mean, no one expected a V-shaped recovery so quickly. Obviously, it's going to be a slow, steady putting in of the foundation and then maybe a little bit of a glide scope upwards. But again, no V-shaped recovery. And it was, all the numbers pretty much were better than expected, as you can see. We got the fastest pace of GDP growth in 6 quarters, actually, in the fourth quarter at 5.4%. The estimate was 5%. That puts the full year growth right bang in line with what Xi Jinping said it was going to be at 5%. Go figure. We were expecting 4.9%. Retail sales also better than expected at 3.7%. And that is a crucial number because, again, consumer confidence is weak. Consumer spending has been relatively weak. And you can pretty much chalk this gain in GDP and the better than expected results up to the stimulus that we got in late September, but also on the back of exports. There was a better than expected export gain in December. Again, a little bit of that is due to front loading of orders from the United States ahead of any proposed and threatened Trump tariffs. But again, the heavy lifting still has to come from the Chinese side, essentially in, outlining what kind of stimulus will come from the National People's Congress in March. And property, I might add, property, there's no panacea for the property woes in China, but the property numbers were better than expected and showing signs of stability. New home prices were down just 0.8%. 19th straight month of declines, but almost flat. Residential property sales year to date were also down just 17%. That was the best set of numbers in 2024. So maybe there's a little bit of a floor coming in on the property.
Well, suffice to say, a challenging environment for China. We're talking about the longest stretch of deflationary pressures since the Mao era. We're talking 1960s. And we've been waiting for the big bang stimulus, that QE. That is still not happening.
No, but we're expecting some sort of stimulus package from the National People's Congress coming up, the Lianghui, in the first part of March. I think it starts around March 5th. Runs for a week or 2 weeks. We don't know yet. But again, the Central Economic Work Conference that was held in December behind closed doors laid out the plans for potential stimulus. I think the Chinese authorities are simply waiting to see what type of day one impact the Trump administration will have on the tariffs and the export front and what kind of fiscal stimulus is actually needed. And that could be rolled out in March, as I said. But one number that I also want to point out that will probably be a focus of the National People's Congress is the demographics.
ओके नेचुरल गैस में देखोगे तो नेचुरल गैस सिल्वर में देखेंगे बाद में. नेचुरल गैस में देखो मॉर्निंग पे गैप अप ओपन हुआ था. कल रेजिस्टेंस से अच्छी खासी सेलिंग आई थी, फिर क्लोज होते होते एक बड़ी कैंडल बना दी थी. गैप अप हुआ था, वापस सेलिंग आ गई है. नीचे वो सपोर्ट बन गया. तो नीचे अराउंड एक सपोर्ट जोन है, यहाँ कहीं बाइंग का प्लान रखना इस एरिया के आसपास। यहाँ से भी आ सकती है बाइंग, बट हायर लेवल से फिर क्वांटिटी कम रखना है, फिर अवॉइड करना। नीचे लेवल से रखोगे एसएल छोटा होगा। हायर लेवल पे जाता है तो 363 364 के अराउंड एक सेलिंग एक्सपेक्ट करेंगे। कोई नए बाकी लेवल बनेंगे, वी विल सी दैट। न्यूयॉर्क सेशन ओपन होगा 6:30 इंडियन टाइम के अकॉर्डिंग, और यूएस मार्केट 8 PM इंडियन टाइम के अकॉर्डिंग।
Population essentially, the births rising slightly to 9.54 million in 2024, but still it's the second lowest total of new births since 1949, and the third year in a row that we've seen the population in China decline, and that's going to pose a demographic issue going forward for the Chinese workforce.
Today, I believe that President Trump has a generational opportunity to unleash a new economic golden age that will create more jobs, wealth, and prosperity for all Americans. My life's work in the private sector has given me a deep understanding of the economy and markets. And while this experience will be invaluable in crafting economic policy, I have long adhered to the principle that you should know what you don't know and lean on those who do. Having never served in government, I intend, if confirmed, to be in close contact with each of you in your offices and seek your counsel. The Treasury Department plays a critical role in protecting American national security. We must secure supply chains that are vulnerable to strategic competitors, and we must carefully deploy sanctions as part of a whole-of-government approach to address our national security requirements. And critically, we must ensure that the U.S. dollar remains the world's reserve currency. Today, Americans face significant challenges in an economy that has not created enough opportunities for working men and women. We have an affordability crisis, a housing shortage, and for the first time in my lifetime, parents feel as though the American dream is slipping away from their children. The federal government has a significant spending problem, driving deficits that have averaged an historically high 7% of GDP during the past 4 years. We must work to get our fiscal house in order and adjust federal domestic discretionary spending that has grown by an astonishing 40% over the past 4 years. Productive investment that grows the economy must be prioritized over wasteful spending that drives inflation. As we begin 2025, Americans are barreling towards an economic crisis at year-end. If Congress fails to act, Americans will face the largest tax increase in history, a crushing $4 trillion tax hike. We must make permanent the 2017 Tax Cuts and Jobs Act and implement new pro-growth policies to reduce the tax burden on American manufacturers, service workers, and seniors. I've already spoken with several members of the committee, as well as leaders of the House, about the best approach to achieving these important goals together. As President Trump has said, we will unleash the American economy by implementing pro-growth regulatory policies, reducing taxes, and unleashing American energy production. The breadth and depth of our capital markets, along with predictable pro-growth tax policy and smart updated regulation, will continue to make America the most popular destination in the world for starting, growing, and taking public a business. And as we rebuild our economy and lay the foundation for the next generation of American competitiveness, we must use all the tools available to realign the economic system to better serve the interest of working Americans. For too long, our nation has allowed unfair distortions in the international trading system. President Trump was the first president in modern times to recognize the need to change our trade policy and stand up for American workers. If confirmed, I look forward to working with President Trump and members of this committee to do just that. Members of the committee, these are just some of many important goals that President Trump has laid out for me and others on his economic team. I firmly believe that if confirmed, and with your counsel and support, we can usher in a new, more balanced era of prosperity that will lift up all Americans and rebuild communities and families across the country.
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
Well, the Village People, I think, were not at the Republican convention, but Hulk Hogan, of course, was a big star in Milwaukee over the summer when Republicans had their presidential nominating convention. So it makes sense that he's back. He was, like I said, a big star in that event on when President Trump, incoming President Trump, accepted the Republican nomination. But it's going to be a big scene. It's going to be on TV and grab a lot of headlines. But I also wanted to point out there are going to be just loads of events, many of them corporate sponsored. You have big business and you have big business moguls, whether it's Mark Zuckerberg from Facebook, Meta, Amazon, other companies that have contributed to the inaugural fund.
Washington. It is pretty much a make-or-break weekend for TikTok. The U.S. Supreme Court ruling is set for 10 a.m. Eastern. The ban in the U.S. is scheduled to kick in on Sunday, but President-elect Trump has vowed to give the social media app more time. How can he do that? Tamlin Basin of Bloomberg Intelligence is with us. Tamlin. To delay the January 19th deadline?
Yeah, sure, man. So we don't think that they can do all that much to delay this January 19th deadline from taking effect. But what we are seeing is a little bit of momentum, again, on a bipartisan basis. They really got in action last night when we saw Minority Leader Chuck Schumer say that he favors a delay. Now, what this would be a delay would be to find an American buyer for TikTok. Now, again, I don't think there's going to be enough time to get anything passed to delay that January 19th deadline. So most likely that law is going to take effect on Sunday, and then we might have a reprieve early next week through sort of a bipartisan basis at Congress.
Look, the Supreme Court's expected to rule today. What is the best case scenario? Is there a caveat they can deliver? Is there a verbiage that they can deliver?
Yeah, so the best case scenario for TikTok would be winning on the merits, would be a Supreme Court saying this was an unconstitutional law. Now, if we paid attention to last Friday's arguments, and it definitely did not seem like 5 justices were siding with TikTok. So potentially what they could do is say, we're not necessarily going to rule on the merits right now, but we are going to delay the ban because we do have some questions on this. So I think that would give TikTok a little bit of time. Again, we're going to have to wait and see this morning when the court releases its opinion if there's enough there to save TikTok in the near term.
But then, of course, Trump has floated the idea of an executive order to save TikTok. You think that'll just be a simple announcement, or will it have complexion as well?
I think there would be a bit of complexion, again, because an executive order isn't necessarily going to override the law. So what it can do is say that maybe we're not going to enforce this law while we work towards other options. The question for the companies that are hosting TikTok is whether they're going to rely on that. They're a massive liability if you violate this law. It's hundreds of billions of dollars. So the question is going to be, are these technology platforms, are they going to stop hosting TikTok, or are they going to pull it off the app stores based on this executive order? And I think that's a pretty difficult call for management teams.
Tamlin, thank you very much. Tamlin Basin there of Bloomberg Intelligence on TikTok. Let's see what happens. We'll be back on Tuesday and we'll let you know the outcome. Let's turn our attention back to the confirmation hearings, because when asked about Russian oil sanctions, Scott Bessent answered that he would support dialing them up to end the war in Ukraine. Let's get to Will Kennedy. He is our senior executive editor for Energy and Commodities, joining me now. Will, Bessent, verbatim, I will be 100% on board with taking sanctions up. Now, this was a little bit of not so much of a shock. He didn't name the names in Russia, but this just shows you we're going to a new level, a potential new level of stick rather than carrot, to try and draw close to the Ukraine-Russia conflict.
That's right, Manus, and I think what we should take away here is that oil sanctions are definitely seen by the Trump team as part of the toolbox as they work towards their aim of ending the conflict in Ukraine. We also ran a story yesterday trying to talk people through the thinking inside the Trump camp. And yes, ratcheting up sanctions to put pressure on Russia is definitely one option, as Bessent said yesterday, but they're also thinking that if it helps get a deal, they could show some goodwill and by going a little bit softer on oil sanctions. So I think what people should take away is, as we get into the new administration, as we look perhaps towards an end to the war in Ukraine, oil sanctions on Russia are going to be a part of that conversation and a part of that process.
Describe the state of the Russian oil industry at the moment, because we saw the Biden administration go after the tanker fleet, the shadow tanker fleet, the insurance side of the business. If the Trump administration escalates, it will probably involve the name Rosneft, which they did not name by name yesterday. So what shape is that industry in?
Well, broadly, the Russian oil industry has come through the last 2 and a bit years pretty well. It is managing to hold production pretty close to highs. It's exporting a lot of oil. It's having to use a shadow fleet to do it and change the way it trades and exports oil. But that oil is finding a market in India and China. Before we get to the Rosneft question, though, I think the point is that the sanctions that the Biden administration introduced earlier this week, they are very material. And I think that a lot of people, when they look at those sanctions and doubling the number of tankers that will be placed under sanctions, think that it will materially, at least in the shorter term, really impact their ability to export oil. So I think these current sanctions are a step change. And clearly, if they did do what Besant said yesterday and sanction oil majors, i.e. Rosneft, as you say, then it would ramp it up further still, and then you are getting into a situation where sanctions probably are cutting exports from Russia.
Very briefly, this was supposed to be the year of surplus. If this next administration goes more max sanctions on Iran, Venezuela and Russia, that changes the narrative and the discussion, Will, doesn't it?
Quite possibly. I think there are two variables, though, before we can answer that question for certain. One, of course, as always, is the Chinese economy. Clearly, Chinese oil demand disappointed some people last year because of the general weakness in the wider economy and maybe some structural shifts to do with EVs. Does that continue or does it pick up? That's one question. And then if we have these sanctions on those three countries that you outlined, does OPEC respond? Do they put more barrels into the market? We don't know the answer to that.
Will, thank you very much for being with me this morning, Will Kennedy, on the Scott Bessent hearing. Coming up, President Trump gears up to return to the White House. We'll give you the context.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Romaine Bostick in Detroit, and this is Bloomberg.
This is Bloomberg Brief. I'm Manish Krenny in New York. I look at the rest of the weekend for you, and it's a pretty packed one. In terms of data, U.S. housing starts and building permits, 8:30 a.m. Eastern today. And then it is the confirmation hearing for the Secretary of Homeland Security nominee, Kristi Noem. That's at 9 a.m. Sunday, the incoming president holds a rally in Washington, plus the TikTok ban will kick in if the Supreme Court doesn't take action. Now, there are some individual stock that you got to keep an eye on. You got Lam Research raised to overweight there, and you got that's at KeyBank, and $95 is the target for them. Applied Materials also raised to overweight at KeyBank. Price target $225. The analysts there are saying the industry target of $1 trillion in semi-sales by 2030 is on track. JB Hunt, the shares slide after the quarterly profit trails estimates. Now, we've just finished a conversation about oil, but this is really where you want to focus your risk. We're into the fourth week of gains. Scott Bessent is prepared. I will be 100% on board with taking sanctions up. What does that mean? Could it be to Rosneft? Keep an eye on copper. You're up the longest winning streak since 2017, 8 days in a row on the back of that China GDP coming in at 5% for 2025. But I want to go to the bond market because this is what really matters. This week has seen a considerable repricing, down 16 basis points. I've had two conversations. State Street say 5.25% is eminently possible, and we've just had Kathy Jones from Charles Schwab. She's basically saying, yeah, 5.25, but it's going to be darned hard to get to 6.
Or other authorities.
Could face bigger challenges next.
It was going to keep Green World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond. Bringing you up to the minute technology news whenever and wherever you are. I'm Ed Ludlow at CES in Las Vegas, and this is Bloomberg.
Market markets pricing in just the right stuff coming out of D.C.
We've always viewed policy as either an accelerant or a dampener. By itself, it rarely makes trend.
The engine of the car, being the consumer, looks completely fine. Is it going to get turbocharged by some of these policies? I think that that's probably a risk that we can't dismiss.
We're in this really sensitive period of time right now. The markets are really walking on pins and needles.
There are these exogenous shocks that are going to disrupt the cycle that we're currently in. We don't know the probability and we don't know the size of them, but we know that they are coming.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now, coming into Friday poised for the best week of gains since election week. That big, decent week of gains, and the first week of gains on the S&P of 2025 so far. We had some weight to it, up 1/3 on the S&P 500, on the Nasdaq up by 0.4, encouraged by earnings and the economic data, still nervous about what might change on Monday.
That's right. Monday is just going to be almost a whole new world. We're going back to the Trump era, and we got a little bit of what policies might be so important to the incoming administration. Yesterday, when we heard from Scott Bessent, who's going to likely sail through confirmation and become the next Treasury Secretary, he did say this. This is the single most important economic issue of the day. This is pass-fail. He was talking about extending TCJA. Wall Street Journal, though, reporting that on some other measures, Trump might leave Congress behind and go full throttle on himself. And what we're hearing, what we're seeing in reports, is almost 100 executive orders, Jonathan, in just the first few days.
And nothing to upset the bond market so far. For a third consecutive session, bond yields are lower. The 10-year yield this morning is down a basis point or two to 459.66. We haven't seen a 3-day winning streak on a 10-year maturity since early December. Governor Waller, super dovish.
Very dovish, saying that we could possibly get a cut in the first half of the year if the data continues as is. Of course, reliability, that comes out, and then you get all the commentary, oh, is he just auditioning for the Fed chair? I don't see why both can't be true. Why can't he be dovish and doing that? I think we need to remember in 2023, Waller was the bellwether. He flipped to dovish. The rest of the central bank followed him. I think it's important to listen to Waller, not just write it off as him campaigning for the Fed chair.
He sounds like an outlier, though, and that's the issue, because of a lot of other Fed officials are concerned about policy changes in the year to come. We know the banks who think we get no rate cuts this year. Deutsche Bank, Bank of America, Mizuho, RBC, BNP Paribas expected no cuts in 25 based on what? An inflationary upsurge from the new administration's policies, and that's what we've all got to watch through the next few weeks.
And then you get someone like Kevin Warsh writing an op-ed who has also been tilted as potentially the next Fed chief, saying that the central bank is being too political, that they are using tariffs, and I guess you could wrap in that market participants too, as a scapegoat for possible inflation, saying that that's not what the central bank should be doing. They need to be smaller, and maybe that added to the bond market rally too, that's the kind of Fed chair we could get.
We're 3 days out from Trump being inaugurated, and where do we have a race for the Fed chair? But if you go back to how this incoming administration might use tariffs, which is something Kevin Warsh talked about in the Wall Street Journal op-ed, he was saying that Trump's economic policy is not just about tariffs. It's more than tariffs. Yesterday, Scott Bessent, when he talked about tariffs, he said, 1, it's to address unfair trade practices. 2, broad tariffs could be revenue raisers. And 3, they could be used as a negotiating tool. Basically, everything's on the table.
Lots to talk about this morning. If you are just joining us, welcome to the program. Equity futures up by 1/3%. Joining us through the next 60 minutes or so, we'll catch up with Christian Nolting of Deutsche Bank on a challenging start to the year. Isaac Vortansky of BTIG as Bessent clears his Senate confirmation hearing. And we'll catch up with the brilliant Erica Najarian of UBS following strong Q4 bank results. We begin this hour with stocks positive. Investors looking ahead to President-elect Donald Trump's inauguration on Monday. Christian Nolting of Deutsche Bank writing the following. Expectations for higher public deficits and uncertainties about announced tariff policies drove 10-year U.S. Treasury yields higher since the start of the year. Consequently, it has been a challenging start into 2025 for equities. Christian joins us now for more. Christian, welcome to the program, sir. Let's forget the data. Let's forget the earnings. Let's talk about day one of the Trump presidency. What are you expecting to change, sir?
Yeah, I think if you compare this to, say, 8 years ago, I think now the government is nearly already in place. So we have all the Congress hearings, of course, obviously. So it's an earlier start, I would say, than 8 years ago. And of course, there will be discussion about tariffs, how they implemented. Is it high or is it step by step? I think then a lot of, as you rightly said, right, executive orders to come in. I think to look through this a little bit, we, as I wrote, think that some of these policies at the beginning might be indeed inflationary. And I think that was one reason why we saw that increase in yields, which we actually predicted correctly, hopefully. And from that perspective, yeah, to come down a little bit in yields helps markets. So we have a very good week. But we shouldn't forget there are some policies, and by the way, not only in the US, there's a lot of fiscal policy, but also globally. No one is talking about austerity from my point of view. And hence, we see that little bit higher yields and hence less Fed cuts, less cuts probably also of the other central banks.
Christian, what did you make of Scott Bessent's hearing? Is there anything in there where you're leaning in towards to understand potentially what Trump 2.0 could look like?
Yeah, from my point of view, what is important really how they start with the tariffs. Is it high and then going lower, as I said, or is it step by step? So that's not quite clear. I think that's quite interesting. Maybe we know more already this Monday. And I think then from our point of view, I think it's a continuation of policy. I think there was not so much surprise from the hearing yesterday to the markets, which I think is good news from my point of view.
Do you think the Fed will look at Trump's tariffs and think they're a one-off hit when it comes to inflation, or that potentially this could be more substantial?
Yeah, again, it's about the structure, but of course the Fed will look into that, right? So they have the growth goal, they still have the price stability, the inflation goal. Yeah, they will look at this. And of course, they need to take into account what's the inflation expectation, what's the inflation outlook. And I'm in the camp that tariffs are inflationary. Not everyone is. I am, at least at the beginning, until things might adjust. And they need to figure that in, and I think it's not a surprise if it comes. So sure, they will look at this, for sure, yeah.
Well, Christian, then maybe the market reaction has been very logical of higher yields, stronger dollar. But then one thing hasn't quite been logical. The idea with tariffs enforces that American exceptionalism. But today, we're seeing the FTSE 100 at a record and the DAX at a record. What do you make of that?
Yeah, so being in Germany, maybe the mood on the economy might not be the best at this point in time. But if you look at the DAX index, 84% is not Germany, it's global, right? So if you look MDAX, SDAX, a smaller index, that performance is not as stellar as we do see here. So these companies are global and profit then a little bit from US exceptionalism as well. So Germany is doing much more with the US than with China. That has completely changed. And from that point of view, also here in Europe, we have now seen that luxury goods had a boost, and that was not coming from China. Maybe it's more coming from the US side. So there's also a global phenomenon we should not rule out from that point of view, and we have to watch this. So that's not only positive for the US, it could also positive even more globally.
Well, can't we flip that on its head, Christian, and say in the S&P 500, 41% of the constituents get revenue from Europe? Shouldn't they then be under pressure?
Well, as long as you're global, I think you have growth, right? So it's really to the smaller companies in those economies who do not do very well, like here in Germany at this point in time. That could change, but I think that trigger, which is necessary then, also is to get some fiscal policy probably over here in Europe. So as you have had the elections already last November, so we are here in Germany going into election next month, and maybe that could be a trigger for some fiscal policy. And then I could say, as you rightly said, 41% is Europe. Maybe then you see more investors coming to Europe as well if they do see some fiscal policy. But I think they want to see that executed, and then the so far, say, called unlike Europe could also come up with some better performance from my point of view. But it has to have a trigger, obviously.
Christian, I'm really pleased that Danny brought this up. Expectations coming into 2025 were really downbeat for European equities, very upbeat for US equities. The Euro Stoxx 50 is up 4 straight days, and it's up around 4% in that period. And some people are starting to ask the questions that Danny is asking. What needs to go right to keep this trend intact? You talked about fiscal stimulus. Now, we're sitting outside of Germany, wondering if the mood is changing around that story. You're inside Germany. Can you give us a flavour of the conversation? Are they actually open to doing more?
I think it's a political topic, right? So is Germany ready to do more? There's elections, obviously, in 37 days, not too far out. And the new government, the question is, are they ready to do more? I think they need quite a majority on this. So there's all this discussion about the debt brake. You need a 2/3 majority. And we need to see, is the German electorate ready to give a 2/3 majority to that government, or can they create that 2/3 majority? So I'm not talking about the seats, but the parties in the parliament. So can they be blocked by 1/3 of the very left or very right party? That's the question I think we need to watch. I think some fiscal policy could be doable. There's, I think, some money around, to be very honest. But I think before the election, that won't happen. And until then, people will wait and watch. Good news for Europe, as I said, Luxury goods did very well, which was a driver and a boost in the Euro Stoxx 50. And yes, you see indeed some outperformance year to date compared to the S&P 500. But if you look at productivity gains, if you look at the investment money, if you look at research development money in absolute and relative terms, is still pro-US. So I wouldn't change the call at this point in time. I really would like to see some change in Europe first before we change that call.
Granted, it is only January 17th, so I appreciate that, Christian. Appreciate your time as well. Christian Nolting there of Deutsche Bank. Thank you, sir. I'm on the same page, seeing the same story. Record highs on a FTSE, elsewhere on the DAX, 4-day winning streak on Euro Stoxx 50.
It's really impressive for a region where optimism had essentially vanished. And maybe this showed us just how low the bar is. It's not only the fiscal developments that are getting better, but maybe it's getting some help from macro too. In the UK, finally having CPI come down. We talked about the accounts yesterday. ECB officials wanting 50 basis points of cuts. When things are so dire and you're so concerned, maybe you don't need that much to launch you to all-time highs.
Equity futures stateside doing better as well. We're up by a few tenths of 1% on the S&P. Let's get you an update on stories elsewhere. Here is your Bloomberg Brief. Israel finalizing an agreement with Hamas to pause the war in Gaza, suggesting a ceasefire is on track to begin on Sunday. The deal includes Hamas releasing 33 hostages, Israel withdrawing troops from populated areas, and freeing around 1,000 Palestinian prisoners. Elsewhere, Bloomberg News learning Treasury Secretary Janet Yellen's computer was breached by Chinese hackers, along with those of her 2 top lieutenants. Our sources say fewer than 50 of Yellen's files were accessed and nothing classified was taken. And finally, firefighters in Los Angeles getting a reprieve from the strongest winds today, but the National Weather Service saying dangerous conditions are expected again next week. At least 27 people have been killed and 60 square miles have been charred in the wildfires. And that is your Bloomberg Brief. Up next on the program, an economic calamity.
If we do not fix these tax cuts, if we do not renew and extend, then we will be facing an economic calamity.
The latest on Capitol Hill up next on the program, live from New York City this morning. Good morning.
In this gig, you get comfortable being uncomfortable. The enemy is always adapting. Hey, handsome. Always iterating.
As my birthday signals another milestone in my life, I'm hopeful that if I stay true to myself and follow my instincts, my legacy will be looked on kindly for generations to come.
Companies in Asia are betting on tech.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Live from New York City, welcome to the program. Equity futures right now up 1/3% stateside. Check out Europe. Danny's all over it. The FTSE at a record high, up by 1 full percentage point. Yesterday, Richemont with some decent numbers, spurring, igniting a massive rally in the luxury players across the continent. And the Euro Stoxx 50 is up by something like 4+% for the year so far.
And I have to say, I talked about all the great things, not great things, but I mean, marginally better things happening in Europe for them. We also need to acknowledge that it's the U.S. also helping. It is CPI coming in a little bit softer, giving both central banks and fiscal policymakers more headroom. That's a good thing for their equity markets.
The data's better, the earnings have been decent, and I think we've stressed this repeatedly. Things can all change on Monday and the following week. Under surveillance this morning, an economic calamity.
This is pass-fail. That if we do not fix these tax cuts, if we do not renew and extend, then we will be facing an economic calamity. And as always, with financial instability, that falls on the middle and working class people.
Here's the latest this morning. Trump's Treasury pick, Scott Bessent, urging Congress to extend 2017 tax cuts, warning their expiration would mean an economic crisis. Bessent appearing on track for confirmation without specific objections from Democrats during yesterday's hearing. Joining us now, Isaac Boltanski of BTIG. Hey, Isaac, welcome to the program, sir. We need to talk about executive orders and Trump Day 1. I just want to get your thoughts.
Used to work at Treasury, Kim. So interesting to get your line of sight here. Start big picture, Kim. You were listing. How did you think he did?
Oh, he did very well. I don't think there's much doubt that Scott Bessent will be the next Treasury Secretary. And my guess is that, pardon me, it'll happen either the first week of February or the week before.
And, you know, as you say, he wasn't one of the more controversial picks, right? So what did we learn today in this hearing that we didn't already know? What were you most looking for?
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Live from Studio 2 of Bloomberg headquarters in New York, I'm Alex Steele.
And I'm Matt Miller. We're kicking you off to the closing bell here in the U.S., where we didn't see a lot of action on the index level, but a ton is going on under the hood.
Yeah, really fun stuff going on, particularly if you look at semis. So take a look at where we sit right here. The S&P is flat on the day, as Matt was saying. Not that exciting to write home about, but you are seeing the Mag 7 sell off. It's an Apple and it's a Tesla story. You're looking at the NASDAQ 100 off by 0.1%. And I wanted to put in the yield market just for fun. So you're seeing a 10-year yield down 4 basis points. Again, not a huge move after that big move we saw yesterday, but nonetheless, we're kind of reversing that risk management that higher yield bias, Matt.
Yeah, and big beats for big banks continue. 6 out of 6 of the major financials that reported over the past 2 days have beat on net interest income expectations. Morgan Stanley coming out and saying M&A pipelines are at the highest level in 7 years for that bank. It's a different story, though, in the healthcare space, with United Health reporting higher patient care costs and revenue that fell short of estimates. Many analysts say higher costs are going to be an overhang trend heading into the rest of the year. But today's retail sales data could be a good sign for earnings yet to come. The numbers showing sales broadly increased in December, indicating strong consumer demand to wrap up the holiday season. 10 of the report's 13 categories posted increases. And then, of course, tariffs. We're still talking about them. They loom large as President-elect Donald Trump is set to take office on Monday. Scott Bessent, Trump's pick for Treasury Secretary, is on Capitol Hill today for his confirmation hearing. The hedge fund manager says the administration would use tariffs to make trade more fair for Americans. And senators, of course, grilled Bessent on the debt ceiling, on health care costs, and on inflation, Alex.
Yeah, good stuff. We'll get to all of that throughout the next couple hours. Let's circle back to what Matt was talking about in terms of earnings, right? You got the big banks, you got some regionals, you have United Health. This shows the earnings scorecard pretty much every quarter going back for years. We're focused on right here, that 7.8% earnings growth for the fourth quarter of 2024. That's what we're in right now. Not a huge change from the last year when it comes to earnings, right? Not amazing like we saw back in 2021, but not negative like we saw in 2023. So the question really is going to be twofold. It's going to be what their expectation is. It's just an expectation game, right? Like we're going to underpromise and overdeliver. What does their outlook look like? And what about costs, margins, and the dollar? Those three things kind of swirling about in all the different sectors as we move forward, Matt.
All right, let's talk about this more with Anastasia Amoroso. She is Chief Investment Strategist with iCapital, and she joins us here on set. Anastasia, first of all, welcome. Thanks for joining us. In terms of these bank earnings, all big beats. What do you think of them specifically? And is there any read across to the broader economy?
Absolutely. First of all, I think the way I would describe them were blockbuster earnings, Matt. And it's not just in terms of the beating on the current quarter, but really guiding and the outlook that we see for this year. And when you look, for example, the capital markets activity was very strong for this quarter. But if you look at the consensus forecasts and some of the commentary that came out around those forecasts, it's really positive. So most of the banks are expecting the capital markets activity, specifically from the advisory fees, from M&A advisory, to really tick higher. And that has a lot of read-throughs that we can talk about. The other thing that I thought was notable is that there's been some positivity around net interest income for banks. But if you look at consensus expectations, they're very subdued. And in fact, they're looking for maybe 1% NII growth in 2025. But I think that could be one of the surprise factors is if we see better loan growth from banks this year, and if we still see somewhat lower interest rates and steeper yield curves, I think that's where the banks can beat on going forward.
Well, the banks are kind of sandbagging there, right? Remember, JP Morgan a couple months ago said NII for 2025 was only going to be $84 billion. They said analysts are getting ahead of themselves. Then they said, well, okay, maybe it's going to be 90, and then now they're saying 94.
Right, of course. And they guided higher. Maybe that's the reason why some of those NII numbers are still subdued, but they get revised higher when the results come in.
Can I just ask on the loan growth? Yesterday we talked to Mike Santomassimo on this program, the CFO of Wells Fargo, and he was saying, M&A advisory fees were higher in the last quarter, right, as we start to get more positive corporate animal spirits heading into Trump. But the loan growth isn't quite there yet. Even though small business expectations are high, they haven't really acted yet. And Trump's coming to office on Monday.
No, they haven't. And part of the reason was that interest rates have been elevated for the bulk of the last 2 years. But if you look at auto loan interest rates, if you look at credit card loans, if you look at just the SOFR rate and the term SOFR, off of which a lot of those smaller business loans are priced off of, it has started to move lower. And it's essentially 100 basis points lower where it was than just 6 months ago. So I think over time that does start to feed through those animal spirits, and that does start to feed through to some of that lending growth. So if it's running at 2%, maybe we could see 3 or 4% loan growth this year. And obviously the economy has to deliver on that 2 or 3% GDP growth for that.
But Matt, to your point, I mean, you look at U.S. Bancorp and PNC today. U.S. Bancorp's worst performing stock in the S&P, and part of that is why? Because of the weaker loan demand. So Anastasia, if we broaden it out for a second when it comes to earnings, I was saying you're looking at 7.8% earnings growth. Like, where are we going to get the most bang for our buck in that earnings season?
Yeah, I mean, where you're going to get the most earnings growth is from the financial sector. And of course, financials, versus banks, there's a pretty big distinction there, benefiting from the capital markets activity. And then you have to go to the true and tried technology names and the communication services names. So that's what's really likely to deliver the greatest earnings. Now, maybe consensus estimates have been revised, or, they would not been revised down significantly, but I still think you'll get 3 or 4% earnings beat going forward. And, that's really sort of the read-through from earnings to the markets is markets have been grappling with policy uncertainty and rate uncertainty. But I think especially this week, speaking of confirmations, we've had some positive confirmations in terms of companies seeing very robust earnings growth, which should bode well for this year for markets.
So you think that earnings growth for technology is going to be enough to move the needle? It's not already priced in when you take a look at its ratio?
Well, typically, it is to an extent priced in, and yet the bar typically gets reset low enough for the companies to come in and beat those expectations.
So it's priced in, but by the time we get there, it won't be made.
Well, as Matt was saying, maybe you don't guide quite as high as you think you might deliver, and so typically we see 70% of the companies beat on earnings expectations, and on average, it has been about a 4% earnings surprise. So I think we can have that sort of average quarter, but what's also important is the guidance, and we've seen it be very positive from financials. I think another point to make here is TSMC came out with their earnings results, and the long-term guidance has been really positive on AI and AI capex.
So if S&P earnings are 15% and they beat, and economic growth is 3% or more, inflation headed down to 2%, the Fed can still cut. That's awesome. But what if the Fed can't cut as much because inflation doesn't head down to 2% and we get rates back up to 5% on the 10-year or even 5.5%?
Right.
Is that a risk?
Well, that's what I call a wild card, and that's been our outlook going into this year. Is I think the U.S. economy, the earnings have very solid underpinnings, but there's a number of wild cards that have to do with tariffs and taxes and budget deficits and the rate backdrop. So to the extent that we don't get further rate cuts, I think they mitigate the upside for the S&P somewhat, but I don't think they erase it because the reason why we wouldn't get the rate cuts most likely is because growth is so strong that inflation is sticky, and in that environment, you still have that earnings growth rate offset, even if you have a higher discount rate, which is why, coming into this week, I've been thinking this is emerging to be a buying opportunity in markets because, yes, there's some negatives in terms of policy uncertainty or rate uncertainty, but the positives are the AI momentum that's carrying over from 2024 and certainly the earnings momentum that we're seeing.
And the growth momentum in the economy, as you point out, that's a different 5% 10-year than otherwise. Right. All right, Anastasia, thanks a lot. Really appreciate it. Anastasia Amoroso, Chief Investment Strategist with iCapital. We appreciate that very much. All right, coming up, incoming Trump administration tariffs and sanctions could have a massive impact for the oil sector. We're going to break that down with Ed Morse, Senior Advisor over at Hartree Partners.
Legend. Plus, it's the electric vehicles slide for Polestar with the stock down 10%, decimated. But it's not all bad news for EVs because shares of Rivian are revving higher as they get a last-minute 11th hour $6 billion loan from the Biden administration. We'll talk about that in the space.
All right, shifting gears, love the puns from cars to trucks. JB Hunt earnings are out after the bell. Shares are up over 9% in just the first 15 days of the year. We'll break the results as soon as they hit the tape. All that and more coming up. This is The Close on Bloomberg.
Pipelines in the M&A product that are the highest in 7 years. So that is really encouraging. Now, some of this will be dependent on how things roll out in the first couple months of the incoming administration and how things feel on a cross-border basis.
That was CEO of Morgan Stanley, Ted Pick, on today's earnings call, seeing that uptick in M&A pipelines. Speaking of, hours later, Bloomberg breaks the story that potentially Rio and Glencore could be teaming up for a behemoth in the commodities market.
Yeah, I mean, we're only just over 2 weeks into the year, but pretty much everyone in the world expects M&A to rocket back up to record levels as regulations fall away, antitrust concerns maybe dwindle, and this would be a massive, massive deal.
Yeah, and it's not just sort of the small companies or tack-on deals. This would be, $55 billion of Glencore and $103 billion of market value of Rio Tinto coming together. That is no joke.
Yeah, absolutely fascinating to watch. And, we'll see what happens, but it would become the second biggest miner, right, in the world? Or would it be even bigger than BHP?
It would be bigger than BHP, and it would definitely be a copper play. Ed Morse is coming up in about 15 minutes. We're going to ask him about this in just a moment. So going back to Morgan Stanley here. So shares are up almost over 3% after results showed their fourth quarter profit more than double. The numbers are just really great. Here to break it down is Chris Katowski, Managing Director and Senior Analyst at Oppenheimer & Co. I was asking Allison Williams of Bloomberg Intelligence one word to describe the banks. She said green. And they're just making money after money after money. What would be your one word?
Well, I think the thing is, the reports were all at or better than expectations. But in particular, it was driven this time by the trading desk. So trading profits for the companies that we had were up like 27%. And we were expecting 10 to 15. So that's what blew out. Now, the notable thing there is, though, those companies that had those great trading results, they had really good operating leverage because, the expenses were pretty well contained. And, the trading results, they're obviously volatile and you can't take that to the bank. But on the other hand, it kind of feels like that we're at a new, more volatile, higher level with trading. And to the point you were making just a minute ago, I do think that there is an M&A wave coming at us. If you look at 2024, in terms of M&A activity, it was the lowest year in closed dollar volume since 2014. Mm-hmm. And nominal GDP is 70% higher today than it was in 2014. So, this has the potential of being a much, much more than just incremental kind of rebound.
So what does that cycle then look like? If it's not just a rebound, but like a real shift here, what do you think that looks like?
I think there's a lot of pent-up demand. In addition to the banks, I cover a lot of the private equity asset managers. A lot of them, ever since rates have been started to rise, kind of M&A activity has been choked off. So this is going on 2-3 years now. And so a lot of them are sitting on assets that they would like to monetize, that they would like to sell. And there's plenty of dry powder out there. And you have rates, kind of peaked and have come down a little bit. So that makes cost of capital much more predictable. And then, obviously you have the regime change at the FTC, which, was incredibly restrictive previously and is probably going to have a more normal approach going forward. So between pent-up demand, rates coming down and fewer regulatory obstacles, I think you're probably, again, you're looking at something I think nobody knows how big it's going to be, but it's going to be better than incremental.
Chris, so cool that you cover these two closely related, but still, for the most part, separate universes. Blue Owl on one hand and J.P. Morgan on the other. We saw the Citi deal with Apollo. If you can't build it in-house, maybe you join them somewhere else. But how do you think these big money center banks are going to do when they're trying to get claw back some of that lending business from private credit?
I think that train has come and gone. And the banks have, ever since the great financial crisis, the banks have de-risked themselves. You go through this annual cycle. It's not just the Biden administration. We've had this annual cycle of stress tests for 15 years now. And, it changes slightly every single year. But the banks now know that if they make risky loans, that they're going to get dinged and they're not going to be able to pay their dividends and do their share buybacks. So the banks, I think, are permanently much more risk averse. And at the same time, you have created this massive infrastructure, of credit managers among what used to be historically private equity guys. They manage trillions of dollars of credit assets and increasingly pushing into investment grade. Apollo last year did an $11 billion investment grade financing for Intel. So it's not just little, leveraged buyout loans anymore. It's really major finance.
Well, and I guess private credit is kind of the sexiest story on the street. On the other end of that spectrum, you get the boring old, deposits and loan business. J.P. Morgan, as Anastasia Amoroso was just talking about, said that NII is going to be better this year than the street expected. Of course, they were lowballing at the end of last year. Mm-hmm. But what do you think about net interest income and what we're going to see in this rates environment?
Yeah, for the boring old banks, I kind of agree with that. And, what is happening in particular, you've got a tailwind coming from the securities portfolios rolling off. So, the banks have a ton of mortgage-backed securities that they put on in the late 20-teens and early 2020s that have like a 2 to 2.5% coupon. And, every month people mail in their mortgage payments and they pay down the principal a little bit. So if you look at the bank's held to maturity portfolio, it's paying down 2 to 2.5% every quarter. And those are loans that, those are securities that have a 2 to 2.5% yield. And that money is being redeployed in.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Live from Studio 2 of Bloomberg headquarters in New York, I'm Alex Steele.
And I'm Matt Miller. We're kicking you off to the closing bell here in the U.S., where we didn't see a lot of action on the index level, but a ton is going on under the hood.
Yeah, really fun stuff going on, particularly if you look at semis. So take a look at where we sit right here. The S&P is flat on the day, as Matt was saying. Not that exciting to write home about, but you are seeing the Mag 7 sell off. It's an Apple and it's a Tesla story. You're looking at the NASDAQ 100 off by 0.1%. And I wanted to put in the yield market just for fun. So you're seeing a 10-year yield down 4 basis points. Again, not a huge move after that big move we saw yesterday, but nonetheless, we're kind of reversing that risk management that higher yield bias, Matt.
Yeah, and big beats for big banks continue. 6 out of 6 of the major financials that reported over the past 2 days have beat on net interest income expectations. Morgan Stanley coming out and saying M&A pipelines are at the highest level in 7 years for that bank. It's a different story, though, in the healthcare space, with United Health reporting higher patient care costs and revenue that fell short of estimates. Many analysts say higher costs are going to be an overhang trend heading into the rest of the year. But today's retail sales data could be a good sign for earnings yet to come. The numbers showing sales broadly increased in December, indicating strong consumer demand to wrap up the holiday season. 10 of the report's 13 categories posted increases. And then, of course, tariffs. We're still talking about them. They loom large as President-elect Donald Trump is set to take office on Monday. Scott Bessent, Trump's pick for Treasury Secretary, is on Capitol Hill today for his confirmation hearing. The hedge fund manager says the administration would use tariffs to make trade more fair for Americans. And senators, of course, grilled Bessent on the debt ceiling, on health care costs, and on inflation, Alex.
Yeah, good stuff. We'll get to all of that throughout the next couple hours. Let's circle back to what Matt was talking about in terms of earnings, right? You got the big banks, you got some regionals, you have United Health. This shows the earnings scorecard pretty much every quarter going back for years. We're focused on right here, that 7.8% earnings growth for the fourth quarter of 2024. That's what we're in right now. Not a huge change from the last year when it comes to earnings, right? Not amazing like we saw back in 2021, but not negative like we saw in 2023. So the question really is going to be twofold. It's going to be what their expectation is. It's just an expectation game, right? Like we're going to underpromise and overdeliver. What does their outlook look like? And what about costs, margins, and the dollar? Those three things kind of swirling about in all the different sectors as we move forward, Matt.
All right, let's talk about this more with Anastasia Amoroso. She is Chief Investment Strategist with iCapital, and she joins us here on set. Anastasia, first of all, welcome. Thanks for joining us. In terms of these bank earnings, all big beats. Right. What do you think of them specifically? And is there any read across to the broader economy?
Absolutely. First of all, I think the way I would describe them were blockbuster earnings, Matt. And it's not just in terms of the beating on the current quarter, but really guiding and the outlook that we see for this year. And when you look, for example, the capital markets activity was very strong for this quarter. But if you look at the consensus forecasts and some of the commentary that came out around those forecasts, it's really positive. So most of the banks are expecting the capital markets activity, specifically from the advisory fees, from M&A advisory, to really tick higher. And that has a lot of read-throughs that we can talk about. The other thing that I thought was notable is that there's been some positivity around net interest income for banks. But if you look at consensus expectations, they're very subdued. And in fact, they're looking for maybe 1% NII growth in 2025. But I think that could be one of the surprise factors is if we see better loan growth from banks this year, and if we still see somewhat lower interest rates and steeper yield curves, I think that's where the banks can beat on going forward.
Well, the banks are kind of sandbagging there, right? Remember, JP Morgan a couple months ago said NII for 2025 was only going to be $84 billion. They said analysts are getting ahead of themselves. Then they said, well, okay, maybe it's going to be 90, and then now they're saying 94.
Right.
Yeah.
Of course. And they guided higher. Maybe that's the reason why some of those NII numbers are still subdued, but they get revised higher when the results come in.
Can I just ask on the loan growth? Yesterday we talked to Mike Santomassimo on this program, the CFO of Wells Fargo, and he was saying, M&A advisory fees were higher in the last quarter, right, as we start to get more positive corporate animal spirits heading into Trump. But the loan growth isn't quite there yet. Even though small business expectations are high, they haven't really acted yet. And Trump's coming to office on Monday.
No, they haven't. And part of the reason was that interest rates have been elevated for the bulk of the last 2 years. But if you look at auto loan interest rates, if you look at credit card loans, if you look at just the SOFR rate and the term SOFR, off of which a lot of those smaller business loans are priced off of, it has started to move lower. And it's essentially 100 basis points lower where it was than just 6 months ago. So I think over time that does start to feed through those animal spirits, and that does start to feed through to some of that lending growth. So if it's running at 2%, maybe we could see 3 or 4% loan growth this year. And obviously the economy has to deliver on that 2 or 3% GDP growth for that.
But Matt, to your point, I mean, you look at U.S. Bancorp and PNC today. U.S. Bancorp's worst performing stock in the S&P, and part of that is why? Because of the weaker loan demand. So Anastasia, if we broaden it out for a second when it comes to earnings, I was saying you're looking at 7.8% earnings growth. Like, where are we going to get the most bang for our buck in that earnings season?
Yeah, I mean, where you're going to get the most earnings growth is from the financial sector. And of course, financials, versus banks, there's a pretty big distinction there, benefiting from the capital markets activity. And then you have to go to the true and tried technology names and the communication services names. So that's what's really likely to deliver the greatest earnings. Now, maybe consensus estimates have been revised, or, they would not been revised down significantly, but I still think you'll get 3 or 4% earnings beat going forward. And, that's really sort of the read-through from earnings to the markets is markets have been grappling with policy uncertainty and rate uncertainty. But I think especially this week, speaking of confirmations, we've had some positive confirmations in terms of companies seeing very robust earnings growth, which should bode well for this year for markets.
So you think that earnings growth for technology is going to be enough to move the needle? It's not already priced in when you take a look at its ratio?
Well, typically, it is to an extent priced in, and yet the bar typically gets reset low enough for the companies to come in and beat those expectations.
So it's priced in, but by the time we get there, it won't be made.
Well, as Matt was saying, maybe you don't guide quite as high as you think you might deliver, and so typically we see 70% of the companies beat on earnings expectations, and on average, it's been about a 4% earnings surprise. So I think we can have that sort of average quarter, but what's also important is the guidance, and we've seen it be very positive from financials. I think another point to make here is TSMC came out with their earnings results, and the long-term guidance has been really positive on AI and AI capex.
So if S&P earnings are 15% and they beat, and economic growth is 3% or more, inflation headed down to 2%, the Fed can still cut. That's awesome. But what if the Fed can't cut as much because inflation doesn't head down to 2% and we get rates back up to 5% on the 10-year or even 5.5%?
Right.
Is that a risk?
Well, that's what I call a wild card, and that's been our outlook going into this year. Is I think the U.S. economy, the earnings have very solid underpinnings, but there's a number of wild cards that have to do with tariffs and taxes and budget deficits and the rate backdrop. So to the extent that we don't get further rate cuts, I think they mitigate the upside for the S&P somewhat, but I don't think they erase it because the reason why we wouldn't get the rate cuts most likely is because growth is so strong that inflation is sticky, and in that environment, you still have that earnings growth rate offset, even if you have a higher discount rate, which is why, coming into this week, I've been thinking this is emerging to be a buying opportunity in markets because, yes, there's some negatives in terms of policy uncertainty or rate uncertainty, but the positives are the AI momentum that's carrying over from 2024 and certainly the earnings momentum that we're seeing.
And the growth momentum in the economy, as you point out, that's a different 5% 10-year than otherwise. All right, Anastasia, thanks a lot. Really appreciate it. Anastasia Amoroso, Chief Investment Strategist with iCapital. We appreciate that very much. All right, coming up, incoming Trump administration tariffs and sanctions could have a massive impact for the oil sector. We're going to break that down with Ed Morse, Senior Advisor over at Hartree Partners.
Legend. Plus, it's the electric vehicles slide for Polestar with the stock down 10%, decimated. But it's not all bad news for EVs because shares of Rivian are revving higher as they get a last-minute 11th hour $6 billion loan from the Biden administration. We'll talk about that in the space.
All right, shifting gears, love the puns from cars to trucks. J.B. Hunt earnings are out after the bell. Shares are up over 9% in just the first 15 days of the year. We'll break the results as soon as they hit the tape. All that and more coming up. This is The Close on Bloomberg.
Forward to getting sort of more granular on, and what did he deliver on in that way?
Oh, exactly what you all have been talking about. There's been a great deal of uncertainty around tariffs policy and what the proposals might be. We still don't have hard proposals, but it's very difficult to step back, listen to Bessent go through the three criteria of why you would use tariffs in policy and conclude that they're not going to use tariffs as policy. The president-elect has spoken about raising revenues through tariffs 3 consecutive weeks now. Speaker Johnson has a budget draft that includes 10 years, nearly $3 trillion of revenue from tariffs. You ignore the assumption around the revenue, but the point that it's in a draft to raise revenue tells you that very likely to remedy unfair trade practices, to raise revenue, and to help negotiate, maybe without having to use sanctions, we should expect tariffs from the incoming administration.
And as you look ahead, Kim, do you see those tariffs being as broad, expansive, universal as Trump has sometimes suggested when he was on the campaign trail, or no? Ultimately, do you think they're going to actually be more targeted, more specific?
Josh, I would not get out over my skis or even my rollerblades on guessing what that policy is going to be. There have been a lot of proposals. Stephen Marin and Scott Bessent have written on their preferences around tariff policies. There is a school of scholarship that believes targeted temporary tariffs may come, something Senator Warner alluded to, that could be put in place and might not have much macroeconomic feedback. Across the board, 10, 20% tariffs. It's very difficult to find many people who believe that that won't have some adverse macroeconomic impact. It depends on what they propose. My guess is we'll hear a little bit about it in the inaugural speech and probably week one of President Trump's second term.
And when it comes to Scott Bessent's responsibilities, what do you think is going to be the biggest priority and challenge, perhaps, presuming he does get confirmed?
Julie, there was a lot of discussion, bipartisan discussion, about pro-growth fiscal policy. It's an easy phrase to use. It's really difficult to pin down definitionally, and it's much more difficult to pass as policy. My sense is that Scott Bessent's going to spend a lot of time managing fiscal policy and the communication of motivations and hope-for outcomes. There's a wide gap between members on Capitol Hill as to what pro-growth might mean. There is some notion that spending cuts can get you there. I don't think the data supports that position. We don't have a spending problem that's not caused by automatic spending. That is, the growth in spending in the U.S. comes from mandatory spending, both entitlements, mainly Medicare and Medicaid, but also net interest payments. The Treasury Secretary designate said that Social Security and Medicare would be out of bounds for cuts. You're going to have a hard time reducing the deficit significantly, much less to 3%, if you are going to exempt entitlements from that calculation.
Bank of America and Morgan Stanley, the latest of the major U.S. banks to report quarterly results, posting fourth quarter profits that more than doubled. While the collective full year net income of the six major banks saw a 19% rise in 2024. Here with more, Ken Leon, CFRA Director of Global Fundamental Research. Ken, when you look at the banks here, is this as good as it gets, or are we looking at an outlook, particularly a regulatory environment, that could propel them even further?
Yeah, so this is just the beginning. You know, our view, really, even going back to November, is stay the course. What we're going to see this year is an opening up of markets. We're going to see the consensus revise their earnings upward, not once, but several times, mostly because of the increased volume across multiple businesses. Very positive for the capital markets after the six global U.S. banks reported. We also saw very good activity with elevated equity market. Client balances and fees off of that were also very high, as noted from Morgan Stanley and Bank of America.
Ken, net interest income, generally speaking, Ken, what are you seeing now and ahead?
Net interest income, it was very bearish from the street back in September, October, but with the U.S. economy growing 2.5%, there's two sides of what gets you to net interest income. One is rates, which maybe we'll say stays or goes one cut, but the volumes off of a U.S. economy growing 2.5% is very positive. So I think net interest income, more of a factor for the traditional banks. You know, it's about 55-60% of total revenue, but for Morgan Stanley or Goldman Sachs, 15% of total revenue. Really not a factor.
So let's talk about the more traditional banks and that side of the ledger there, because if, as you say, the economy is expanding, if their margins are getting crimped at all because of the net interest margin, would they need then to see a pickup in loan demand? I know, for example, Jamie Dimon was talking about that there had been sort of a lack of loan demand. Do you expect the pickup to come?
Yeah, so my point again was volumes is driven by the U.S. economy, loan volume, other transaction, Treasury service volumes. Rates, if you get to the bowels of NII, net interest spreads, and even year over year, it's been really not that much in terms of rates coming down. I'm not too worried really about net interest income, but if you're looking at, I don't cover traditional banks. I cover the six greatest U.S. global banks. They're diversified, and they represent a significant part of the top 10 constituents of being overweighted in the financial sector, which is where CFRA is. You want to go downstreams to smaller regional banks, could be a bigger issue if you only have 1% growth on commercial or consumer loan growth.
Ken, Trump is back. What does that mean for your coverage universe? What does that mean for the banks you cover in terms of regulatory backdrop, capital requirements?
Well, we have new actors in important roles, not only at the Fed, but across all of the organizations, whether it's the FDIC, the Department of Justice, the FTC. This will open up markets, particularly for financial sponsors, private equity, which has $1 trillion they have to monetize, possibly IPO or M&A. Additionally, what we're going to see is more of a pro-business, pro-economy environment. We haven't had that for 4 years.
And, you know, I guess sort of the Basel endgame and the Basel requirements are sort of a dead. It seems like the banks won that argument, maybe even before Trump came into office.
Yeah, so there's the annual capital stress tests. We also have the Basel III endgame, where the hysteria of 18 months ago was a capital build, increasing your capital for overcapitalized banks that I cover by 20%. Maybe it's 5 to 7%. You know, it's kind of murky, but I think that's really something in the rear mirror, not a risk for investors.
Ken, good to see you. Thank you so much.
Thank you.
Well, new home builder confidence data for January rising to 47, higher than December's mark, but mortgage rates also rising again for the fifth straight week. The 30-year eclipsing 7% for the first time since May. For more, we're going to bring in Jim Tobin, CEO for the National Association of Home Builders. Jim, let's start with that 30-year fix. Mortgage News Daily here telling me we're sitting at 707, Jim. That just sounds suffocating for the American housing market. Walk me through it, Jim. What are you seeing and hearing on the ground?
Yeah, that's been our worst fear, is that mortgage rates go up rather than down. As you said, since the summer, this is the first time we've hit that 7 handle. It's gonna keep the market cool. It's certainly gonna keep that existing housing market bottled up, and it's gonna keep buyers that were looking forward to the spring housing season on the sideline a little bit longer until we get a little bit more certainty with the incoming Trump administration.
You have economists there in house, Jim. When they try to figure out, estimate, model where the 30-year fix goes from here, what are they saying?
It's going to be bumpy. And we had really hoped by the time we had finished 2025 that we were down in the really close to that 6. Starting to think about the high 5s. We pushed that forecast off into 2026 now. So we've had to revise our forecast and again we're going to see higher rates for longer, given the current environment. But we think again they will trend down through the course of this year, just not as fast and as far as we thought.
So that's the affordability side of the equation, Jim. What about inventory? Talk to me about the trends you're seeing.
Well, we are seeing new housing inventory is up again. The mortgage rates are keeping people from moving in, but we're still seeing very low inventory rates in the existing market, which when you couple those together, we still have a very tight housing market out there where the supply, the monthly supply is still in that 5 to 5.5 month supply. So again, still a tight market by all accounts. Again, and rates are suppressing demand.
Jim, we talked about this when Trump was on the campaign trail. Listen, housing was an issue, and the Trump team talked about it. Are there levers he can be pulling here to increase supply?
Sure. I think first and foremost, the regulatory environment, we really anticipate over the next 4 years that we're going to see a relaxation in some of the more burdensome federal regulatory environments that really drive up the cost of housing. I think the other piece we're going to see about financing, right?
इस क्रूड ऑयल में अपना हाफ प्रॉफिट एटलीस्ट बुक करके चलना, ये रुक रहा है बार बार। यहाँ पर एक एफईजी है, उसी पर रुक रहा है बार बार। जब तक ये एफईजी ब्रेक नहीं होगा, लगता नहीं है नीचे जाएगा। एक और कंटिन्यूसली 2 एफईजी एक साथ बन गए। यहाँ पर भी एक एफईजी है। Completely range bound on this range. सपोर्ट के आसपास आ रहा है, सपोर्ट बड़ा है, थोड़ा सा लोअर एंड से ही बाई करना। हायर एंड से एसएल बहुत बड़ा बन जाएगा नहीं था। थोड़ा से क्वांटिटी कम रख के ट्रेड करना। आज 17th है, लास्ट ट्रेडिंग सेशन। 18, 19th सैटरडे संडे मार्केट वैसे ही क्लोज है। 20 को फिर यूएस में यूएस के प्रेसिडेंट बन जाएंगे। उस दिन इनॉग्रेशन है शायद, आई थिंक डोनाल्ड ट्रम्प की। तो मंडे को भी शायद मुझे लगता है थोड़ा साइडवेज जाए मार्केट। इवनिंग पे शायद फिर इंडियन टाइम के अकॉर्डिंग इनॉग्रेशन होगी। ट्यूसडे को मार्केट उस पर रिएक्शन दे सकता है। तो उससे पहले हो सकता है ट्रेडर्स थोड़ा सा अपनी प्रॉफिट बुकिंग करें या फिर नई पोजीशन ना बनाएं। स्पेशली क्रूड की बात कर रहा हूँ, क्रूड में। ओके 6:30 न्यूयॉर्क सेशन की ओपनिंग है एंड देन 8 PM यूएस मार्केट ओपन और 7 PM पे बिल्डिंग परमिट का डेटा है, गोल्ड और सिल्वर को इम्पैक्ट करेगा। बाकी नेचुरल गैस ऊपर जाता है तो फिर ये हमारे पास कहीं रेजिस्टेंस जोन रहेगा 363 के अराउंड। तीन काफी है। इसलिए थोड़ा सा हाफ प्रॉफिट एटलीस्ट बुक करके चलना। फाइनल टारगेट नीचे वाला एफईजी थोड़ा बड़ा टारगेट है, ये 100 पॉइंट हो जाएंगे अप्रॉक्सीमेटली। 50 पॉइंट तो मिल चुके हैं ऑलरेडी, पूरा आ गया तो 100 पॉइंट। कल जो लास्ट कैंडल क्लोज हुई थी उसमें ऐसा लग रहा था कि ब्रेक हो गया है, कैंडल देखोगे तो नीचे क्लोज हुई है, बट आज वो गैप अप ओपन हुआ, उस वजह से ओवरनाइट पता नहीं एफईजी पे क्या सिचुएशन बनी है। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल। लाइक्स हो चुके हैं, 100 लाइक्स का टारगेट।
doesn't matter.
What is the likelihood that we could see a new competitor finally emerge and be able to not just break ground as we've seen in some instances, but then get into full factory operation to the point where there is a dent in Taiwan Semi, and then there's perhaps a little bit more of the spreading of the chip production and the wafer fabrication elsewhere?
Yeah, over time, it's definitely a reality. Look, we've seen Intel. They were a near monopoly for 2 decades. You can look at Samsung on the memory side. They were the leader for 2 decades. Those are companies that are now struggling. There's always going to be innovation. At some point, your execution always slips. And so, yes, at some point, I fully expect that there will be someone competing with Taiwan Semi. At the same time, if I'm a customer looking at choosing Taiwan Semi, Samsung, the new company out of Japan, Rapidus, I want to see them execute on a process before I shift to them, right? Otherwise, there's a ton of risk because you don't know if they're going to get that process right. And so, at this point, Taiwan Semi is talking about 2 nanometer. They are going to control that node. And so you're talking 3-4 years out where someone has to prove that they can do it at 2 nanometer. So when you get beyond 2 nanometer, then whether it's a Broadcom, whether it's NVIDIA, whether it's Qualcomm, they'll be confident in switching to that other alternative because that company's done it before.
We're talking Duolingo. That company says that it is seeing 216% growth in U.S. users learning Chinese compared to this time last year. They said this in a tweet. They said Mandarin learners in particular, and they said in the tweet, learning Mandarin out of spite. You're not alone. They say this, it's the implication that this has to do with what's going on with TikTok and a number of users that are migrating to what some are calling Red Note in English or Little Red Book. I've seen it translated as well, that they want to connect with other Chinese users on that, Chinese-speaking users on that.
Yeah, Little Red Book, referring, by the way, of course, to the communist dictator Mao Zedong's manifesto, just food for thought there as you move to that app.
Yeah.
But this is, of course, as you point out, ahead of the TikTok ban. Apparently, millions now of TikTok users have made that move, and the default language there, of course, is Mandarin Chinese, hence...
Right. Well, not even the default language apparently for the Chinese people on the platform, but like the directions, the settings, etc., the notifications. Are in Mandarin. So if you're an American user who doesn't speak Mandarin, it's a little bit tricky. But to the point I was making earlier, Duolingo had its IPO. It was not a SPAC. It had an IPO back in July of 2021 at $102. The stock's up 65% over this past year.
Wow.
So, and it's about tripled from that $102.
Nice move.
Yeah. On Monday, Elon Musk, along with several other big tech executives, will attend the inauguration of Donald Trump. While Musk has become something of a right-hand man, a first buddy, as he's called himself for the president-elect, the others will be attempting to curry favor with the soon-to-be 47th president of the United States. Joining us now, Mark Penn, Stagwell CEO. And Mark, thank you for joining us. I know you recently had the opportunity to talk to Elon Musk, but I'm curious first to look ahead to Monday and sort of how you would characterize this inauguration, especially with that corporate presence versus what we have seen in the past.
Inaugurations have always had, this kind of presence. So have conventions. Look, I think it's super interesting that Elon Musk has really, agreed to participate in a serious way in the administration, and that the other kind of major tech executives are coming out. I mean, look, the financial innovation of the country is driven in large part by these companies and these incredible executives of these companies. So it is a good sign, I think, that they're coming out for this inauguration.
How do you see the relationship sort of between Trump and big tech kind of evolving, Mark? Because it's interesting. Sometimes, Trump talks about, big American tech companies. He sounds like a potential ally. Other times, not so much, Mark. I'm just curious, how do you see it evolving over the next few years? Do you think these American tech CEOs, whether it's Zuckerberg, Bezos, Musk, can they have an impact there in terms of the relationship, in terms of how he sees these multinationals?
Well, I worked with over the years and advised a lot of the tech companies. And the more they stuck to their business, the more politics stayed away from them. And the more that they got involved with politics, the more it became rather phony. So I think we've gone through a period here where a lot of the social media companies, and I think Elon Musk stood up and blew the whistle. And you've seen now Zuckerberg say, you know what, you're right. We've seen a period here where there was an intersection between speech, politics, and the tech companies. And I think to the extent that the tech companies dissemble that connection, get back.
News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with the latest developments in the Middle East. Israeli Prime Minister Benjamin Netanyahu says an agreement to pause the war in Gaza with Hamas has been finalized, and that suggests the truce will begin on Sunday. We get the latest from Bloomberg's Oliver Crook in Tel Aviv.
On Sunday, you will begin the ceasefire. That means that all the sort of fighting will be paused in Gaza for 6 weeks. We understand that will also mean the release of 3 female hostages to begin on Sunday. There's a total of 33 that would be released over this sort of 6-week phase. Then you get 3 or 4 hostages every sort of 4 or 5 days over the next few weeks. As that happens, prisoners will be returned from the Israeli side to the Palestinian side. We understand those will be by the hundreds, certainly over 1,000. And critically, the troops will be progressively pulled out of the populated areas of Gaza and basically will be evacuated to the eastern flank of the Strip. And it will also allow for humanitarian aid to sort of come in at a much larger pace than it has.
Bloomberg's Oliver Crook in Tel Aviv reports Netanyahu's ordered his security cabinet to meet to approve the truce, and that meeting is now underway.
Well, Nathan, the Supreme Court has signaled it's ready to rule as soon as today on the law that would ban TikTok in the U.S. unless it finds a new owner. But even if the High Court upholds the ban, TikTok could win a reprieve. We get more on this with Bloomberg's Gina Cervetti.
The law calls for TikTok to shut down this Sunday unless its Chinese owner ByteDance lines up a buyer for its U.S. operations. But this Sunday falls before a federal holiday and President-elect Trump's inauguration. So Biden administration officials say that essentially punts the issue to the next administration. The law also allows for a 90-day extension if a serious purchase negotiation is underway. Trump's incoming national security advisor says they'll find a way to keep the deadline going. Democrats in the Senate have also introduced a bill that would give TikTok another 270 days to reach a deal. Gina Cervetti, Bloomberg Radio.
All right, Gina, thank you. Now, we are just 3 days away from Donald Trump's inauguration, and Chinese President Xi Jinping is not attending. He will instead send his vice president, Han Zheng, to appear at the ceremony on Monday. NVIDIA CEO Jensen Huang is also expected to miss the event. Sources say he's visiting East Asia this week, but there will be plenty of high-profile U.S. technology leaders there. They include Apple CEO Tim Cook, Amazon co-founder Jeff Bezos, and Elon Musk.
Well, Nathan, one of Trump's key cabinet picks is on track to be confirmed after a confirmation hearing that lasted for hours. Treasury Secretary nominee Scott Bessent warned lawmakers that they must extend the 2017 tax cuts or risk an economic crisis. And Bloomberg's Amy Morris has more from Washington.
Bessent called extending the 2017 tax cuts the single most important economic issue of the day.
If we do not renew and extend, we will be facing an economic calamity that falls on the middle and working class people.
Bessent told lawmakers that if Donald Trump wanted to get rid of the debt limit, he would, quote, work with him and you on that.
The United States is not going to default on its debt if I'm confirmed.
And Bessent told lawmakers he would support Russian oil sanctions.
I will be 100% on board for taking sanctions up, especially on the Russian oil majors, to levels that would bring the Russian Federation to the table.
And he said he respected the Federal Reserve's independence over monetary policy. In Washington, Amy Morris, Bloomberg Radio.
Thanks, Amy. Donald Trump may also be close to picking a new head of the Secret Service. CNN is reporting the president-elect is expected to pick his current Secret Service detail leader, Sean Curran. to be the new director.
And Nathan, we're learning more about the government's cyber attack that the Treasury Department has blamed on Chinese state-sponsored hackers. Sources tell Bloomberg the breach went as high within the agency as it could get. Treasury Secretary Janet Yellen's computer was said to be breached along with those of her two top lieutenants, Deputy Secretary Wally Adeyemo and Acting Undersecretary Brad Smith. Our sources say fewer than 50 of Yellen's files were accessed and nothing classified was taken. But the hackers appeared to focus on Treasury's role in sanctions, intelligence, and international affairs.
Let's turn to now, Karen, to the latest on the wildfires in Los Angeles. This morning, it appears firefighters are making progress. Let's get the update now from Bloomberg's John Tucker. John.
And Nate, the gusting winds that have rattled that region for more than a week, they have finally subsided, giving firefighters a much-needed boost as they mop up hotspots. 40,000 acres have burned in two ferocious fires. Electricity, gas, and sewage lines are wrecked. There is toxic waste just about everywhere, and there's a growing threat of hazardous mudslides. And if that's not enough, California's Attorney General Rob Bonta tells residents, beware of scammers.
Folks across the region are being preyed upon by greedy businesses and landlords, scam artists, and predatory buyers looking to make a quick buck off their pain. They are seeking to re-victimize the victims of the fires.
The two largest fires, the Palisades and Eaton fires, continue to burn, but the fire crews, again, they're making progress. The death toll has risen to 27, and the search for the missing continues. I'm John Tucker, Bloomberg Radio.
All right, John, thanks. Well, a concert to raise money for the Los Angeles wildfire victims will be held on January 30th. It'll be broadcast on multiple streaming services, including Netflix, Amazon, and Apple, as well as in select AMC theaters and on radio and music streaming sites. Billie Eilish, Lady Gaga, and the Red Hot Chili Peppers are among those expected to perform.
Karen, let's turn now to space. It was liftoff for SpaceX. Its seventh test flight for the Starship rocket, but the spacecraft was destroyed following a thrilling booster catch back at the pad. Elon Musk's company says Starship broke apart in what it's called a rapid unscheduled disassembly. Spacecraft's 6 engines appeared to shut down one by one during ascent. Contact was lost just 8.5 minutes in. The spacecraft was a new and upgraded model making its debut, packed with 10 dummy satellites for practice at releasing them. A minute before the loss, though, SpaceX did use its launch tower's giant mechanical arms to catch the returning booster. That was a feat achieved only once before.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. Big NBA game in Oklahoma City. The Cleveland Cavaliers lead the East. The Thunder lead the West. They met last week in Cleveland, and the Cavs won, but this was all OKC. Up by 38 through three quarters. They won 134-114, 40 points for Shai Gilgeous-Alexander. Kellen Moore is the Eagles' offensive coordinator getting ready for this weekend's playoffs, but he did a Zoom interview yesterday with the Dallas Cowboys. He played for the Cowboys, was an assistant for 4 years. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg
Bank of America
News
and Morgan
Now.
Stanley, the latest of the major U.S. banks to report quarterly results, posting fourth quarter profits that more than doubled. While the collective full-year net income of the 6 major banks saw a 19% rise in 2024. Here with more, Ken Leon, CFRA Director of Global Fundamental Research. Ken, when you look at the banks here, is this as good as it gets, or are we looking at an outlook, particularly a regulatory environment, that could propel them even further?
Yeah, so this is just the beginning. You know, our view, really even going back to November, is stay the course. What we're going to see this year is an opening up of markets. We're going to see the consensus revise their earnings upward, not once, but several times, mostly because of the increased volume across multiple businesses. Very positive for the capital markets after the 6 global U.S. banks reported. We also saw very good activity with elevated equity market. Client balances and fees off of that were also very high, as noted from Morgan Stanley and Bank of America.
Ken, net interest income, generally speaking, Ken, what are you seeing now and ahead?
Net interest income, it was very bearish from the street back in September, October, but with a U.S. economy growing 2.5%, there's two sides of what gets you to net interest income. One is rates, which maybe we'll say stays or goes one cut, but the volumes off of a U.S. economy growing 2.5% is very positive. So I think net interest income, more of a factor for the traditional banks. It's about 55, 60% of total revenue. But for Morgan Stanley or Goldman Sachs, 15% of total revenue, really not a factor.
So let's talk about the more traditional banks and that side of the ledger there, because if, as you say, the economy is expanding, if their margins are getting crimped at all because of the net interest margin, would they need then to see a pickup in loan demand? I know, for example, Jamie Dimon was talking about that there had been sort of a lack of loan demand. Do you expect the pickup to come?
Yeah, so my point, again, was volumes is driven by the U.S. economy, loan volume, other transaction, Treasury service volumes. Rates, if you get to the bowels of NII, net interest spreads, and even year over year, it's been really not that much in terms of rates coming down. I'm not too worried really about net interest income. But if you're looking at, I don't cover traditional banks. I cover the 6 greatest U.S. global banks. They're diversified, and they represent a significant part of the top 10 constituents of being overweighted in the financial sector, which is where CFRA is. You want to go downstreams to smaller regional banks, could be a bigger issue if you only have 1% growth on commercial or consumer loan growth.
Ken, Trump is back. What does that mean for your coverage universe? What does that mean for the banks you cover in terms of regulatory backdrop, capital requirements?
Well, we have new actors in important roles, not only at the Fed, but across all of the organizations, whether it's the FDIC, the Department of Justice, the FTC. This will open up markets, particularly for financial sponsors, private equity, which has $1 trillion they have to monetize, possibly IPO or M&A. Additionally, what we're going to see is more of a pro-business, pro-economy environment. We haven't had that for 4 years.
And, I guess sort of the Basel endgame and the Basel requirements are sort of a dead. It seems like the banks won that argument, maybe even before Trump came into office.
Yeah, so there's the annual capital stress tests. We also have the Basel III endgame, where the hysteria of 18 months ago was a capital build, increasing your capital for overcapitalized banks that I cover by 20%. Maybe it's 5 to 7%. It's kind of murky, but I think that's really something in the rear mirror, not a risk for investors.
Ken, good to see you. Thank you so much.
Thank you.
Well, new home builder confidence data for January rising to 47, higher than December's mark, but mortgage rates also rising again for the 5th straight week. The 30-year eclipsing 7% for the first time since May. For more, we're going to bring in Jim Tobin, CEO for the National Association of Home Builders. Jim, let's start with that 30-year fix. Mortgage News Daily here telling me we're sitting at 707, Jim. That just sounds suffocating for the American housing market. Walk me through it, Jim. What are you seeing and hearing on the ground?
Yeah, that's been our worst fear, is that mortgage rates go up rather than down. As you said, since the summer, this is the first time we've hit that 7 handle. It's gonna keep the market cool. It's certainly going to keep that existing housing market bottled up, and it's going to keep buyers that were looking forward to the spring housing season on the sideline a little bit longer until we get a little bit more certainty with the incoming Trump administration.
You have economists there in-house, Jim. When they try to figure out, estimate, model where the 30-year fix goes from here, what are they saying?
It's going to be bumpy. We had really hoped by the time we finished 2025 that we were down in the really close to that 6, starting to think about the high 5s.
Natural gas support पे आ गया है. Gas on their support. दो टारगेट में इसको डिवाइड करेंगे. 10 पॉइंट का टारगेट है टोटल. 5 पॉइंट के टारगेट में. ठीक है, टोटल 10 पॉइंट का टारगेट है. तो डायरेक्टली तो नहीं जाएगा ऑब्वियसली है, तो हाफ हाफ टारगेट रखना है, 5 पॉइंट का पहला और 5 पॉइंट का फिर दूसरा। यहाँ पर लिक्विडिटी है थोड़ी बहुत। या क्रूड भी रुक रहा है एफईजी पर ही बार बार। अब या तो ये नीचे ही आ जाए या फिर ऊपर ही चला जाए इस लेवल पे। लिंक में हाफ प्रॉफिट बुक करके चलना क्रूड में, कंटिन्यूसली होल्डिंग दिस एफईजी पर। होने वाला है, थोड़ा एक्सपेक्ट करेंगे वॉल्यूम आ जाए 6:30 के बाद प्रॉपर। 7 PM पे डेटा है बिल्डिंग परमिट का, गोल्ड और सिल्वर को इम्पैक्ट करेगा। गोल्ड ने अभी लेवल बनाया था रेजिस्टेंस का, वहाँ से थोड़ा बहुत रेजिस्टेंस लिया है, रेंज बना दिया ऊपर 2710 से लेकर 2705 के बीच में फॉरेक्स में। एक्चुअल केस देखो, एक एक ट्राई ये भी कर सकता है, इवन दो सपोर्ट रेंज पे है, बट एक बार ये भी ट्राई कर सकता है कि नीचे जो एसएल पड़े होंगे बायर्स के, अब उनको हिट करके भी ऊपर जाए। तो थोड़ा इस लेवल पे क्वांटिटी कम रखना, टारगेट बहुत बड़ा है तो कोई प्रॉब्लम नहीं है, थोड़ा और नीचे आए, एसएल भी हिट करे एक बार और फिर जाए 350 से तो और बढ़िया रहेगा, क्योंकि एसएल वहीं रखे होंगे मोस्ट प्रोबेबली उसके नीचे। तो ये सपोर्ट रेंज स्टार्ट हो चुकी है यहाँ से। तो एक बार कोशिश कर सकता है 350 को टच करने का। तो 350 टू 350, 350 टू 352.5 ये सपोर्ट रेंज है पूरी, यहाँ से लेकर यहाँ तक। तो एक बार ये 350 के लेवल को भी टच कर सकता है, यहीं से चला जाए तो बेटर रहेगा मेरे अकॉर्डिंग, बट नीचे भी आ सकता है, ट्राई करने एक बार। इसको भी मार्क कर लेते हैं। टारगेट ऊपर ही है 357 and then 363. क्वांटिटी फिर ऊपर कम रख लो.
In terms of year over year versus sequential, there's always room for some lumpiness. So I'd be less focused on, say, Q1 or Q2 and more focused on their outlook for the year. Having said that, when they give you Q1 guidance, they pretty much know exactly what their number is going to be, because wafers take 3 months to come out of the fab, and so they have their orders in hand, and so it's a pretty good indicator for where advanced semis are for this quarter.
Matt, does this tell you that maybe these U.S. chip curbs aren't that big of a deal for TSMC, just given the guidance, given the robustness that they are expected to see, and given what you just said, the transparency, and maybe how confident they likely are in 2025, given the numbers we got out this morning?
Yeah, from on the U.S. chip curb side, like if you're talking about shipments to China being curtailed a bit, it sounds like between them getting licenses to supply to companies that aren't viewed as a threat by the U.S., and then other companies within China being a relatively small portion of their revenue, right? There's no Apple or NVIDIA who are 10% customers coming out of China. I think that it's just not that much of an impact. If you're thinking about, say, potential U.S. tariffs, there's no other choice. So if there's a tariff or some sort of legislation that or regulation that favors U.S. chip makers, again, no one is competing with TSM at these advanced nodes. So whether you have to pay more doesn't matter.
What is the likelihood that we could see a new competitor finally emerge and be able to not just break ground, as we've seen in some instances, but then get into full factory operation to the point where there is a dent in Taiwan Semi, and then there's perhaps a little bit more of the spreading of the chip production and the wafer fabrication elsewhere?
Yeah, over time, it's definitely a reality. Look, we've seen Intel. They were a near monopoly for 2 decades. You can look at Samsung on the memory side. They were the leader for 2 decades. Those are companies that are now struggling. There's always going to be innovation. At some point, your execution always slips. And so, yes, at some point, I fully expect that there will be someone competing with Taiwan Semi. At the same time, if I'm a customer looking at choosing Taiwan Semi, Samsung, the new company out of Japan, Rapidus, I want to see them execute on a process before I shift to them, right? Otherwise, there's a ton of risk because you don't know if they're going to get that process right. And so, at this point, Taiwan Semi is talking about 2 nanometer. They are going to control that node. And so you're talking 3-4 years out where someone has to prove that they can do it at 2 nanometer. So when you get beyond 2 nanometer, then whether it's a Broadcom, whether it's NVIDIA, whether it's Qualcomm, they'll be confident in switching to that other alternative because that company's done it before.
We're talking Duolingo. That company says that it is seeing 216% growth in U.S.
When you take a look at earnings season so far, we've only heard from just over a handful of companies here. But what we're hearing from big banks, there's high expectations going into these prints just in terms of the earnings growth that we're expected to see, almost 12%. If we don't achieve that, how big of a risk do you see that posing to the market?
I'm not so sure the end result for the fourth quarter matters as much as the outlook for calendar year 2025, because you do have about a 14% consensus expectation for calendar year 25. And of course, those would be the numbers embedded in forward PE ratio, which is obviously fairly lofty. But that 14% earnings growth is actually predicated on a similar rate for profit margins. That would be a record profit margin rate. Maybe a stretch, we don't know. So I think metrics like the beat rate, percent by which companies beat, ultimately what the growth rate is for Q4, it doesn't not matter. But I think it's the forward-looking outlooks in this period of uncertainty that matters a bit more than what we get for the fourth quarter.
And you mentioned that a growth trio that you've talked about previously, comms services, consumer discretionary, and tech, is adding a fourth, which comes from financials. We continue to see those beats and those earnings as they are coming in here. Help me understand allocation in this environment. You've got 4 growth areas on your screen right now, and then you've also got the 10-year heading towards 5%. How should investors be thinking about allocation amid all of those growthy areas of the market?
So from a sector perspective, we do have what we call sector views. So we do put ratings on all 11 sectors. They're either outperform, underperform, or market perform, which is neutral. Right now, the only 2 sectors we have outperform ratings are financials and communication services. However, and this is an important however, we continue to think that factor-based investing is maybe more important than sector-based investing. Sector-based investing is somewhat monolithic. You're just, if you're overweighting or underweighting, it's the entire sector, where factor-based analysis, which is really just screening for investing based on characteristics. So we've had a quality factor bias, so looking for companies with strong earnings momentum, with healthy balance sheets, ample interest coverage, strong free cash flow. And we think that will continue to be where performance is more consistent, is at the factor level than at the sector level. So be really careful about the monolithic kind of investment themes, some of which include sector-based investing.
Taiwan Semiconductor climbing after topping fourth quarter estimates, profit rising 57% from a year earlier on strong demand for AI chips. Joining us now, we've got Matt Bryson, who's the Wedbush Securities Managing Director of Equity Research for Hardware. Great to have you here with us, Matt. Let's break this down a little bit more. The Taiwanese chip maker issued an upbeat outlook for 2025. Do you see the momentum continuing even as we focus in on some of the year-over-year, and how much of the emphasis should we start to be placing on the sequential?
Yeah, so I think that Taiwan Semi's in a good place, not just for 2025, but 2026, 2027, and beyond. A lot of that has to do with them being the only supplier of these advanced semiconductors, right? They went from being competitive with Samsung or Intel to effectively being in a monopolistic position. In terms of year over year versus sequential, there's always room for some lumpiness. So I'd be less focused on, say,
moving money isn't just transactional, it's personal. With 8.5 billion endpoints across more than 190 markets, Visa Direct helps to make all of it possible.
Where is the line between tax cuts that help address affordability by putting more pockets into Americans, or putting more into Americans' wallets, rather, versus giving them more money to spend and then fueling inflation, potentially making affordability issues worse?
Yeah, as lawmakers think about what types of tax cuts to prioritize, it'll be really important that they look at tax cuts that really boost important economic incentives, like incentives to invest, to save, and to work. And it'll also be important to balance that with structurally sound policies. So we don't really want a tax reform that just cuts taxes for the sake of taxes and perhaps makes the tax code more complicated and less neutral in the process. Unfortunately, several of those ideas that Trump proposed on the campaign trail, like no tax on tips, no tax on overtime, creating this new deduction for auto loan interest, those would muck with the structure of the tax code, and they wouldn't really create powerful economic incentives to grow the economy.
So when you talk to Scott Bessent, and we've had the opportunity before he was tapped for Treasury Secretary to ask him about the potential inflationary and even deficit driving impact of extending the tax cuts and pairing them with tariffs, he makes the point that you can't take each of these in a vacuum, that they become a mosaic of economic policy that will have an impact that many economists don't understand. Most economists tell us that this is likely not to work. And we've seen the reaction, of course, in the bond market when it comes to interest rates. Did he create the mosaic that convinced you that these will work in union with each other?
So I think when we talk about what happens to inflation, ultimately that depends how the Federal Reserve reacts to fiscal policy. You could see an instance where really large tariffs create a shock to labor markets that requires the Fed to accommodate, where then we would see the price level rise. But I think that really obscures the point of what happens in the long run. What is the real economic change that's created by the combination of tax and tariff policies that Trump pursues? Whether the short-term reaction to that involves inflation or not, we need to make sure that the policies that are being crafted actually improve economic incentives in the long run. So we've modeled the effects of, the combination of tariffs and tax cuts at Tax Foundation, and we've found that for about the bottom half of the income distribution, they would be worse off under the combination of policies that Trump campaigned on, and a lot of the long-run economic benefit of better tax policy would also be offset by higher tariffs that invite foreign retaliation. So while these short-term transition questions, the reaction of the Federal Reserve, for instance, to higher tariffs, to larger deficits are important, it's also important to think about that longer-term impact and what are we doing to incentives that businesses and individuals face.
Well, and when we talk about the distribution here, lower income versus higher income, when you consider something like the SALT cap, Erica, which by and large does have greater appeal to higher income households, what economic incentives would lifting that really create?
So it does have changes in marginal tax rates. When you uncap SALT, you reduce marginal tax rates. You can also see an impact in housing investment. But when you think about it as a whole, broadening the income tax base by eliminating or even capping itemized deductions is a really good way to offset the revenue cost of lowering those marginal tax rates. And that's what the first iteration of the Tax Cuts and Jobs Act did. It followed that idea of broaden the base, lower the rate, so you get a simpler, more neutral structure of the tax system, and you get lower tax rates. Doing a higher SALT cap, getting rid of the cap altogether, would really be a worsening of the structure of the tax code. And it would be an unfortunate development because it would mean in the reconciliation process, we're using more revenue to uncap SALT, which means we have less revenue to use for these really powerful pro-growth tax policies.
Just have about a minute left. Erica, when you consider the debate that's about to begin here, we're talking about SALT. You can add so many of the other promises that came on the campaign trail, from no taxes on tips to overtime, and we could sit here listing them for a while. When you consider the politics at play here, how much of this beyond the 2017 tax package do you think will realistically be part of this reconciliation bill?
Not too much, because if you just look at the cost of extending the TCJA alone, that's going to run $4 to $5 trillion over the budget window. That's a tough pill to swallow when deficits are already running at $22 trillion over the budget window. Yeah. So the budget math just gets really difficult when you try to add some of these big ticket items like no tax on overtime. You could probably see something like no tax on tips get added that has a smaller price tag associated with it. But anything major is going to be tough just given the deficit pressures.
6:15 हो चुका है. 6:15 मिनट इज लेफ्ट. 15 मिनट और बचे हुए हैं. न्यूयॉर्क सेशन ओपनिंग पे बड़ी कैंडल बन सकती है, ध्यान रखना 6:30 पे अगेन. बाकी देखो नीचे वाले एफईजी पे ना प्राइस थोड़ा रुक सकता है. तो अगर यहाँ पर एक बाइंग का प्लान देखेंगे करते हैं तो ऊपर वाले एफईजी के नीचे कैंडल क्लोज करती है तो इसको रिमूव कर देंगे. दिस एफईजी इज देन क्रूशियल. बिफोर 6:30 अपना एसएल ट्रेल कर लेना. नेचुरल गैस में, क्रूड में तो हो गया टारगेट ऑलमोस्ट. नेचुरल गैस में एसएल ट्रेल कर लेना. 6:30 की कैंडल के बाद देखते हैं. डेटा बाकी मैंने दिखा दिया आप लोगों को. अभी बिल्डिंग परमिट का डेटा है, इम्पॉर्टेंट डेटा है, तो रिमेंबर दिस. ओके, श्योर. सेवन PM पे इम्पैक्ट करेगा गोल्ड और सिल्वर के प्राइस को. ट्रेल कर लो अपना एसएल नेचुरल गैस में. ट्रेल द एसएल इन नेचुरल गैस. 6:30 पे देखते हैं क्या मूव आता है. टारगेट थोड़ा बड़ा है, ऊपर तक यहाँ तक रखा हुआ है 363. ठीक है, इस एफईजी को रिमूव कर दो, जरूरत नहीं है. कैंडल क्लोज्ड. ठीक है, इस ये नीचे वाले एफईजी पे थोड़ा प्राइस रुकना चाहिए मेरे अकॉर्डिंग. यहाँ से एक पुल बैक का प्लान रखेंगे, थोड़ा क्वांटिटी कम रख के. सपोर्ट नहीं है, एफईजी है, बट ठीक है, होल्ड हो सकता है इस लेवल पे प्राइस. बाकी सेलर्स निकलना चाहो निकल जाओ, लगभग 100 पॉइंट मिल चुके हैं इसमें भी. ठीक है, नेचुरल गैस में भी वैसे हाफ टारगेट हो गया है. बुक करना चाहो बुक कर लो. एसएल जरूर ट्रेल कर लेना अगर ट्रेलिंग एसएल यूज़ कर रहे हो. फाइनल टारगेट ऊपर तक है 363. देखते हैं डायरेक्ट जाता है या फिर एक बार और नीचे आता है पुल बैक देने 350 के अराउंड. द प्रॉफिट. लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम. ये लगभग लाइक 5 यहाँ तक 9 पॉइंट. $10 left. New York session is going to open. Okay, done. वाले एफईजी के अराउंड से एक पुल बैक एक्सपेक्टेड है इन क्रूड और क्या हो सकता है दैट इज लास्ट लेवल करो गाइस 61 people are watching only 29 likes नेचुरल गैस में हाफ प्रॉफिट कर लेना एटलीस्ट और एसएल ट्रेल जरूर करना ठीक है अगर फाइनल टारगेट का देख रहे हो ऊपर नीचे आया तो फिर एक बार 350 भी टच कर सकता है जो नीचे वाली लाइन ड्रॉ करी हुई है विच इज अगेन अ गुड लेवल फॉर बाइंग वहां पर भी ट्राई करेंगे Scandal is very important. Seven minute left 7 मिनट और है इतना बड़ा पुल बैक आया, उतनी बड़ी वापस सेलिंग भी आ गई। नेचुरल गैस स्टिल ऑन सपोर्ट, अब नीचे आ जाए तो बेटर है थोड़ा। नेक्स्ट कैंडल इंपॉर्टेंट रहेगी, ध्यान रखना 6:30 की। करते रहोगे, इस 35 लाइक्स पे नहीं रुकना है। 100 लाइक्स का टारगेट है। कोई क्वेश्चन है तो कमेंट बॉक्स में पूछ लो। ओके, 3 मिनट लेफ्ट, 3 मिनट और बस। थाउजेंड शेख जी, नेचुरल गैस प्राइस एक्शन फॉलो क्यों नहीं करेगा? नहीं, प्राइस एक्शन फॉलो कर तो रहा। बाकी कभी कोई न्यूज आती है, मार्केट ओपनिंग होती है, तो उस समय सडन वॉल्यूम आता है, उस समय कह नहीं सकते मार्केट किस डायरेक्शन पे मूव कर जाए। तो सडनली कैंडल बन जाती है, सडनली एक बड़ा वॉल्यूम आता है मार्केट ओपनिंग पे। तो कुछ टाइम पीरियड होते हैं जहाँ पर थोड़ा सा क्वांटिटी आप कम रख सकते हो या फिर अवॉइड कर सकते हो उस टाइम फ्रेम पे नई पोजीशन बनाने के लिए। लाइक न्यूयॉर्क सेशन ओपनिंग हो गई, यूएस मार्केट ओपनिंग हो गई, कोई डेटा हो गया, कोई न्यूज़ हो गई जो शेड्यूल है पहले से, कोई सडनली आ गई तो उस पर तो कोई कुछ नहीं कर सकता। वहाँ पर तुक्का ऐसा लग जाता है। बेटर है 15 मिनट की उस कैंडल को रिस्पेक्ट दे दो एंड देन मूव फॉरवर्ड। मैंने बताया लास्ट ट्रेडिंग सेशन है वीक का, थोड़ा क्वांटिटी का ध्यान रखना। 17th ऑफ जनवरी, 18-19 सैटरडे संडे मार्केट क्लोज है, और फिर 20th को यूएस के प्रेसिडेंट की इनॉग्रेशन है मंडे को। तो हमारे वहाँ इंडियन टाइम के अकॉर्डिंग आई थिंक इवनिंग पर ही होगी वो। उसका इम्पैक्ट फिर हमें देखने के लिए मिलेगा ट्यूसडे को। 7 PM का जो डेटा है बाकी गोल्ड और सिल्वर के लिए इम्पोर्टेंट है। कम ऑन, 76 पीपल आर वाचिंग, लाइक करते रहो सभी लोग। ओके, 10 सेकेंड्स। न्यूयॉर्क सेशन ओपन हो गया है, एक्सपेक्ट करना चाहिए थोड़ा वॉल्यूम अब टिल यूएस मार्केट ओपनिंग ऑब्वियसली एट 8 PM। क्रूड ऑयल की कैंडल ही ओपन नहीं हुई, कहाँ चले गई क्रूड ऑयल की कैंडल? वेयर इज क्रूड ऑयल कैंडल इन MCX? MCX में कैंडल ही ओपन नहीं हुई है, ट्रेडिंग व्यू के चार्ट पे नेचुरल गैस पे ओपन हो चुकी है, ओपन इक्वल टू हाई बना है। Still there is no candle in crude. फॉरेक्स में भी है या फिर फॉरेक्स में भी गायब हो गई? फॉरेक्स में तो बनी है। देयर इज अ कैंडल इन फॉरेक्स। MCX की कैंडल ही गायब है। तो गोल्ड भी होने को वैसे रेजिस्टेंस पर ही है, बट अब डेटा भी आने वाला है, देखते हैं डेटा से पहले मूव करता है या फिर नहीं करता है। पिछले 1 घंटे से रेजिस्टेंस पे रुका हुआ है। 7 PM के डेटा का मुझे लग रहा है वेट कर रहा है। नीचे सपोर्ट था, वहां से सपोर्ट लिया 2702-3 के आसपास, 2710-11 के आसपास रेजिस्टेंस है, वहीं पर रुक गया 15 मिनट टाइम फ्रेम पे। सेवन PM का डेटा इंपॉर्टेंट रहेगा गोल्ड और सिल्वर के लिए। सोप ये छोटी सी रेंज बना रखी है जो 7 to 8 पॉइंट की रेंज ब्रेक कर दे गोल्ड भी। फाइनली कैंडल अराइव्ड इन क्रूड ऑयल। करते रहो गाइस, लाइक करते रहो। 40 लाइक्स हो चुके हैं, 100 लाइक्स का टारगेट है। डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल एज वेल। डोंट फॉरगेट टू सब्सक्राइब द चैनल, ring the bell icon as well. India Steel Minister proposes KIOCL merger with NMDC. Good news for NMDC, positive for NMDC. स्टॉक के लिए तो पॉजिटिव न्यूज ही है। लेट्स सी कल कैसा इम्पैक्ट पड़ता है। ये KIOCL KIOCL, which also produce iron ore pellets, is in critical condition. Kumaraswamy added. He is the Federal Steel Minister in India, SD Kumaraswamy from Karnataka. कल किस तरह से इम्पैक्ट पड़ता है प्राइस पे NMDC के इस मर्जर का। India economy is set to rebound, but food inflation needs monitoring, central bank says. देखो अभी एक मॉर्निंग पे भी न्यूज आई थी सोर्सेस की ओर से, ऑब्वियसली नॉट कंफर्म येट, जहां पर ये बताया गया था कि ट्रम्प एडमिनिस्ट्रेशन, मैंने वो शेयर भी किया था टेलीग्राम पे, बाय द वे जिन लोगों ने टेलीग्राम अभी तक ज्वाइन नहीं किया, लिंक डिस्क्रिप्शन बॉक्स में, वहां से ज्वाइन कर लेना फ्री ऑफ कॉस्ट। अगर लिंक्स ओपन ना हो तो डायरेक्टली सर्च कर सकते हो। ट्रेडिंग विद सागर, मेरे नाम से बहुत सारी फेक प्रोफाइल ऑलरेडी है, उनको मत ज्वाइन करना, ओपन करके देख लेना एक बार। ओके तो उस न्यूज में ब्लूमबर्ग की ओर से वो आर्टिकल था एक्चुअली, बताया गया था कि जो क्रिप्टो करेंसीज हैं उनको एक मेजर करेंसी के तौर पे यूएस रख सकता है अंडर वो पहले भी कह चुके हैं बट इस पर फ्रेमवर्क बन सकता है नॉट अ रिजर्व करेंसी बट अ मेजर करेंसी सो मेजरली अगर ऐसा होता है तो इट विल ह्यूज इम्पैक्ट ऑन ऑल क्रिप्टो स्पेशली बिटकॉइन पॉजिटिव ही रहेगा उस केस में सो उस न्यूज़ पे भी ध्यान रखना ब्लूमबर्ग वेबसाइट को फॉलो कर सकते हो वहाँ पर आई थिंक मुझे लग रहा है सबसे पहले वो न्यूज़ फ्लैश होगी मॉर्निंग पे था ये आर्टिकल बाय द वे कितना रियल होता है नीड टू सी देखना पड़ेगा गोल्ड ने थोड़ा बहुत सेलिंग तो दिखा दिया है लेट्स सी नीचे न्यूज़ पे भी गिरता है या फिर नहीं गिरता है यहाँ पर एक सपोर्ट है लेट वो होल्ड नहीं हुआ तो और गिरना चाहिए नहीं तो फिर अब न्यूज़ ही मार्केट को थोड़ा बहुत मूव करा सकती है 7 PM पे डेटा भी है ध्यान रखियो नहीं उसको बुक कर लो ट्रेल द एसएल न्यूयॉर्क सेशन की ओपनिंग पे अच्छा वॉल्यूम आ तो गया है लेट्स होप कंटिन्यू करे नेचुरल गैस में भी ठीक ठाक ही है वॉल्यूम क्रूड में भी ठीक ही है आ गया अपने फाइनली एफईजी पर 6000 5 मिनट और हैं कैंडल क्लोज होने में सपोर्ट एक बाकी नीचे मिलेगा 6580 के अराउंड बट उससे पहले एफईजी है देखो यहाँ से अगर प्राइस रिवर्ट करता है क्रूड का 2 मिनट लेफ्ट इन कैंडल क्लोजिंग. काफी अच्छा वॉल्यूम है. ग्रेट. लाइक करते रहो गाइस. बोलो जी, हम मैं बढ़िया, आप बताओ. हमें तो लगता है सारी आपकी ये न्यूज़ न्यूज़ मेरी कैसे हो सकती है सर? कैसी बातें कर रहे हो बताओ. ऑप्शन सेलिंग सिखा दो. सिखाई तो थी. ऑप्शन सेलिंग बताई थी आपको कैसे करनी है. ओके, काफ़ी अच्छा वॉल्यूम आया है क्रूड में. लेट्स सी. ग्रेट. ठीक है, अभी भी 2 मिनट है, 1 मिनट है कैंडल क्लोज होने में. स्टिल वी हैव 1 मिनट इन कैंडल क्लोजिंग. अरे तो ठीक है, देखो यहाँ से एक थोड़ा सा बाइंग का प्लान है इन क्रूड. ओके, नेक्स्ट कैंडल बस ओपन इक्वल टू हाई ना बने, तो यहाँ से एक बाइंग का प्लान रखेंगे. यहाँ पे कोई सपोर्ट नहीं है वैसे तो. सपोर्ट बहुत नीचे ही है, बट काइंड ऑफ पुल बैक इज एक्सपेक्टिंग फ्रॉम हियर. कैंडल क्लोज होने दो. 44 लाइक्स. लाइक करते रहो गाइस. लाइक के लिए वो नहीं करना है. डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल. Israeli Security Cabinet recommends approval of Gaza ceasefire deal. Okay, फाइनली आ चुका है ये. दिस न्यूज़ इज़ नेगेटिव फॉर क्रूड ऑयल. अभी जस्ट थोड़े 10 मिनट पहले की न्यूज़ है शायद. ठीक है, न्यूज़ आ चुकी है. न्यूज़ तो नेगेटिव ही है देखो क्रूड के लिए, बट हम एक्सपेक्ट करते हैं थोड़ा यहाँ से पुल बैक आए. कैंडल कहाँ गायब हो जा रही है क्रूड की. ठीक है, न्यूज़ भी आ चुकी है. न्यूज़ इज़ नेगेटिव फॉर क्रूड प्राइस. कल आई थिंक आप लोगों को याद होगा, अप्रूवल नहीं मिला था वहाँ से उनकी कैबिनेट से. इसराइल की जो सिक्योरिटी कैबिनेट है, जिसमें खुद प्राइम मिनिस्टर हैं वहाँ के, उन्होंने अभी अप्रूवल दे दिया है कि जो सीज फायर है वो हो जाना चाहिए इजराइल और हमास के बीच में. तो अगर ऐसा होता है तो इट इज़ अ नेगेटिव न्यूज़. ठीक है, न्यूज़ की अगर मैं बात करूं बाय द वे, बट थोड़ा पुल बैक हम एक्सपेक्ट कर सकते हैं. यहाँ से आना चाहिए थोड़ा बहुत क्रूड में. एक काम करते हैं, इसको न्यूज़ की वजह से रिमूव हुआ है ना. लेट्स रिमूव दिस वन एंड इसको यहाँ पर ऐसे लेके आते हैं एंड देन. ठीक है, यहाँ से बहुत कम क्वांटिटी में प्लान करना. न्यूज़ तो नेगेटिव ही है, बट अगर थोड़ा पुल बैक आता है तो दिस वन. कैंडल ओपन इक्वल टू हाई है, थोड़ा संभल के. न्यूज़ नेगेटिव है क्रूड के लिए जो भी आई है जस्ट. ठीक है, तो इस पे ऑप्शन बाय मत ट्राई करना. मिनी वगैरह ही ट्राई करना. ऑप्शन ट्राई मत करना. या फिर करोगे तो बहुत कम क्वांटिटी बेटर रहेगा. फ्यूचर में मिनी वगैरह ट्राई कर सकते हो कम क्वांटिटी के साथ. ऊपर ये टारगेट लगा रखा है. ऊपर एक एफईजी है, वहां तक का एक टारगेट रहेगा. बाकी अभी ये 7 PM वाला डेटा है, इसको देखते हैं. ओके, गोल्ड ठीक ठाक आ तो गया है नीचे. देखो अब न्यूज़ पर ही डिपेंड है गोल्ड पूरा. रेजिस्टेंस से सेलिंग तो आ गई है. अगर न्यूज़ नेगेटिव ही आती है तो और गिरना चाहिए. और अगर 2703 के नीचे प्रॉपरली ब्रेकडाउन हो जाता है तो फिर हम टारगेट एक्सपेक्ट करेंगे 2694 के अराउंड. बाकी न्यूज़ पॉजिटिव आ गई तो थोड़ा गड़बड़ हो जाएगी. 7 PM का डेटा याद रखियो, गोल्ड और सिल्वर को इम्पैक्ट करेगा। बाकी जिनको सेलिंग में ऑलरेडी प्रॉफिट हो चुका है वो अवॉइड भी कर सकते हैं ट्रेड को, ठीक है। वो सेलिंग वाला ट्रेड काफ़ी अच्छा चला गया क्रूड का। न्यूज़ कहाँ देखें? बहुत सारी वेबसाइट है, कहीं पर भी देख सकते हो। ट्रेडिंग व्यू में न्यूज़ फ्लो का ऑप्शन आता है, वहाँ देख लो। एक टर्मिनल पे उसको लगा लो। चाहो तो रूटर्स की वेबसाइट यूज़ कर सकते हो। ब्लूमबर्ग भी ठीक है, याहू फाइनेंस अच्छा है, सारे न्यूज़ चैनल अच्छे हैं। Ozempic among the next drugs up for price negotiation. 75 people are watching and 45 likes, बताओ। 30 people are still waiting, किसका वेट कर रहे हो? लाइक कर दो बाकी लोग भी। विराट कोहली फॉर्म में आएगा तभी लाइक करोगे। उसको ट्रेल करके एक बार 7 PM वाला देखते हैं टिकट डेटा, उसके बाद फिर यूएस मार्केट का ही वेट रहेगा। यूएस मार्केट का ही उसके बाद वेट करेंगे, क्योंकि न्यूयॉर्क सेशन तो ओपन ऑलरेडी हो ही चुका है। Okay, trail the SL. Great. नीचे डाल दो इसको। न्यूज से पहली कैंडल रिवर्स कर गई गोल्ड में, अटक गया। ये भी सपोर्ट रेजिस्टेंस के बीच में है। कोई सेलिंग में है तो अपना एसएल ट्रेल कर लेना गोल्ड में भी। न्यूज 10 मिनट में आने वाली है। लास्ट डेटा इस वीक का Netanyahu says Israel Hamas deal to pause Gaza war on track.
Are you looking for a new podcast about stuff related to money?
Well, today's your lucky day.
I'm Matt Levine.
And I'm Katie Greifeld.
And we are the hosts of Money Stuff, the podcast. Every Friday, we dive into the top stories about Wall Street, finance, and other stuff.
We have fun, we get weird, and we want you to join us.
You can listen to Money Stuff, the podcast on Apple Podcasts, Spotify, or wherever you get your podcasts.
News when you want it with Bloomberg News Now. I'm Karen Moscow. We have some breaking news crossing the Bloomberg. Israel's high-level security cabinet has approved a ceasefire and hostage prisoner exchange deal with Hamas, paving the way for a weeks-long pause to the 15 months of fighting in Gaza. The deal will now be brought to the full cabinet, where it's expected to be signed off despite opposition by some far-right members of Prime Minister Benjamin Netanyahu's government. Bloomberg's Ethan Bronner has more.
The far right is very upset that the government has, from their perspective, given up on goals that they had said were not to be compromised. That is to destroy Hamas totally and not to let those who are in Israeli prisons, Hamas members who have killed Israelis, out back into circulation. There are hundreds of them will go out, and they will. The right says, and that's not a crazy thought, go back into action and try again to carry out violent acts against Israelis.
And that's Bloomberg's Ethan Bronner. Once the deal has cleared all hurdles, Israel's military activity in Gaza will be pared back. The 6-week ceasefire and first exchange of Israeli hostages and Palestinian prisoners are expected to start Sunday. The presidents of Russia and Iran have held talks in the Kremlin today. The meeting came ahead of the signing of a broad cooperation pact between the two countries that covers all areas from trade and military cooperation to science, education, and culture. Back here in the U.S., the Supreme Court has signaled it's ready to rule as soon as today on the law that would ban TikTok in the U.S. unless it finds a new owner. But even if the High Court upholds the ban, TikTok could win a reprieve. We get more from Bloomberg's Gina Cervetti.
The law calls for TikTok to shut down this Sunday unless its Chinese owner ByteDance lines up a buyer for its U.S. operations. But this Sunday falls before a federal holiday and President-elect Trump's inauguration. So Biden administration officials say that essentially punts the issue to the next administration. The law also allows for a 90-day extension if a serious purchase negotiation is underway. Trump's incoming national security advisor says they'll find a way to keep the deadline going. Democrats in the Senate have also introduced a bill that would give TikTok another 270 days to reach a deal. Gina Cervetti, Bloomberg Radio.
All right, Gina, thank you. President Joe Biden is commuting the sentence of almost 2,500 people convicted of nonviolent
नेचुरल गैस में भी ध्यान रखना, अगर ये थोड़ा नीचे और आता है ना तो वापस इसमें बाइंग का प्लान रख सकते हैं 350 के अराउंड। ऊपर यहीं से चला जाए तो बेस्ट ही है, बट अगर नीचे आता है तो फिर थोड़ा सा सेलिंग की जो नीचे वाली लाइन ड्रॉ करी है उसके आसपास करना फिर से, क्योंकि यहाँ पर ऑलरेडी हम बाई कर चुके हैं, मोमेंटम आ चुका है। कोई अभी भी बाइंग में है तो ट्रेल कर लेना अपना एसएल। अगर नीचे आता है प्राइस तो फिर 350 के अराउंड एक वापस बाइंग प्लान की जा सकती है। थोड़ा एसएल चाहो तो नीचे और बढ़ा सकते हो। ठीक है, बाकी जिसने यहाँ से बाई किया हुआ है वो भी अपना एसएल ट्रेल कर लेना। टारगेट फाइनली चाहे यहाँ से बाइंग आए या फिर नीचे से बाइंग आए, ऊपर तक का ही है। बड़ा टारगेट है तो इतना डायरेक्टली तो नहीं जाएगा, रुक रुक के जाना चाहिए।
drug offenses. Today's actions give Biden the presidential record for most individual pardons and commutations issued. Donald Trump's pick for Treasury Secretary Scott Bessent is set to be confirmed in the role following his hearing yesterday. The veteran fund manager emphasized the importance of tax cuts and aligned himself with Donald Trump's economic goals.
We must make permanent the 2017 Tax Cuts and Jobs Act and implement new pro-growth policies to reduce the tax burden on American manufacturers, service workers, and seniors.
During the hearing, Scott Bessent vowed the federal government is not going to default on its debt under his watch and that he respected the central bank's independence over monetary policy. New York Mayor Eric Adams will meet with Donald Trump today to discuss New Yorkers' priorities. It's the latest sign of cooperation between the embattled Democratic leader and the Republican president-elect who long called the city his home. We have new details about the Treasury Department's cyber attack that the agency has blamed on Chinese state-sponsored hackers. Sources tell Bloomberg Secretary Janet Yellen's computer was breached along with two of her top deputies. We're told fewer than 50 files were accessed, none of them classified. It looks like firefighters are making progress containing the Los Angeles wildfires. The two largest fires, the Palisades and Eaton blazes, continue to burn, but fire crews are knocking them back to hot spots. The death toll has risen to 27, and the search for the missing continues. Meanwhile, Sting, Billie Eilish, Lady Gaga, the Red Hot Chili Peppers, those are among the performers slated to take the stage at Fire Aid. It's a benefit concert for wildfire relief. Since the wildfires started, celebrities and entertainment organizations have pledged millions to help those who have been displaced or lost their homes. Rio Tinto Group and Glencore have held early-stage talks about combining their businesses to create a behemoth to rival long-standing industry titan BHP Group. And SpaceX's Starship rocket, it exploded just minutes into its 7th test flight. While the top section of the rocket was lost, SpaceX succeeded in another complicated maneuver, bringing the spacecraft's super heavy lower portion back down to Earth and catching it in midair using giant mechanical arms.
You heard it here. Bexzilla has caught the booster.
Once again, for the second time, a successful catch by the launch tower. This is the same tower, the launch pad, where that booster took off from just 7.5 minutes ago.
It was to be the first time Starship attempted to deploy cargo in space, an important milestone in readying the rocket for operational use. S&P futures on the rise this morning, up 0.4%. So are Dow futures, NASDAQ futures up 0.5%, 10-year Treasury yield 4.58%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is...
गाइस डेटा आने वाला है, 1 मिनट रह गया. गोल्ड और सिल्वर पे ध्यान रखना, डेटा इम्पैक्ट करेगा गोल्ड और सिल्वर के लिए. हाँ, ट्रम्प टू डेजिग्नेट क्रिप्टो एज नेशनल प्रायोरिटी. नेशनल प्रायोरिटी, वाओ. डेटा आने वाला है. गोल्ड, वाओ क्या कैंडल बनाई है गोल्ड ने. ठीक है, नेचुरल गैस भी आ गया नीचे वाले लेवल पे. ये 350 के अराउंड एक बाइंग का प्लान रखना नीचे. इससे ज़्यादा बड़ा एसएल रखने का फ़ायदा नहीं है, कुछ ज़्यादा ही वॉलेटाइल हो गया. तो कोई न्यूज़ नहीं आ गई. ओके, डेटा रिलीज्ड. लुक्स लाइक नेगेटिव ही लग रहा है डेटा. आने दो. रेजिस्टेंस पे रुका है प्राइस स्टिल गोल्ड का. हाँ, ये तो फ्लैट आ गया. डेटा देखो फ्लैट है वैसे अगर देखा जाए तो. बहुत कम डिफरेंस है. फोरकास्ट 1.46 का था, आया है 1.48. जितना फोरकास्ट किया था उससे ज़्यादा आया है, तो इट इज़ काइंड ऑफ अ नेगेटिव, बट वेबसाइट इसको फ्लैट मान के चल रहा है. न्यूट्रल जिसको हम कह सकते हैं. ठीक है, बट जितना छोटा सा डिफरेंस है 0.02 का, तो उसके अकॉर्डिंग नेगेटिव कह सकते हो. बट या वेबसाइट टुक दिस डेटा एज अ फ्लैट फॉर न्यूट्रल कह सकते हो, न्यूट्रल फॉर गोल्ड एंड सिल्वर. अब कोई डेटा नहीं है आज का डेटा हो गया कंप्लीट. यही सपोर्ट है यहाँ पर, इससे बड़ा ऐसा लेना मत नेचुरल गैस में. बाकी अब देखो अगर ये नीचे आता है तो वेल एंड गुड, नहीं आता है तो फिर ये गोल्ड वाले भी अपना प्रॉफिट बुक करके निकल जाइए, क्योंकि ये डेटा वाली कैंडल है, कुछ भी हो सकता है. अगर ये नीचे ब्रेक कर दे 2703 के नीचे क्लोजिंग बेसिस पे, तो हम एक्सपेक्ट करेंगे ये रेट टारगेट आना चाहिए. अगर नहीं क्लोज करता है तो फिर ये या तो रेंज बना देगा या फिर किसी एक साइड ब्रेक एसएल हिट करेगा, उसके बाद ही मूव करेगा. फिलहाल ये रेंज बना रखी है, तो हाफ प्रॉफिट बुक करके ट्रेल. यहाँ पर नहीं रुकता है तो फिर ऊपर नेक्स्ट रेजिस्टेंस 2718, नीचे सपोर्ट 2693-94 के अराउंड है. बाकी क्रूड में भी ध्यान रखना, इस ट्रेड में ऑप्शन मत ट्राई करना. ठीक है, मिनी वगैरह ही ट्राई करना, क्योंकि न्यूज़ जो आई थी, न्यूज़ तो नेगेटिव ही थी क्रूड के लिए. सपोर्ट पर जरूर है, इसलिए लगा रखा है थोड़ा बहुत. एफईजी था वहाँ पर एक छोटा सा, तो यहाँ पर ज़्यादा रिस्क मत उठाना इस क्रूड ऑयल वाले ट्रेड में. जस्ट गो फॉर मिनी क्रूड ऑयल मिनी. ऑप्शन में रिस्क बहुत ज़्यादा हो जाएगा, या फिर अगर ऑप्शन में ट्रेड करते हो तो गो विथ अ वेरी स्मॉल क्वांटिटी। जो न्यूज आई थी फिलहाल के लिए गाजा वाली, वो तो नेगेटिव ही थी। बाकी ये भी लास्ट सपोर्ट है नेचुरल गैस का, इससे बड़ा ऐसा लेके फ़ायदा नहीं है। फाइनल टारगेट ऊपर तक रहेगा, अगर आता है नीचे फर्स्ट दिस वन। बाकी अगर ये ब्रेकडाउन रीटेस्ट किया तो फिर नीचे सपोर्ट 339 के अराउंड है।
Friday morning, good morning. I'm Guy Johnson alongside Tom McKenzie. We are now an hour away for the opening trade. So what do you need to know? China hitting its 5% GDP target. Exports are booming. Stimulus is starting to impact the economy as well. Trump Treasury Secretary Scott Bessent warns of a, quote, economic crisis if the 2017 tax cuts are not extended. And mining giants Rio Tinto and Glencore have held early-stage merger talks. It is unclear if those discussions are still ongoing, Tom.
Let's check in on the markets. The data dropping in terms of UK retail sales. A very brief look that I had looked pretty ugly, in fact, in terms of the top-line numbers, but we'll break the details down for you. European futures, after a very solid day yesterday, gains of around 1%. Looking to add to that just by 0.1% so far in the session. FTSE 100 looking to add around 0.8%, setting ourselves up for a solid day for the FTSE 100. The 10-year currently at 461. You've seen some moderation, some stabilisation around the Treasury story. And the pound at 121, below 122 with a drop of 0.4%. The pressure still on sterling. The countdown to the opening trade starts right now.
Friday the 17th, the last trading day of the Biden administration. Remember, there is a US holiday Monday. We are, therefore, really into a run into the Trump administration now. Today is the last day. Will it be a quiet day? Will it be a busy day? There's a lot to get through between now and the inauguration, I would argue. One of those is certainly the data that we are seeing dropping onto our screens right now in the form of UK retail sales. Looks a little soft to me. We've got a headline number of, this is the month-on-month number ex-fuel, of negative 0.6. The headline number year-on-year, therefore, is 2.9. Tom, in terms of the month-on-month ex-fuel, these numbers look a little bit soft. If you include fuel, they pick up a little bit.
The pound is down 0.4% at 121, so there's a drop there. You do see the mark move when the data drops. That contraction is there, 0.6%. The expectation is that you'd see an expansion of 0.3%. This, for me, is maybe something of a disconnect, that the economy of the UK, yes, you have wages at relatively high levels, but there is pain in some parts of the sector. The interest rate story is there. To what extent is that weighing on the consumer now, and how's that going to feed into expectations? Already adjusted, of course, around the BOE. Is this going to compel them to rethink how far they have to go in terms of rate cuts? This is a consumer in the UK that appears to be feeling the pinch.
Absolutely. And you can understand why. Think about what has been happening in terms of the tax story, what has been going on in terms of the wage story. Wages have been relatively good, and there was an expectation that actually that would drive a consumer forward, but just uncertainty about interest rates, mortgages, all kinds of things at the moment weighing on the consumer, and that's starting to really show up post-budget in the UK data. I just want to flag something else as well. There's a line coming through. The PRA is announcing a delay to the implementation of Basel 3.1. Those are the banking regulations that we're all spending so much time talking about right now. Let's talk about China.
Yeah.
So the China data, 5%, that's great. This is, in theory, quite good news. It feels like it's been driven a lot by exports, though, which is obviously going to run into the Trump tariff story. But there also feels like there's a little bit of stimulus beginning to creep into this data.
That's the green shoots, if you look for it. Towards the end of last year, Q4, finally officials stepped up. They put stimulus at play. We've talked about the fact that it was a gradual ramp-up of stimulus rather than that big bazooka. It got them across the line in terms of that 5%. But as you say, the key vulnerability going forward is exports that could very well be hammered by additional tariffs from the US. The export market for the US has shrunk versus the previous Trump administration from 20% to 15%. That's down. Then the property sector, by the way, investment in property investment last year falling 10%, contracting 10%. That's the biggest drop since records began in terms of property investment. Then you have the demographic story as well. The other line coming through is that the population shrank again for the third straight year, and that gap is widening between China and India when it comes to population growth. That will be further pressure on the pension system and the ability for China to fund itself going forward.
Let's just talk about the green shoots for a moment. There is this voucher scheme that the Chinese are incorporating to try and get the consumer story going a little bit, to try and encourage people to go out and spend. I looked through the numbers a little bit earlier. There's clear evidence that this is actually starting to have an effect. There is a little bit of a consumer boost beginning to be generated by this, and it looks like there is the potential for this programme to be expanded as well.
So this is something that has been discussed by Scott Bessent in slightly different terms. He's been talking about the fact that this is an unbalanced economy. He and Treasury Secretary Janet Yellen are aligned on this. They have both said that China needs to focus on its domestic economy. Many mainstream economists say that China is overly dependent, of course, on the spend around infrastructure and exports. They need to be able to put in place that base for the consumer to spend. The voucher scheme is one step towards that. So, to your point, is this the year? And we can speak to Diana Choileva, who is really fantastic in terms of her understanding of the Chinese economy on the ground, often with policymakers. Is this the year when they go full bore on supporting China's consumer?
It would seem, if you are going to see significant tariffs, that would be the logical step maybe to make, and maybe devalue the currency as well, which is maybe something that we've also seen evidence of thus far. Talking of currencies, talking of what is happening with the US, the other side of this coin, Bessent, Capitol Hill yesterday, really solid hearing. He looked like he really was in control of the narrative in terms of what he delivered yesterday. The standout story comes through that he is very keen to make sure that the 2017 tax cuts are continued. He talked about an economic crisis at the back end of this year if that is not delivered upon.
Yeah, he sounded like there was a real sense of urgency on that front. I mean, they'll get it through, presumably, given that they have control of all three parts of the US government. But the way that he framed it as a potential economic crisis, if you don't extend those tax cuts, that he says will have the deleterious negative impact on the US economy. He also talked again about the independence. Interestingly, he was pretty clear the Fed should be independent. He was not dithering on that. So maybe whether that becomes a point of friction between him and Trump in the months and quarters ahead. But this was, to your point, a pretty solid performance. That was the takeaway. He seems to have sailed through this. He will probably get that final sign-off. And then we'll see what he does on the tariff front. He also said he doesn't think tariffs are going to be inflationary, ultimately. And interestingly, more voices are coming around to that view, that tariffs don't necessarily mean additional inflation in the US.
It depends. I think we'll find out beginning of next week. The inauguration is coming through. Apparently, the Trump administration, the president himself, elect, is lining up a whole series of announcements that are going to come through quite quickly. So are we going to get the gradual approach, or are we going to get the kind of shock and awe approach in terms of what is happening with this tariff story? We're on tenterhooks now. Basically, we're into the run. You've got MLK Day on Monday. The markets are going to be closed Monday in the United States, certainly the cash markets. So today, in some ways, the last trading day before we get to that. We do not have a statement this morning from Rio on the story that has obviously captured the mining world's imagination overnight, the possibility of a Rio-Glencore deal being talked about. We first reported it. It is in some ways, response to the size and scale of BHP. But it's interesting that these companies... Putting these companies together, incredibly difficult. All kinds of issues surrounding it from a regulatory point of view, also in terms of a portfolio point of view. Glencore's got a huge footprint in coal, which could be problematic as well. Is there a logic in putting copper assets together? I think maybe that is a more compelling argument. But getting such a deal over the line with such different cultures, such different footprints, fascinating. And do you really... Are mega mergers in mining, do they deliver for shareholders? It's interesting to see what is happening in terms of Rio's share price overnight in Australia. A little bit of weakness, maybe some concern coming through from investors, but no regulatory statement this morning, which I'm surprised about.
Glencore shares rising 3.6% on Tradegate. And this is something of a hark back to 2014 when Glencore made an original approach to Rio Tinto. To your point...
which way round is it? So the line is always that there's no such thing as a merger. So who's taking over who here?
Yes. Well, the copper assets This is one of the key pieces from the reporting from the team. The copper assets that Glencore actually has in Chile and the fact that Rio have been eyeing those could be key in that regard. But what do they do on the regulatory front? What do they do with the coal assets? And what do they do with the assets in parts of the Congo that Rio apparently have no appetite for, operating in that kind of region? They have over 130 different mines around the world, Glencore. And then, of course, the trading business. Started as a trading business and then have added the mining on top of that, but now have about 130 mines. So are you spinning those off, selling them to private equity? There's all sorts of potential implications from this, but what it all comes down to, seemingly, is copper and expectation that desire for copper is going to continue.
I think there's a distinct lack of clarity around the story this morning. Our reporting suggests that maybe the talks are ongoing. We don't know at this point. Certainly, there was an early-stage talks, the set of early-stage talks back end of last year. The FT is reporting that they are over. So there's a distinct lack of clarity around the story. We definitely broke this story first, though, so I think it's going to be fascinating to see how ultimately this evolves. But it comes back also to China and the iron ore story and the industrialisation story and your comments about the consumer and that side of the economy being more important. So I think there's a definite China angle on all of this. Plenty to discuss as we head into the weekend. Lots of things to focus on what is happening in the fixed income market, absolutely front and centre. Andrew Jackson, Vontobel's head of fixed income, is going to be joining us shortly. Jessica Roswell, the European Commissioner for the Environment, Water Resilience and a Competitive Circular Economy, that's quite the title, is going to be joining us a little bit later on. We'll try and hit all of those various remits. Max Kettner, HSBC's Chief Multi-Asset Strategist, is going to be joining us as well. We'll get his take on what is happening. How bearish, how bullish is Max feeling as we go in to the Trump administration? What else do you need to know this morning? The Israeli Prime Minister Benjamin Netanyahu says a deal to return hostages held in Gaza has now been reached. In a statement, he said government officials will gather later today to sign off on the deal. Netanyahu had previously accused Hamas of reneging on parts of the ceasefire agreement, risking its completion. The Gaza-based militant group says it remains committed to the deal. SpaceX has lost its Starship rocket during its 7th test flight, an unexpected setback after making steady progress with this program. Despite the loss, SpaceX successfully caught the rocket's super heavy booster in midair using giant mechanical arms. The cause of the loss is unknown, and the company says it will be going through the flight data to determine ultimately what went wrong. Incredible pictures. This thing is captured, the booster bit at least captured on the ground. And Bloomberg has learned that President-elect Donald Trump is planning to release an executive order elevating crypto to a national policy priority. Still under discussion for inclusion in the order is a directive for all government agencies to review policies on digital assets and pause litigation involving crypto. The order could include the creation of a national Bitcoin stockpile. So, Tom, they've got a whole load of Bitcoin. The reason for it is they've basically taken it as part of investigations and judicial investigations. So they've got some Bitcoin.
They've got $20 billion of Bitcoin sitting in an account somewhere.
It surprised me a little bit. So they could make that into some sort of a national stock. But it's interesting that this is being pushed as hard as it is. It also seems slightly contradictory when you think about what is the other priority of this administration that Bessent was talking about yesterday, which is for the dollar to remain the preeminent reserve currency. In theory, you could argue that maybe Bitcoin is a threat to that. But it does seem as if the Trump administration, Trump himself, very much on board with the idea that the US should make progress here.
Gary Gensler is out, of course, so you'll have an SEC head who will be more favourable towards crypto. Coinbase, executives from other platforms have been donating to the inauguration fund. It all seems to be lining up for more supportive policy for crypto, and Bitcoin's back above 100,000 today.
So it's back above 100,000. I just need to check the GIP2 on my Bloomberg just to see what is going on in terms of the move that we saw higher. Not a big move higher. So I just wanted to check the two-day. So this sounds incredibly positive in terms of the fact that actually they are going to deliver upon this almost on day one, and it's going to be quite extensive in terms of the impact that it's going to have. Bitcoin, maybe already pricing this in?
A lot of optimism already priced in, but we were comfortably above 100,000 towards the end of 2024. Profit-taking at play, clearly. Bit of a surprise, arguably, when you make this a policy priority on a similar line to energy as a priority and maybe drilling and getting more oil and gas out of the ground. You're putting it on a similar level with that. You have the regulatory changes coming through. It seems possibly this is being priced in, but maybe this is a story that kind of grinds its way higher through the weekend. But clearly crypto is now going to be set for further additional positive catalysts potentially in the weeks ahead.
But to your point, how much of that is already in the price?
there is plenty more coming up. We're going to hear from the details in terms of, the bank earnings. Wow, they've just been smashing it. US banks. To what extent does this widen the gulf with their European counterparts as well? European bank earnings later, of course. We're going to get the details on Morgan Stanley, Bank of America beating estimates as well. And the banks have been returning a lot of capital to shareholders, about $100 billion last year. And it looks set to continue through this year as well. Plus, we're going to hear from Reform UK leader Nigel Farage about his relationship with Donald Trump, Elon Musk, along with his party's plans as well, the plans for Reform UK that has arguably the wind behind its back right now. Up next, though, markets gear up, of course, for a new US Treasury Secretary, what he could mean for the dollar, as we've been discussing. We get back to the markets, get some views on where Besson leaves us in terms of details around the policy agendas. If you have any questions of your own for our guests, send them to us on IB plus BBTV Go. This is Bloomberg.
In this gig, you get comfortable being uncomfortable. The enemy is always adapting. Hey, handsome. Always iterating.
Sea cargo is responsible for 3% of global greenhouse gas emissions annually, and ports are a major contributor. As Mexico's first carbon-neutral port, ICTSI subsidiary Contecon Manzanillo is setting the standard for progress. By deploying electrified cranes and tractors, recycling and reusing resources, and offsetting emissions by allocating resources to preserve critical ecosystems. This demonstrates how ports can be drivers of positive change and sustainable growth.
As my birthday signals another milestone in my life, I'm hopeful that if I stay true to myself and follow my instincts, my legacy will be looked on kindly for generations to come.
The United States is not going to default on its debt. If I'm confirmed, the FOMC should be independent. I will be 100% on board for taking sanctions up, especially on the Russian oil majors. Americans are barreling towards an economic crisis at year end. If we do not renew and extend, then we will be facing an economic calamity. On CBDCs, I see no reason for the U.S. to have a central bank digital currency. I firmly believe that if confirmed, and with your counsel and support, we can usher in a new, more balanced era of prosperity.
As long as there are tax cuts. Treasury Secretary nominee Scott Bessent speaking at his Senate confirmation hearing yesterday. Let's walk further into these details and what Wall Street took away from what was said yesterday in Washington. Valerie joins us with the details.
Guy, it seems like the nominee for Treasury Secretary is very much in line when it comes to economic policies of President-elect Donald Trump. But very interesting to see from Wall Street that there was no discussion on Treasury issuance. Scott Bessent has been very critical of the Yellen years, where she issued a huge amount of T-bills instead of extending out duration farther along the curve. We were worried he could perhaps say something about terming out the debt yesterday and that spooking the long end, spooking this Treasury curve steepening further, but he did not say that. He did go on to say that he supports Federal Reserve independence, supported tougher sanctions on Russia. He also had some comments to say about China and their unfair trade practices. Take a listen.
China is the most unbalanced economy in the history of the world. They are in a severe recession/depression. They may have minus 4% disinflation, and they are attempting to export their way out of that as opposed to doing the much-needed internal rebalance.
Exporting their way out of this economic slump in China, causing cheap goods to be dumped in the U.S. He is not a fan of that, perhaps overshadowing the fact he would be tough on tariffs when it comes to China. Watch out for how the dollar performs on Monday if we get any flurry of executive orders from Trump on that manner. But speaking of tariffs, we have heard from two policymakers recently that they are doubting the tariffs' impact on inflation. We heard from former Fed Governor Kevin Warsh, touted to be the next Fed chair, saying he doesn't see a significant impact on inflation from tariffs. We also heard from Fed Governor Waller saying he sees the same thing. Further interesting comments, though, from Waller that made this Treasury rally take another leg higher for the second day in a row. He said he does see the Fed cutting in the first half of this year and did not take he did not take the March meeting off the table, meaning that March meeting for a Fed cut is still live.
Valerie, thank you very much indeed. Lots going on in terms of the Treasury market. Let's get some more details on what is happening here. Andrew Jackson, head of fixed income at Vontobel, joining us from Zurich. Great to see you, Andrew. Talk us through, was there a takeaway yesterday from the Bessent hearing that is useful for the fixed income trade? We're trying to figure out what is going to happen. We're trying to get a steer on what is going to come Tuesday. We're waiting for the inauguration. We're waiting for all the executive orders to come through. Was there any early indication within what Bessent said that you think changes the picture?
I think the key takeaway for me from yesterday and what we've seen over the last few months is that there is more uncertainty within markets than maybe markets are predicting. In terms of interest rate policy, in terms of tariffs, in terms of trading relationships, I think there is a high degree of uncertainty, and I don't think markets are pricing that in. We've seen over the last 3 years an almost unprecedented level of volatility in interest rate markets all around the world, in shapes of yield curves all around the world. And now we're starting to see major global currencies start to move apart from each other in terms of both their FX and in terms of their interest rates. I think it's just really, there's more uncertainty than we're used to. It definitely felt like he was trying to echo much of the rhetoric of Trump rather than being super laser focused on the economy.
In terms of that uncertainty, what do you think the range looks like? Let's use the US 10-year as an example. You've got Nomura out joining T. Rowe Price talking about the possibility of a 6% Treasury yield this year. We posit that 10-year US Treasury yields are still too low in relation to two of its key drivers, consumer price inflation and the fiscal balance. That's what Nomura economists are saying. They think 6%. What do you think the range is? Is it now 3 to 5? Is it 4 to 6? What do you think the range on a US 10-year is going to look like this year?
I think it's more like 3 to 6, which is a very, very wide range. It's a huge range. And that is symptomatic of the level of uncertainty that we see on that 10-year. A year ago, we were at 4.1. We're at 4.6 now on that 10-year. I think it's possible to get to 6. And I think it's nice that Nomura are actually making people notice the fact that there is a huge amount of uncertainty. The fact that that's their base case, I think that's a bit of a stretch, but I think we could get there. There is no doubt that we could get there.
So, Andrew, good morning. It's Tom alongside Guy. What is the trade then, given that uncertainty? Does the steepener trade on US Treasuries still play out this year?
I think the trade is not to try to trade. I think the trade is to have more medium and long-term views and to have a more balanced approach. So I think that trying to trade the short end of US Treasury curve over the last year and a half or so has been a really, really tough trade, and one should avoid it. But do you feel like 4.6 is quite a lot to be paid for 10-year Treasuries? I feel like it is. And the break-even on that, break-even on holding that, really does compensate you for the risk that we might get to 6. So I feel like that's the right trade, just to hold that and know that there might be volatility. But in the back of your mind, it's really nice to know that we might actually move quite far from that, and to position your overall portfolio cognizant of the degree of volatility that we might see and degree of uncertainty that we might see. So stay liquid, stay dynamic, and don't sit on a sort of passive position. But I do think 4.6 is a reasonable entry point.
OK, so 4.6, you'd sit there on the 10-year in the US. What about 4.6 here in the UK? 4.67 on the UK 10-year gilt. Where are we in this story?
Well, I think the UK finds itself in a very different position from either Europe or the US. The UK is a much smaller economy. It's a much more international economy, much less domestic. I also think the confidence around the world about the debt sustainability is starting to be challenged. I don't want to get too much into politics, but I think there is an element of not fully trusting this new government in the UK. So I think that the US 4.6 is a better bet than the UK 4.6, 4.7. And I will continue to watch that very, very.
नेचुरल गैस वॉलेटिलिटी में चल रहा है, इस वजह से सपोर्ट तो ठीक ही था ये, वापस ले सकते हैं 349.6 पे, या फिर ऊपर सेलिंग प्लान कर सकते हैं 364 के अराउंड। नीचे फिर सपोर्ट ये थोड़ा नीचे लेवल पे रहेगा। कुछ ज़्यादा ही वॉलेटाइल हो गया। दिल्ली इलेक्शन से न्यूज़ आ रही है गाइस। दिल्ली इलेक्शन में बीजेपी का जो मैनिफेस्टो है उसमें उन लोगों ने 2500 मंथली एड वुमेन के लिए और 21,000 प्रेग्नेंट वुमेन के लिए सब फ्री में ही बांट देंगे लगता है। सपोर्ट होल्ड नहीं हुआ तो फिर ये बेरिश ही हो जाएगा इंट्राडे में। मार्केट 8 बजे ओपन होगा। गोल्ड भी वही लेवल है, वही रेंज के अंदर ही घूम रहा है, कुछ खास मूव नहीं किया अभी तक। नीचे ब्रेक कर देता है अगर ये तो आ जाएगा 2703 के नीचे, 2695 94 के अराउंड, वहीं का वहीं रुक गया है स्टिल। पीएम पे यूएस मार्केट ओपन होगा, ध्यान रखना उसका, ठीक है, इम्पैक्ट करेगा। अनीता यादव जी और टैक्स लेकर हमारी जान निकाल रहे हैं, मैं वही तो कह रहा हूँ। पूरे इंडिया में लग रहा है मुझे ऐसा हो गया कि कौन सबसे ज़्यादा फ्री में देगा। हर जगह यही चल रहा है, जहाँ भी इलेक्शन आ रहे हैं किसी भी स्टेट में, हर गवर्नमेंट यही कर रही है, स्पेशली स्टेट गवर्नमेंट। इतना फ्री में देंगे, इतना फ्री में देंगे, और देना ही है सबको दो। इसमें भी जेंडर इनइक्वालिटी कर रहे हैं, बताओ। कोड भी कुछ नहीं कर रहा। ज़्यादा ही फाइट हो गई लग रहा है नेचुरल गैस में। फ्री इज नेवर गुड फॉर लोकतंत्र, नो गुड रूट्स, नो फैसिलिटी, जस्ट फ्री की रेवड़ी। मैं वही कह रहा हूँ। बांटनी है तो सबको बांटो, नहीं तो किसी को नहीं। नहीं तो जैसा जिम्बाब्वे का हाल हुआ था कंट्री का, या फिर वो एक कंट्री है ना, कौन सा, साउथ अमेरिका में, वैसा हाल हो जाएगा। नेचुरल गैस बेरिस ही होके मानेगा। ठीक है, यूएस मार्केट ओपन होने वाला है, चाहो तो उसका ही वेट कर लो एनजी में। दैट इज द लास्ट सपोर्ट, अगर होल्ड नहीं करता है तो फिर नीचे ये सपोर्ट सीधा। बड़ा ऐसा लेना भी सही नहीं है। आधा घंटा और है बस। भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल। गोल्ड आ गया नीचे ब्रेकडाउन के काफी करीब।
Few years. New figures at the top of the European Commission have weighed in on the EU's relations with the US and that incoming administration.
Of course, the USA is the most important ally for European Union when it
Friday morning, good morning. I'm Guy Johnson alongside Tom McKenzie. We are now an hour away for the opening trade. So what do you need to know? China hitting its 5% GDP target. Exports are booming. Stimulus is starting to impact the economy as well. Trump Treasury Secretary Pick Scott Bessent warns of a, quote, economic crisis if the 2017 tax cuts are not extended. And mining giants Rio Tinto and Glencore have held early-stage merger talks. It is unclear if those discussions are still ongoing, Tom.
Let's check in on the markets. The data dropping in terms of UK retail sales. A very brief look that I had looked pretty ugly, in fact, in terms of the top-line numbers, but we'll break the details down for you. European futures, after a very solid day yesterday, gains of around 1%. Looking to add to that just by 0.1% so far in the session. FTSE 100 looking to add around 0.8%, setting ourselves up for a solid day for the FTSE 100. The 10-year currently at 461. You've seen some moderation, some stabilisation around the Treasury story. And the pound at 121, below 122 with a drop of 0.4%. The pressure still on sterling. The countdown to the opening trade starts right now.
Friday the 17th, the last trading day of the Biden administration. Remember, there is a US holiday Monday. We are, therefore, really into a run into the Trump administration now. Today is the last day. Will it be a quiet day? Will it be a busy day? There's a lot to get through between now and the inauguration, I would argue. One of those is certainly the data that we are seeing dropping onto our screens right now in the form of UK retail sales. Looks a little soft to me. We've got a headline number of, this is the month-on-month number, ex-fuel, of negative 0.6. The headline number year-on-year, therefore, is 2.9. Tom, in terms of the month-on-month ex-fuel, these numbers look a little bit soft. If you include fuel, they pick up a little bit.
The pound is down 0.4% at 121. So there's a drop there. You do see the mark move when the data drops. That contraction is there, 0.6%. The expectation is that you'd see an expansion of 0.3%. This, for me, is maybe something of a disconnect. That the economy of the UK, yes, you have wages at relatively high levels, but there is pain in some parts of the sector. The interest rate story is there. To what extent is that weighing on the consumer now? And how's that going to feed into expectations? Already adjusted, of course, around the BOE. Is this going to compel them to rethink how far they have to go in terms of rate cuts? This is a consumer in the UK that appears to be feeling the pinch.
Absolutely. And you can understand why. Think about what has been happening in terms of the tax story, what has been going on in terms of the wage story. Wages have been relatively good, and there was an expectation that actually that would drive a consumer forward, but just uncertainty about interest rates, mortgages, all kinds of things at the moment weighing on the consumer, and that's starting to really show up post-budget in the UK data. I just want to flag something else as well. There's a line coming through. The PRA is announcing a delay to the implementation of Basel 3.1. Those are the banking regulations that we're all spending so much time talking about right now. Let's talk about China.
Yeah.
So the China data, 5%, that's great. This is, in theory, quite good news. It feels like it's been driven a lot by exports, though, which is obviously going to run into the Trump tariff story. But there also feels like there's a little bit of stimulus beginning to creep into this data.
That's the green shoots, if you look for it. Towards the end of last year, Q4, finally officials stepped up. They put stimulus at play. We've talked about the fact that it was a gradual ramp-up of stimulus rather than that big bazooka. It got them across the line in terms of that 5%. But as you say, the key vulnerability going forward is exports that could very well be hammered by additional tariffs from the US. The export market for the US has shrunk versus the previous Trump administration from 20% to 15%. That's down. Then the property sector, by the way, investment in property investment last year falling 10%, contracting 10%. That's the biggest drop since records began in terms of property investment. Then you have the demographic story as well. The other line coming through is that the population shrank again for the third straight year, and that gap is widening between China and India when it comes to population growth. That will be further pressure on the pension system and the ability for China to fund itself going forward.
Let's just talk about the green shoots for a moment. There is this voucher scheme that the Chinese are incorporating to try and get the consumer story going a little bit, to try and encourage people to go out and spend. I looked through the numbers a little bit earlier. There's clear evidence that this is actually starting to have an effect. There is a little bit of a consumer boost beginning to be generated by this, and it looks like there is the potential for this programme to be expanded as well.
So this is something that has been discussed by Scott Bessent in slightly different terms. He's been talking about the fact that this is an unbalanced economy. He and Treasury Secretary Janet Yellen are aligned on this. They have both said that China needs to focus on its domestic economy. Many mainstream economists say that China is overly dependent, of course, on the spend around infrastructure and exports. They need to be able to put in place that base for the consumer to spend. The voucher scheme is one step towards that. So, to your point, is this the year, and we can speak to Diana Choileva, who is really fantastic in terms of her understanding of the Chinese economy, on the ground often with policymakers. Is this the year when they go full bore on supporting China's consumer?
It would seem, if you are going to see significant tariffs, that would be the logical step maybe to make, and maybe devalue the currency as well, which is maybe something that we've also seen evidence of thus far. Talking of currencies, talking of what is happening with the US, the kind of the other side of this coin, Bessent, Capitol Hill yesterday, really solid hearing. He looked like he really kind of was kind of in control of the narrative in terms of what he delivered yesterday. The standout story comes through that he is very keen to make sure that the 2017 tax cuts are continued. He talked about an economic crisis at the back end of this year if that is not delivered upon.
Yeah, he sounded like there was a real sense of urgency on that front. I mean, they'll get it through, presumably, given that they have control of all three parts of the US government. But the way that he framed it as a potential economic crisis, if you don't extend those tax cuts, that he says will have the deleterious impact, negative impacts on the US economy. He also talked again about the independence. Interestingly, he was pretty clear the Fed should be independent. He was not dithering on that. So maybe whether that becomes a point of friction between him and Trump in the months and quarters ahead. But this was, to your point, a pretty solid performance. That was the takeaway. He seems to have sailed through this. He will probably get that final sign-off. And then we'll see what he does on the tariff front. He also said he doesn't think tariffs are going to be inflationary, ultimately. And interestingly, more voices are coming around to that view, that tariffs don't necessarily mean additional inflation in the US.
It depends. I think we'll find out beginning of next week. The inauguration is coming through. Apparently, the Trump administration, the president himself, elect, is lining up a whole series of announcements that are going to come through quite quickly. So are we going to get the gradual approach, or are we going to get the kind of shock and awe approach in terms of what is happening with this tariff story? We're on tenterhooks now. Basically, we're into the run. You've got MLK Day on Monday. The markets are going to be closed Monday in the United States, certainly the cash markets. So today, in some ways, the last trading day before we get to that. We do not have a statement this morning from Rio on the story that has obviously captured the mining world's imagination overnight, the possibility of a Rio-Glencore deal being talked about. We first reported it. It is in some ways, response to the size and scale of BHP. But it's interesting that these companies... Putting these companies together, incredibly difficult. All kinds of issues surrounding it from a regulatory point of view, also in terms of a portfolio point of view. Glencore's got a huge footprint in coal, which could be problematic as well. Is there a logic in putting copper assets together? I think maybe that is a more compelling argument. But getting such a deal over the line with such different cultures, such different footprints, fascinating. And do you really... Are mega mergers in mining, do they deliver for shareholders? It's interesting to see what is happening in terms of Rio's share price overnight in Australia. A little bit of weakness, maybe some concern coming through from investors, but no regulatory statement this morning, which I'm surprised about.
Glencore shares rising 3.6% on TradeGate. And this is something of a hark back to 2014 when Glencore made an original approach to Rio Tinto. To your point...
which way round is it? So the line is always that there's no such thing as a merger. So who's taking over who here?
Yes. Well, the copper assets... You know, this is one of the key pieces from the reporting from the team. The copper assets that Glencore actually has in Chile and the fact that Rio have been eyeing those could be key in that regard. But what do they do on the regulatory front? What do they do with the coal assets? And what do they do with the assets in parts of the Congo that Rio apparently have no appetite for operating in that kind of region? They have over 130 different mines around the world, Glencore. And then, of course, the trading business. Started as a trading business and then have added the mining on top of that, but now have about 130 mines. So are you spinning those off, selling them to private equity? There's all sorts of potential implications from this. But what it all comes down to, seemingly, is copper and expectation that desire for copper is going to continue.
I think there's a distinct lack of clarity around the story this morning. Our reporting suggests that maybe the talks are ongoing. We don't know at this point. Certainly, there was an early-stage talks, the set of early-stage talks back end of last year. The FT is reporting that they are over. So there's a distinct lack of clarity around the story. We definitely broke this story first, though, so I think it's going to be fascinating to see how ultimately this evolves. But it comes back also to China and the iron ore story and the industrialisation story and your comments about the consumer and that side of the economy being more important. So I think there's a definite China angle on all of this. Plenty to discuss as we head into the weekend. Lots of things to focus on what is happening in the fixed income market, absolutely front and centre. Andrew Jackson, Vontobel's head of fixed income, is going to be joining us shortly. Jessica Roswell, the European Commissioner for the Environment, Water Resilience and a competitive circular economy, that's quite the title, is going to be joining us a little bit later on. We'll try and hit all of those various remits. Max Kettner, HSBC's Chief Multi-Asset Strategist, is going to be joining us as well. We'll get his take on what is happening. How bearish, how bullish is Max feeling as we go in to the Trump administration? What else do you need to know this morning? The Israeli Prime Minister Benjamin Netanyahu says a deal to return hostages held in Gaza has now been reached. In a statement, he said government officials will gather later today to sign off on the deal. Netanyahu had previously accused Hamas of reneging on parts of the ceasefire agreement, risking its completion. The Gaza-based militant group says it remains committed to the deal. SpaceX has lost its Starship rocket during its 7th test flight, an unexpected setback after making steady progress with this program. Despite the loss, SpaceX successfully caught the rocket's super heavy booster in midair using giant mechanical arms. The cause of the loss is unknown, and the company says it will be going through the flight data to determine ultimately what went wrong. Incredible pictures. This thing is captured, the booster bit at least captured on the ground. And Bloomberg has learned that President-elect Donald Trump is planning to release an executive order elevating crypto to a national policy priority. Still under discussion for inclusion in the order is a directive for all government agencies to review policies on digital assets and pause litigation involving crypto. The order could include the creation of a national Bitcoin stockpile. So, Tom, they've got a whole load of Bitcoin. The reason for it is they basically taken it as part of investigations and judicial investigations. So they've got some Bitcoin.
They've got $20 billion of Bitcoin sitting in an account somewhere.
It surprised me a little bit. So they could make that into some sort of a national stock. But it's interesting that this is being pushed as hard as it is. It also seems slightly contradictory when you think about what is the other priority of this administration that Bessent was talking about yesterday, which is for the dollar to remain the preeminent reserve currency. In theory, you could argue that maybe Bitcoin is a threat to that. But it does seem as if the Trump administration, Trump himself, very much on board with the idea that the US should make progress here.
Gary Gensler is out, of course, so you'll have an SEC head who will be more favourable towards crypto. Coinbase executives from other platforms have been donating to the inauguration fund. It all seems to be lining up for more supportive policy for crypto, and Bitcoin's back above 100,000 today.
So it's back above 100,000. I just need to check the GIP2 on my Bloomberg just to see what is going on in terms of the move that we saw higher. Not a big move higher. So I just wanted to check the 2-day. So this sounds incredibly positive in terms of the fact that actually they are going to deliver upon this almost on day one, and it's going to be quite extensive in terms of the impact that it's going to have. Bitcoin, maybe already pricing this in?
A lot of optimism already priced in, but we were comfortably above 100,000 towards the end of 2024. Profit-taking at play, clearly. Bit of a surprise, arguably, when you make this a policy priority on a similar line to energy as a priority and maybe drilling and getting more oil and gas out of the ground. You're putting on a similar level with that. You have the regulatory changes coming through. It seems possibly this is being priced in, but maybe this is a story that kind of grinds its way higher through the weekend. But clearly crypto is now going to be set for further additional positive catalysts potentially in the weeks ahead.
But to your point, how much of that is already in the price?
There is plenty more coming up. We're going to hear from the details in terms of, the bank earnings. Wow, they've just been smashing it. US banks. To what extent does this widen the gulf with their European counterparts as well? European bank earnings later, of course. We're going to get the details on Morgan Stanley, Bank of America beating estimates as well, and the banks have been returning a lot of capital to shareholders, about $100 billion last year, and it looks set to continue through this year as well. Plus, we're going to hear from Reform UK leader Nigel Farage about his relationship with Donald Trump, Elon Musk, along with his party's plans as well, the plans for Reform UK that has arguably the wind behind its back right now. Up next, though, markets gear up, of course, for a new US Treasury Secretary, what he could mean for the dollar, as we've been discussing. We get back to the markets, get some views on where Bessent leaves us in terms of details around the policy agendas. If you have any questions of your own for our guests, send them to us on IB plus BBTV Go. This is Bloomberg.
The United States is not going to default on its debt. If I'm confirmed, the FOMC should be independent. I will be 100% on board for taking sanctions up, especially on the Russian oil majors. Americans are barreling towards an economic crisis at year end. If we do not renew and extend, then we will be facing an economic calamity. On CBDCs, I see no reason for the U.S. to have a central bank digital currency. I firmly believe that if confirmed, and with your counsel and support, we can usher in a new, more balanced era of prosperity.
As long as there are tax cuts. Treasury Secretary nominee Scott Bessent speaking at his Senate confirmation hearing yesterday. Let's walk further into these details and what Wall Street took away from what was said yesterday in Washington. Valerie joins us with the details.
Guy, it seems like the nominee for Treasury Secretary is very much in line when it comes to economic policies of President-elect Donald Trump. But very interesting to see from Wall Street that there was no discussion on Treasury issuance. Scott Bessent has been very critical of the Yellen years where she issued a huge amount of T-bills instead of extending out duration farther along the curve. We were worried he could perhaps say something about terming out the debt yesterday and that spooking the long end, spooking this Treasury curve steepening further, but he did not say that. He did go on to say that he supports Federal Reserve independence, supported tougher sanctions on Russia. He also had some comments to say about China and their unfair trade practices. Take a listen.
China is the most imbalanced, unbalanced economy in the history of the world. They are in a severe recession/depression. They may have minus 4% disinflation, and they are attempting to export their way out of that as opposed to doing the much-needed internal rebalance.
Exporting their way out of this economic slump in China, causing cheap goods to be dumped in the U.S. He is not a fan of that, perhaps overshadowing the fact he would be tough on tariffs when it comes to China. Watch out for how the dollar performs on Monday if we get a flurry of executive orders from Trump on that manner. But speaking of tariffs, we have heard from two policymakers recently that they are doubting the tariffs' impact on inflation. We heard from former Fed Governor Kevin Warsh, touted to be the next Fed chair, saying he doesn't see a significant impact on inflation from tariffs. We also heard from Fed Governor Waller saying he sees the same thing. Further interesting comments, though, from Waller that made this Treasury rally take another leg higher for the second day in a row. He said he does see the Fed cutting in the first half of this year and did not take, he did not take the March meeting off the table, meaning that March meeting for a Fed cut is still live.
Valerie, thank you very much indeed. Lots going on in terms of the Treasury market. Let's get some more details on what is happening here. Andrew Jackson, head of fixed income at Vontobel, joining us from Zurich. Great to see you, Andrew. Talk us through, was there a takeaway yesterday from the Bessent hearing that is useful for the fixed income trade? We're trying to figure out what is going to happen. We're trying to get a steer on what is going to come Tuesday. We're waiting for the inauguration. We're waiting for all the executive orders to come through. Was there any early indication within what Bessent said that you think changes the picture?
I think the key takeaway for me from yesterday and what we've seen over the last few months is that there is more uncertainty within markets than maybe markets are predicting. In terms of interest rate policy, in terms of tariffs, in terms of trading relationships, I think there is a high degree of uncertainty, and I don't think markets are pricing that in. We've seen over the last 3 years an almost unprecedented level of volatility in interest rate markets all around the world, in shapes of yield curves all around the world. And now we're starting to see major global currencies start to move apart from each other in terms of both their FX and in terms of their interest rates. I think it's just really, there's more uncertainty than we're used to. It definitely felt like he was trying to echo much of the rhetoric of Trump rather than being super laser focused on the economy.
In terms of that uncertainty, what do you think the range looks like? Let's use the US 10-year as an example. You've got Nomura out joining T. Rowe Price talking about the possibility of a 6% Treasury yield this year. We posit that 10-year US Treasury yields are still too low in relation to two of its key drivers, consumer price inflation and the fiscal balance. That's what Nomura economists are saying. They think 6%. What do you think the range is? Is it now 3 to 5? Is it 4 to 6? What do you think the range on a US 10-year is going to look like this year?
I think it's more like 3 to 6, which is a very, very wide range. It's a huge range. And that is symptomatic of the level of uncertainty that we see on that 10-year. A year ago, we were at 4.1. We're at 4.6 now on that 10-year. I think it's possible to get to 6. And I think it's nice that Nomura are actually making people notice the fact that there is a huge amount of uncertainty. The fact that that's their base case, I think that's a bit of a stretch, but I think we could get there. There is no doubt that we could get there.
So, Andrew, good morning. It's Tom alongside Guy. What is the trade then, given that uncertainty? Does the steepener trade on US Treasuries still play out this year?
I think the trade is not to try to trade. I think the trade is to have more medium and long-term views and to have a more balanced approach. So I think that trying to trade the short end of US Treasury curve over the last year and a half or so has been a really, really tough trade, and one should avoid it. But do you feel like 4.6 is quite a lot to be paid for 10-year Treasuries? I feel like it is. And the break-even on that, break-even on holding that, really does compensate you for the risk that we might get to 6. So I feel like that's the right trade, just to hold that and know that there might be volatility. But in the back of your mind, it's really nice to know that we might actually move quite far from that, and to position your overall portfolio cognizant of the degree of volatility that we might see and degree of uncertainty that we might see. So stay liquid, stay dynamic, don't sit on a sort of passive position, But I do think 4.6 is a reasonable entry point.
OK, so 4.6, you'd sit there on the 10-year in the US. What about 4.6 here in the UK? 4.67 on the UK 10-year gilt. Where are we in this story?
Well, I think the UK finds itself in a very different position from either Europe or the US. The UK is a much smaller economy. It's a much more international economy, much less domestic. I also think the confidence around the world about the debt sustainability is starting to be challenged. I don't want to get too much into politics, but I think there is an element of not fully trusting this new government in the UK. So I think that the US 4.6 is a better bet than the UK 4.6, 4.7. And I will continue to watch that very, very closely. For us, when we look at the UK, there's a big difference between the sovereign debt in the UK and corporate debt in the UK. And we really like corporate debt in the UK and bank debt in the UK, actually. Yeah. But the sovereign itself is much less predictable.
Andrew, where do you sit, therefore? The bank's kind of talking about 4 rate cuts this year, 100 bips. The market's at 50. Kind of which way does that spread close?
Well, I think somewhere in the middle. I think that that's the case with both the US and in the UK, where I think the market is probably being too irrationally both positive at times and negative at times. And I think central banks have signalled quite well what they expect to do. But I think the Bank of England, unlike the Fed and the ECB, is in reactive mode rather than proactive mode, and therefore has a lower degree of predictability.
Andrew, great to catch up. Thanks for stopping by to join us on the show this morning. Andrew Jackson, head of fixed income, joining us from Vontobel. Coming up, we're going to look at Donald Trump's impending return to the White House. What's it going to mean for the European environment? Jessica Roswell, Europe's Environment Commissioner, joining us next.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back. Happy Friday, everyone. 30 minutes from the start of opening trade, of course, this Friday. European futures currently pointing to modest gains of 0.1%, but you put that in the context of the rally that we saw yesterday for European stocks, and it doesn't look too bad. European 50 futures then pointed to gains of about 5 points. Here in the UK, the FTSE 100, we're looking at that as well in terms of the upside that could be coming through for the FTSE 100, despite the fact that retail sales came in pretty softly, much lower than the estimates, but that is building on bets. You would assume that the BOE can go further in terms of rate cuts. Over in France, the CAC 40, which again had a storming session yesterday, pointed to gains of 0.2%. S&P futures stateside after some modest losses yesterday, looking to add about 0.1%. Checking on bond markets as well, just briefly, the US benchmark 10-year is currently yielding you 4.61, stabilising in the session today. Not a lot of volatility in US Treasuries right now. Chris Waller saying that they could still be a cut in the first half of this year.
Let's turn to geopolitics. The Israeli Prime Minister Benjamin Netanyahu says the country's security cabinet will meet today to give final approval to a deal with Hamas to pause the war in Gaza. Let's go now to Tel Aviv, where Oliver Crook is now. Ollie, let's talk about this cabinet meeting because it feels critical to me. Is there enough support within the government, within the coalition, to approve this agreement?
Yeah, so Guy, listen, even within the first 24 hours of this agreement being basically announced by Qatar, by Donald Trump, by Joe Biden, it really reached some hurdles that we understand really revolved around some questions about technicalities, about who got veto rights in terms of who the Israelis were going to release from their prisoner exchange swap. Basically, the Israelis saying that Hamas had reneged, Hamas saying they were in favor of this. It seems that for the time being, they have overcome this issue. So Benjamin Netanyahu this morning and his government coming out, they were basically not having the security meeting until this issue was resolved. That issue has now been resolved. The key question now, Guy, is, as you say, in 45 minutes time, that is when the security cabinet meeting begins, and that is when this sort of debate will begin in the sort of eternal Israeli politics. The issue that Benjamin Netanyahu has is that he has been reliant for a very long time on the right wing of Israeli politics in order to keep this government afloat and to keep this war going and to really continue to prosecute it in the way that they have. They are very resistant to continuing to agreeing to any kind of ceasefire ceasefire that is not basically have Hamas's total destruction as the outcome. So this is going to be a key question. There have been questions about some of the leaders basically walking out of the cabinet and basically walking out of the coalition, basically trying in objection to agreeing on the ceasefire. The issue is this, that even if they do that, you still could continue this agreement and continue this government with a minority government. And there is so much pressure domestically here in Israel to get this deal over the line, to get the hostages back, that you could even get more support from other parts of the sort of spectrum of Israeli politics. But that is exactly the debate that we're going to see over the next 24 hours. But really the entire world and much of Israeli society really holding their breath that you can get this over the line and begin this ceasefire here on Sunday and the release of some of the hostages.
Yeah, we've just shown pictures of Ben Gvir there, who is on the right of the right when it comes to the extreme in Israel, and has admitted to having scuppered previous deals. He is part of that coalition, of course, so we're watching people like Ben Gvir in terms of how that unfolds today. What happens? Let's assume the deal gets through the cabinet today. What are the next steps then? What are you looking for on Sunday, and what beyond then, Ollie?
Yeah, so listen, the beyond then is a little bit harder to answer. Let's deal with the mechanics of how this deal is going to work in the sort of short term and what we know. There's plenty of it that we don't know about. But what we understand, if this goes forward, what you get initially is a complete ceasefire, right? That means basically pausing the war in Gaza beginning on Sunday. This would be for 6 weeks. This is the most durable, the more sort of comprehensive ceasefire that we've had since the very beginning of the war. And as the sort of as President Biden had outlined, this is really meant to be the beginning of an architecture of how to begin to end this war permanently in a durable fashion. What we will get on Sunday is the release of the first hostages. We understand there will be 3 women released. And what we understand is also the cadence of those releases will be 3 or 4 people every sort of 4 or 5 days over that 6-week period of time. On the other side, that will mean that the Israelis will basically liberate hundreds and hundreds, over 1,000 prisoners that they are detaining. What it will also mean is that the IDF troops, that this military that has been active, very, very active in Gaza in the central part, will move away from the most populated area, will move to the sort of eastern flank of Gaza. And critically, the other thing that this will allow is for huge amounts of aid to begin to continue to go into Gaza at a much, much higher volume. Remember, there are more than 45,000 people that have been killed in Gaza, and the conditions there have been very, very challenging. So as we await this cabinet meeting, as we await this sort of debate within Israeli politics, really for everybody from the Israelis and much of the world that's been observing this, really holding their breath that this can get over the line and begin on Sunday.
Oliver, thank you very much indeed. Oliver Crook joining us from Tel Aviv.
OK, switching focus now, because on Monday, of course, Donald Trump will be inaugurated, kicking off his second term as President of the United States. That has left policymakers, of course, in Europe bracing for a potentially volatile few years. New figures at the top of the European Commission have weighed in on the EU's relations with the US and that incoming administration.
Of course, the USA is the most important ally for European Union when it comes to security and also for the economical side.
I will try to anticipate cooperative relations in these fields. I think that both American consumers and European consumers, worldwide consumers, do benefit.
I still hope to convince the next U.S. administration that we have everything to lose from a collective trade war.
It's still, the geopolitical landscape and Europe as a geopolitical power in the world.
So we are very much looking forward to cooperation with the Trump administration.
OK, well, let's add another important voice on this conversation, on this topic. We are now joined for an exclusive interview with Jessica Roswell, the European Commissioner for the Environment, Water Resilience and a Competitive Circular Economy. Jessica, thank you for your time. It's a broad portfolio and competition is part of the mix. Trump has threatened stateside to rip up environmental regulation. Is there a risk that that improves the competitive advantages of the US versus Europe, that European companies, some of them strapped for cash, look to invest more in the US where regulations will be lighter than in Europe?
So I'm sorry, I do really have a problem with hearing. Can you repeat a bit of the question, because I didn't hear?
Yes, it's no problem at all. It's live TV. Sometimes we do have technical problems, so hopefully the team are working on this, Jessica. The question was about the competitive landscape in Europe versus the US if Donald Trump does indeed rip up environmental regulation, which he has suggested he will do. Does that make the US a more competitive environment for our companies, for companies looking to invest, versus versus Europe? Is that a risk?
I would say that for me in my work, I'm very happy to be here, of course, and I'm looking forward to working with the environmental questions on the European Commissioner. And what I'm focusing on is also how can EU do our work and how can we reach our goals and how can we be more competitive. That is what I'm doing, and that is also something that I think that we have a good opportunity also to know. But in that context, we know that we have a job to do, and I will, of course, see to that we try to be more competitive when it comes to a lot of different matters.
I guess specifically the question is, how do you balance the need for environmental regulation with that desire to increase and ramp up investment in a Eurozone economy that is stagnating?
It's a very broad question because, I mean, we all know what we need to do when it comes to environmental adaptation due to a lot of things, due to climate change, due to what we also what humans had done to the environment. So I would say that one thing that we did a lot of things last mandate within the EU. We made decisions on the Green Deal, and now it's up to us also, and a lot of my work will be to implement the legislations that we did. And when it comes to the competitiveness side of that, I would say that it's also one thing that a lot of us work with is the simplification. How can we do this as simple as possible so both people, farmers, businesses can actually follow the legislations that we have? And of course, one thing is, of course, financing and how can we fund this? That is one thing that I will work on.
Commissioner, sorry to continue the conversation along these lines. Is the environment more important than growth when it comes to what the Commission is doing right now?
And I don't think, for me, these are two sides of the same coin. I mean, we need to do both. It's absolutely for security. We know it. We know we need to do both, and I think it's an opportunity for EU also to do both. We have a lot of businesses that are on the forefront on doing the climate change, the green change, the environmental focus and investments in that. So that is also a business opportunity when it's, for example, when things that I have in my portfolio on the circular economy or the bioeconomy. So I don't think it's a contradiction between the both.
OK, let's move on. Is water too cheap in Europe for investment to flow into this space? Do we need to make water more expensive for investment to come to it and to price this asset correctly?
That's a good question. I would say that I'm very happy to be the first commissioner who have water in my title. It's one way to show that President von der Leyen is very eager that this is a priority for EU. And yes, we know that water is a huge challenge for Europe and for the globe, of course. Because the situation for water is a problem, both when it comes to quality, when it comes to quantity, when it comes to a lot of things. We know sometimes we have too much water, sometimes too little. So, is it too low? That's a question that I don't think that I can answer. But I would say that we, as politicians, policymakers, and also businesses and consumers, need to think about how can we use water more efficiently. But we also, I'm very happy to look into all of these details because it's a very broad issue to handle. It's not only the quality and quantity, it's a lot of other things. But yes, we need to treat water in a different way. We have taken water for granted for a long time, but now it's time to really think about it as like energy, something that we need to care about and how we use it best.
Commissioner, on energy, on the transition, on supply chains, on a relationship with China, to create that domestic economy and supply chain resilience, is there a need to allow more mining in Europe of those critical minerals to ensure that there is that capacity for self-reliance when it comes to some of these supply chain questions?
So we know that the demand for critical raw material has increased very much the last years due to a lot of things, due to digitalization, due to the green transition. And we know that demand will increase even more. So we need, of course, have minds also in the European Union, because we also need to be resilient ourselves. And always bear in mind that it has to be an environmental high standard doing. So that is why one thing that I think is very important for me and for others also to look into, and how can we increase the secondary critical raw material. Now we know from example the Mr. Draghi's report that here Europe and the world has a lot of potential. The use of secondary critical raw material today is too low, but if we could have the possibility to use it more, it will both increase the amount of critical raw material and hopefully also lower the price. Today we have a lot of problems when it comes to secondary critical raw materials, though, because virgin material is not too cheap, but it's cheaper. But we have a lot of problems when it comes to the infrastructure, the techniques, and a lot of things. And the demand for secondary critical raw material is too low. So, but here, from my point of view, it's an opportunity that we cannot miss.
OK, an opportunity that cannot be missed for the Eurozone, and the question, of course, of implementation going forward on some of these issues. Jessica Roswell, the EU's Environment Commissioner. Commissioner, thank you for your time. And sticking on the mining story, coming up, mining giants Rio Tinto and Glencore have held early-stage merger talks. We already have some pre-trade movement on the shares. It could, if the deal is finally finalised, big if, of course, could be one of the biggest, if not the biggest mining deal in history. That is part of the stocks to watch. Coming up next, this is Bloomberg.
European futures pointing a little higher. We're 12 minutes away from the markets opening here in Europe. The FTSE's up a little bit more. The reason for that actually is maybe some bad news. Retail sales out of the UK this morning driving sterling lower. You factor that back into what are you going to see in the FTSE 100. You've also got this mining story. We'll come back to that a little bit later. Let's talk about the broad picture, though, we're seeing in these markets. We're joined now by Markets Live Executive Editor Mark Cudmore. Mark, today is the last trading day of the Biden administration. Then we get a long weekend in the United States. We get the inauguration and Trump takes over. How much risk is there for markets between now and then?
Between now and then, very little. But when Trump obviously takes power, I think there's a potential for immense moves. We've been having this debate recently because obviously previously you would not really have cared about inauguration days. Even in Trump's first presidency, this was not a big market mover. But he has vowed to sign many executive orders in the first day, potentially hundreds, according to some people out there. Now, it's what he signs. There is just a massive dispersion of views. And that means it's quite interesting. Even theoretically, if Trump took no executive orders in the first day, that would actually be market moving right now because there is so much of the market that have big expectations for what he might deliver. But so the range of expectations out there is massive, which means whatever happens on Monday afternoon in the US, Tuesday morning in Asia is going to be market moving. It is going to be a volatile start to the week. Now, whether it continues being volatile depends on what is ultimately delivered or not.
The S&P is up about 56% during Biden's term, 4 years. So we'll see if Trump can best that when he takes over, of course, the helm from Monday, Tuesday. Mark, when it comes to the China data, the markets seem to kind of look through it. The GDP number hit the target. There's some big challenges still, particularly on real estate, particularly the demographics of China.
Yeah, the China story has not really changed. Today, the data was very good, and I thought it was interesting that no one wanted to care about it because it was very good. It would have been a much more talked about story if it was really, really negative data. We know that the China story is structurally very problematic. They're not going to, the real estate story is going to be one that's going to take years to turn around. They're not going to fix that quickly. I am in the camp, and that's a very small camp, that believes that the government has got the message and they're taking major steps and that they have stabilized the situation, that the market will do better this year as a result. That does not mean it's a structural bullish story suddenly. It does not mean the economy is suddenly going to run away in a very strong performance. What it means is that markets can do slightly better this year because the government realizes the problem and is doing what is necessary to stabilize, not get a big new bull market.
Sales sterling this morning. Retail sales was weak.
Yeah, look, the data out of the UK is just absolutely terrible at the moment. Yes, sterling should probably suffer because the data has been so poor this week. And I think what's going to happen actually is that, you know, while obviously this increases rate cut bets from the Bank of England, sees front-end yields lower, I'm not so sure that long-end gilts do well out of this. I think that the data has been so poor, it's problematic for the government's budget plans, which again sees maybe more pressure come in on long-end gilts later on after we process this data. So this is probably going to be yield curve steepening. And ultimately, that stress on the UK bond market isn't going away, which means stress on the sterling is not going away either.
Yeah. So the cut being almost fully priced in for the Bank of England for February, 92%.
But the market's still only around 2. The bank's around 4. You've now got members of the MP.
67 basis
so we're
points.
just north of 2.
Yeah.
The bank's signalling 4. Taylor, I think, was signalling 6. So the gap between the market and where the bank potentially could be getting wider. You could argue, like, if we get north of 50, that maybe we're beginning to close that gap. But certain dovish members are now beginning to push north of 4 in terms of what expectations look like.
Mark, where do you think the BOE should land on this? I mean, Blue Bay Asset Management, Mark Dowding was telling us that inflation is going to get worse from here for the UK. Does that constrain a Bank of England, or does their focus now shift to what you say is the terrible data of this economy?
The inflation data absolutely could constrain the Bank of England. I think the way you've got to look at this is in a relative value play to the rest of the world. You know, back in November, we talked about the need to kind of tighten in the rates divergence between the Bank of England and the US. We've seen some of that. But I still think the fact is that we're pricing in, you know, a really sustained divergence in yields between, say, for example, Europe and the UK. And I think that's not likely next year. Now, it is hard to know what Trump's going to deliver next week. And that's going to really play into the global inflation story, the global growth story, the global trade story. Everything is going to be changed by what he delivers over the coming weeks. And that means rather than having an outright view on the Bank of England pricing, I prefer to kind of say that I think that Bank of England, the rates pricing path in the Bank of England will end out converging a little bit closer to Europe over the next year. I'm not saying it's going to close that gap entirely. So either that might be a world where, you know, European rates need to go higher, or it's a world where UK rates go much lower to get back down to Europe. But having an outright view in any country at the moment is hard before next week.
That's a really interesting call on a potential convergence between Europe and the UK as you look at 460 on the 467 on the UK gilt versus 250 on the German Bund, so more than 200 basis point spread. We'll see if that spread narrows as you suggest. Mark Cadmore, Markets Live Executive Editor, thank you. Let's get a check on some of the stocks that could be on move. Bring in Joe Easton from our equities team. Joe, happy Friday.
Morning, Tom. Happy Friday. So absolutely massive news in the mining world overnight. We've got reports from Bloomberg saying that Rio Tinto and Glencore have held early-stage discussions around a merger. Now, we did see a little bit of weakness in Rio, which also has Australian shares, and also we saw a gain in Glencore. Not much trading on the ADR in the US, so bear in mind we might see a bit of a move higher on that one today. Glencore, actually the outperformer since the pandemic. But JP Morgan writing on a note that this will put focus back on the rival Anglo-American, which previously had a takeover bid from BHP. That one in focus, as well as those other two companies. Then in terms of Schroders, reports of job cuts at the company also coming from Bloomberg. Now, this stock has been weighed on by its heavy cost base, so potentially that might be seen as a way to turn around the share price for the asset manager. In terms of Smiths Group in the engineering world, we've got reports that an activist investor is looking to break up the British company. The stock recently hit a record high following some positive sales results. That one could be in focus in London as well.
Joe, thanks very much indeed. Keep an eye on maybe UK retailers as well on the back of the data we've seen this morning. Keep an eye on the banks as well on the back of the PRA announcement on Basel. The opening trade is next. This is Bloomberg. Friday morning, good morning. Last trading day of the Biden administration. We're a couple of minutes to go until the opening trade here in Europe. A little bit of downside pressure maybe coming from this chart. White line is where Europe finished. That's where the US finished. A little bit of a fade at the back end of the session yesterday. in the United States. Maybe that gets priced in this morning. Futures are actually kind of fairly flat. London is the exception. There's a lot going on in the London market this morning. You've got the banks with the PRA story. You've got what is happening with the retailers with the poor retail sales data as well. You've got the mining story, which you need to fold in as well. Plus, you've got to think about what is happening with the pound, which is going down on that retail sales story. So a little bit more upside maybe being priced into FTSE 100 futures this morning. CAC's had a decent day yesterday. We continue that today, up by 0.4%. The 50's up by around 0.3%. Feels like it could be quiet, though, into the inauguration, into Tuesday. Remember, the US is out on Monday, so basically this is the kind of the last time to set up for the Tuesday session, which could have already seen significant numbers of executive orders being signed by Trump, Tom.
Yeah, Trump's telling, according to some reports, saying that he's got 100 executive orders up his sleeve. In terms of some of the stocks to watch today then, Guy nodded to some of these. The retailers, of course, on that softer retail data. We'll see to what extent that poses a challenge for those stocks at the open. Miners, of course, and focus on that potential deal between Glencore and Rio. So we're watching both of those stocks. Rio as well. Glencore called up on the back of that story. Smiths Group under pressure from an active investor that has a stake of about 2% in Smiths. It's an engineering company, and the US activist investor Engine Capital is calling for a breakup of that business. So watch that stock as well at the open. Guy.
Tom, Stock 600's up around 1.7% over the last 4 trading sessions. Do we continue that into the Friday session and have a really strongly positive week? Short term, certainly markets may be feeling a little bit better right now. Time for the opening trade. Let's show you what is going on. Let's give you some numbers. FTSE 100 out of the gate up 0.2%. IBEX is up by 0.3%. We'll see what this rally looks like and how much pace it can gather. I'm really interested in the component parts of the FTSE 100 today to see exactly what is going to be the dominant narrative. Is it the retailers? Is it the banks? Is it the mining stocks? Look at what's happening with oil as well. Let's fold that back into what is happening here too. You've got the Stock 600 up by 0.2%, but as you can see, the FTSE's up by nearly 1% already at the get-go this morning. The CAC 40 continuing its run yesterday. Luxury was a really big theme yesterday. That has maybe continued today. We're up by around 0.6%. We'll wait for the Swiss. We'll wait for the Germans. Tom, what's going on with the sector story?
Basic resources at the top of the list right now. So gains of more than 1%. Glencore is certainly a factor there. Energy, as you say, looking at 4 straight weeks of gains for oil prices. Above $80 a barrel on Brent right now. Energy as a sector is up 0.8%. It's now the third biggest gainer across your sectors. Utilities is near the top as well with gains of 0.8%. On the downside today, at least for now, we'll see how the pricing comes through. Tech is down 0.5%. Travel and leisure also just marginally in negative territory. But it's basic resources that are currently leading the charge then, Guy. On the FTSE 100, you do have miners like Glencore now up 2.5%. The house builders as well. This will be linked to ramped up bets that the BOE will have to go further with the rate cuts. So they are benefiting on that. Taylor currently up 2%. Persimmon also gaining 2%. And by the way, Anglo-American going back to the mining space also gaining around 2%, Guy.
You do wonder whether Anglo's back in play. You put that kind of story back on the table, the mining consolidation story, and you do wonder whether Anglo is going to be under pressure. The FTSE 100, let me just go back to the FTSE 100 on my screen. The FTSE 100 has got 96 stocks up this morning, 3 down and 1 unchanged. It is a positive picture. Miners are up. You've got, as you say, Smiths on the rise. There's also the banking story that looks like it's getting a little bit of a boost here this morning. Barclays is up by 1.5%. So you're certainly seeing that narrative coming through as well. You've also got the pound lower, so that's a factor you want to put in. But actually this morning, a fairly decent mix in terms of the domestic, non-domestic stocks moving higher for the FTSE 100. In terms of the Stock 600, what are we seeing? It's actually a very similar picture to what you've got in London. Smiths, Glencore and Tain are the biggest gainers on the market this morning. Some of the shipping stocks are showing a little bit of weakness this morning. But on the Stock 600, the breadth is pretty positive as well. 502 up, 85 down, 12 unchanged.
Linking to what we're seeing in the home builds in the UK, yields down then 5 basis points at the front end. The 2-year here in the UK, 4.32 right now on the gilt 2-year. The 10-year, 4.62. Yields also lower by 5 basis points. So across the curve, you're seeing money moving into the sovereign debt of the UK. Yields down, price up. And that is one of the factors leading to the upside that you're seeing in terms of the home building. So let's get more in terms of the market analysis then. Max Kettner standing by. Guy, you're going to bring him in.
He is. Is he bearish? I'm trying to think of the last time I can think about Max Kettner being bearish. Did I misread your note this morning?
No, I think we were tactically quite cautious because we were entering what we call this danger zone on rates, so yields ever going higher. And that, of course, was sort of threatening, okay, if we get any kind of more hawkish data, CPI a bit above expectations or retail sales above expectations, are we going to move to a world where the market will have to price in even a higher probability of rate hikes for next year, or even perhaps push it back into 2025 and see a probability that the Fed may already have to hike this year. And that, of course, equity spreads, risk assets overall don't like that at all. We've always got to remember, for risk assets overall, it's pretty binary. And we've learned that in the last 2.5 years, right? We all have always these conversations around, how high of yields can we have until equities go down? The reality is, it's so simple. It's like, well, as long as they cut, it's fine. We're all happy. It's like, yeah, but instead of 7, it's now 4 cuts. I'm like, yeah, whatever, fine. But it's really the moment when we go, oh my gosh, they may not be cutting. They may actually hike. We've seen that in the last couple of weeks.
Are we still at that point, or do you think that point has gone?
I think that point's gone
away.
The point's gone, right, in the last 3 days.
So your risk on now?
Yeah, I mean, we've never really changed. All we've really said was, okay, now is the point where you probably want to put on some hedges. You want to be like, you want to put on a Russell short for a month and be like, oh, if this thing really, goes towards 5%, if 10s really go towards 5%, we can see another couple of percent down. But it's not really the time to say, oh my gosh, I need to be properly bearish now. Because always remember, with yields, the issue with yields is it's sort of self-defeating. So what we call that danger zone, it's not something where you go in and then you'll be rattled for months and you'll be like, oh my gosh, this is never going to end. No, it's kind of self-defeating, because you go in and as yields move ever higher, obviously what we have is people, you get more and more people really scared about the impact of higher yields, the impact of potential rate hikes on growth, on risk assets. Equities go down, VIX goes to 30, 40. And what do? Well, you buy bonds to hedge against it, and yields go down again. So by the very definition, it's all kind of self-defeating.
One of the big corporate stories at the moment is the Bloomberg reporting about a potential tie-up between Rio Tinto and Glencore. Just to get into some specifics around corporates, there's a line crossing right now on the Bloomberg terminal. Rio Tinto, Glencore talks said not to be currently active. Again, this was Bloomberg reporting that they had considered a tie-up that would have been the biggest deal in mining history. The line crossing just in the last minute or so, Rio Tinto, Glencore talks said not to be active. Miners are up as a sector in the UK. The FTSE 100 is gaining again. A solid session for the UK. Yields are down. Max, do you buy the UK?
Globally, no. I'd still be buying, the US over pretty much everything. I know it's super consensus, US exceptionalism and all that. I'm sure you hear that about 100 million times a day, and you're like, oh, great, Max is going to tell us the same story that we've heard about 10 times already today.
Which parts of the US, then?
I think its banks are really great.
Because you're going short Russell 2000
yeah.
right now. Okay.
Look, the Russell is an incredibly good short. Because the problem with the Russell is, historically, you've got all these materials and industrials, and it's all this early cyclical stuff. So you'd think, hey, if the US is really doing well, you want to buy the Russell because it's geared towards domestic growth. The reality with the Russell nowadays is you've got 42% of the companies that sit on negative earnings. You don't want to buy that. So if you're wrong on growth, you get absolutely smacked. And the issue is that almost 40% of the debt in the Russell is also on a floating rate. So think about the two tail risks that you've got. You're either going to be wrong on growth, and growth is not going to be as strong as you thought, or you're going to be wrong on rates, and growth is much stronger than you thought, and yields are going higher. So in both of those tail risks, you're going to lose out with the Russell.
OK, that's the call on the Russell. What do you buy then? Don't say Mag 7.
I buy Mag 7. I wasn't going to say it, but just because you said don't say it, I was going to say it.
Would you increase your holdings in Mag 7 right now?
Yes, I think so. I think, look, the reality is we are seeing already productivity gains in the S&P 500 driven by AI. So I know there's a lot of skepticism. I know there's a lot of skepticism around valuations, around monetization. The reality is when you look at the S&P and you look at revenue growth, right? You look at revenue growth in the US, you compare it to cost of goods sold growth in the last year and a half. There's actually been a gap opening up between those two. Those lines usually follow each other, right? Which kind of makes sense. You sell more while your costs go up proportionately. Right now, in the last year and a half, you've seen a wedge opening up between those two. So you're already seeing that actually companies are starting to sell more, but without the proportionate increase in costs. That is already productivity gains.
Are earnings going to be good? Yeah. Are earnings going to match expectations?
Yes. Oh, yes. I think, with earnings, we have this perpetual thing, at least for the last 2.5 years, where consensus says, oh, yeah, I get it, last quarter was better than expected, but I'm not going to change my full-year forecast, so therefore the next quarter has to be worse. The setup that we've got right now for Q4 is that virtually all the sectors are down quarter-on-quarter in terms of expectations, except for tech. And let's bear in mind that tech is mostly an NVIDIA and Mag 7 story and a story around the Christmas bump. Because we always realize on the 23rd of December that, hey, I haven't bought my Christmas present yet. How about an iPhone? It's like it's this sort of Christmas seasonality that we've got in tech.
On your Christmas list. That sounds fantastic.
Yeah, I got a lawnmower. I got a lawnmower, as you know. No? But I guess
you give yourself the lawnmower?
I did. Well, no one else would do it.
No, perfectly reasonable Christmas present in my book.
Is it? Okay.
I did throw the hint on Guy, but he didn't give it.
I didn't. No, I knew you were going to get one, so I didn't bother.
No, but on the earnings, look, the overall index level in terms of earnings expectations is virtually flat quarter on quarter. When we look at year-over-year earnings, of course it looks high, but that is because the last 3 quarters we've seen growth. So it's just base effects. The reality is that virtually all the sectors, consensus says, oh yeah, they've gone down quarter on quarter. As long as that pattern on earnings expectations continues, that you got positive surprises during a quarter, but then consensus says, that's fine, but it doesn't change my picture of slight skepticism, so therefore I need to revise downwards the expectations for the next quarter, and you head into the next season with revised expectations down. You're going to play this game in perpetuity. Once that pattern stops, once consensus really says, right, we acknowledge we've been wrong and earnings are genuinely strong, we're not going to revise our expectations. That is the point then where you can fundamentally be bearish. Up until that point, it doesn't work.
Fundamentally be bearish. At some point that will happen, I promise you.
Are you fundamentally... You're not fundamentally bearish?
No, not at all.
Well, not at all in the US.
No.
What about the Eurozone, though? I mean, if we get to... We're on 102 right now, euro-dollar. You get to parity, is a call from some. If we get there, how beneficial is that potentially to the corporate earnings?
It's very beneficial.
Being overlooked by the markets?
Yes, it is.
Cheap euro, the benefits for corporate earnings in Europe.
I definitely think it is, because when you look, for example, at the DAX, or look at last year, look at GDP growth, actually globally, look at the largest countries and the largest indices in the MSCI world, and look at it versus GDP growth. Look at Europe. Look at the largest European countries versus equity performance last year. The R-squared, the explanatory power, the correlation between the two, 0. Absolute 0. So if you had been last year like, oh my God, Germany, it's looking cyclically so stretched and blah, blah. Well, the equity market was 20% up. Why? Because it's got SAP, it's got Infineon, it's got Rheinmetall, it's got Siemens Energy. So it's got all those companies that have really high shares of foreign revenue. So they're looking at this now and they're like, I'm...
Today, Israel is set to approve a Gaza ceasefire and hostage release deal.
SpaceX's Starship launch explodes just minutes after launch.
How a mental health center in Mexico is grappling with extreme violence against migrants.
And what we're watching for as the Australian Open gears up for its final week of tennis. It's Friday, January 17th. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes, every weekday. I'm Christopher Waljasper in Chicago.
And I'm Tara Oakes in Liverpool. Israeli Prime Minister Benjamin Netanyahu's office says cementing the Gaza ceasefire deal is imminent, following an 11th-hour hold-up on Thursday. The cabinet meets today to give its final approval to the truce and hostage release plan brokered with Hamas. In Gaza, Israeli airstrikes are ongoing, with Palestinian authorities reporting at least 86 dead since the deal was announced. And in Washington, D.C., journalists who are outspoken critics of American support for Israel lambasted U.S. Secretary of State Antony Blinken during his swan song press conference.
Criminal! Why aren't you in The Hague? Why aren't you in The Hague? Why aren't you in The Hague?
A Pakistani court has sentenced ex-Prime Minister Imran Khan to 14 years in jail in a land corruption case. That's according to a local broadcaster. Khan, who had pleaded not guilty, has been jailed since August 2023 while fighting dozens of cases.
Rudy Giuliani has reached a legal settlement with 2 Georgia election workers that he falsely accused of helping steal the 2020 election for Joe Biden. He's agreed to stop defaming the workers, and in exchange will keep his homes in Palm Beach and Manhattan. American filmmaker David Lynch has died at the age of 78. Known for his Oscar-nominated films like Blue Velvet and Mulholland Drive, as well as the TV series Twin Peaks, Lynch was considered a master of surrealism and one of the most innovative filmmakers of his generation.
The chief executive of TikTok plans to attend Donald Trump's inauguration. 2 people familiar with the matter told Reuters. Shaozi Chu has a seat of honor on the dais, typically reserved for VIPs. But no news of such special treatment for his social media app at this stage. The platform plans to shut its US operations just hours before the event, when a federal ban is set to take hold. And an invitation, but no RSVP yet. Former President Jair Bolsonaro's defense team has filed a late request with Brazil's top court to urgently reconsider the decision to bar him from traveling to the US to attend Donald Trump's inauguration. Bolsonaro faces criminal charges for allegedly plotting a coup in the wake of his 2022 election defeat and had his passport taken away. Data shows that China's economy matched the government's ambitions for 5% growth last year, but in a lopsided fashion. That means complaints from many about worsening living standards as Beijing struggles to transfer its industrial and export gains to consumers. The unbalanced growth raises concerns that structural problems may deepen in 2025, when China plans a similar growth performance by going deeper into debt in an attempt to counter the impact of an expected US tariff hike under Donald Trump.
5, 4,
2 private space launches in just 24 hours.
lift off.
1. Jeff Bezos' Blue Origin early Thursday morning, successfully launching its New Glenn rocket into space for the first time.
Engines continue to perform well, now passing through max Q.
And last night, SpaceX's 7th Starship prototype launch, which exploded around 8 minutes after takeoff. Airlines altered course to avoid fiery debris that could be seen streaking through the sky as the 37-story rocket broke apart.
As we were checking in on the status of the ship, at this point in time, we can confirm that we did lose the ship.
SpaceX engineer Kate Tice, just minutes after the launch.
The booster came back for a successful, the second ever booster catch at the launch tower.
The Federal Aviation Administration is likely to open an investigation into the failure that could delay Musk's goal of launching at least 12 Starship tests this year.
Booster FTS is saved.
A warning, this next story discusses topics of sexual violence and trauma. At a Doctors Without Borders facility in Mexico City, children play near an ofrenda covered with marigolds and images memorializing deceased friends and loved ones of staff and patients. The medical center is caring for the children's parents, victims of sexual and physical violence along the treacherous migration route aimed at reaching the U.S. border. And as our reporter Cassandra Garrison learned, the road to recovery from such traumatic violence is its own journey.
This care center is one of the only facilities of its kind that does offer help to migrants who have experienced extreme trauma due to severe violence against them, either in their home countries or during their migration route through Mexico. It's focusing on healing people psychologically. It offers support for sexual violence, beatings, kidnappings, extortion.
Me separaron de mi familia.
One of the Venezuelan women we spoke to at this facility who's undergoing treatment, who asked not to be named for fear of retribution, told us about her experience with her family crossing the Darien Gap. Of course, she was well aware that there was violence, and because of that, they decided to dress their young daughter as a boy.
Pero nosotros la teníamos vestida como niño.
They'd actually made it through the worst of the jungle, but there was actually a group of armed men waiting for them, and these men separated the women and girls from their male family members, and they were able to trick those gunmen into believing that their daughter was a boy, and she was able to stay with her father and luckily wasn't harmed. But this woman was then ordered to remove her clothes.
Y me resistí, no quería.
She was sexually assaulted by multiple men to the point where she told me she actually just disassociated from her body because what she was enduring was so incredibly traumatic.
Me fui, me trasladé.
And she's been really trying to work through this trauma, which provoked panic attacks and issues with her heart, and she was hospitalized at one point because of this trauma that she'd endured.
Now, how frequent is this sort of violence?
It's hard to find data on this because most cases of extreme violence suffered by migrants typically goes unreported. Doctors Without Borders has noticed in the last few years violence against migrants increasing, and the specialists we spoke to attributed that to a rise in women and children migrating.
As the Australian Open enters its final week next week, the year's first major tennis tournament has already dealt some surprising upsets and given fans a lot to be excited for in 2025. Nick Mulvaney is our Asia-Pacific sports editor and has been covering the Open. Nick, in the men's tournament, several young up-and-comers have really outperformed expectations. What's going on there?
Well, I think on the men's side, it's mainly been about teenagers beating highly seeded players, with American Lerner Teen beating world number 5 Daniil Medvedev in 5 sets. But that was only the third of 3 big upsets that we've had so far here. We've had Brazilian João Fonseca, who took out 9th seed Andrei Rublev, and Czech Jakub Mensik, who knocked out 6th seed Casper Ruud. So new blood is coming, and it's been very exciting.
And on the women's side, the age upset looked a little different, right? The oldest player, German Laura Sigmund, upset 5th seed Zheng Qinwen.
Yes, that was a bit of a shocker, because Zheng Qinwen came in as a bit of a title hope here. Yeah, and she went down to a 36-year-old, 37-year-old. So that was a remarkable turn of events so early in the tournament.
So what are you excited for in this final week?
Well, I think the big one for me is whether Novak Djokovic can get his 25th Grand Slam title. That would make him, without doubt, the most successful Grand Slam tennis player of all time. I'm really interested to see how Coco Gauff goes. And the other one for me is Naomi Osaka, who won this tournament a couple of times, then went off and had her kid, and she's come back in. She didn't play particularly well last year, but she's looked pretty good this year. And if she gets back to the form that she was showing 4 or 5 years ago, she's going to be pretty hard to stop.
It's Friday, so a recommended listen from us today. Check out our special episode set for publication tomorrow, all about Donald Trump's inauguration, what to expect from the day itself, and the immediate aftermath.
For more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favorite podcast player. We'll be back on Monday with our daily headline show.
lot of questions are also big tech's role in this, right? When it comes to the Apple's App Store, when it comes to Google.
100 million using daily, that's a lot of hours that will free up starting Monday. On average, a typical user spends more than an hour on TikTok on a daily reverses in the foreseeable future.
Rohit, talk to me a little bit about the ripple effects across the tech sector, not only from who is positioned maybe to gain.
Such apps kind of vanish into thin air in the next few months or so. So probably it's still Instagram, YouTube, and then maybe companies like Snapchat, Reddit, and Pinterest to gain from.
Forward, we want to bring in Max Kettner. He's HSBC's chief multi-asset strategist. And Max, I think the big question surrounding here is on volatility and what exactly investors need to know or expect here in the coming months.
Too extreme. It's neither is inflation really going to die away very quickly. So it's not going to go anywhere near where we were in the 2010s, nor is inflation really on a massive brink on breaking out to the upside. But the market, of course, that pendulum swings. The S&P 500 is a little exaggerated when we look at the foreign revenue exposure, for example, of S&P 500 companies. That, of course, is lower than, for example, in Europe. But even in the Eurozone, look, for example, at the struggling German economy. But then you look at German large caps and some of those mega caps in Germany. They've got their largest asset base actually in the US, not in Germany, not in Europe, where you might think that they're going to be hit by tariffs. So we're not really factoring it in that much. To me, really, what matters much more is what we've just heard from the IMF. That growth globally is on a better footing than we thought. Clearly better than we thought during the summer last year. What matters is the earnings delivery. What matters is, the sort of binary Fed outlook. Are we going to go from cuts to hikes, or can the cuts continue, however more gradual that they may be compared to what we were pricing during the summer, but it's still going to be cuts. That is the much more important thing. I like to compare it to 2019. Remember, in 2019, we were faced, and markets were faced with sort of perennial trade tensions as well from the first Trump administration, and still the S&P went up by more than 30%, the Nasdaq went up 40%. Why? Because the Fed was making a U-turn. The Fed in January said, oh, you know what? We've overdone this. We got to stop QT. Bank reserves are too low. We need to pump in a bit more liquidity towards the end of 2019, and we need to cut rates. And that was much more important than the ins and outs of the daily politics.
Max, I know you were looking into whether or not maybe now might be time to up the exposure to European equities and how exactly the U.S. equities compare and stack up versus European equities. Where do you stand on that strategy?
Yeah, I don't think it's an either or between Europe and the US. I don't think it's okay, let's get out of the US and go back into Europe, or a sharp overweight US over Europe. I think it's actually there's a case to be made for buying both at the moment, because particularly what should be working going forward in the first half of this year within Eurozone equities in particular are those export-sensitive companies, are those export-sensitive equity markets like German large caps, like the DAX, that is deriving a lot of its revenue from foreign sources, where the lower euro, the weaker euro, clearly should start to help Eurozone earnings, and particularly sort of those mega cap earnings in Germany, for example, but also overall in Europe. Clearly, when we look at companies that derive most of their revenue from foreign sources, or from the US in particular, that weaker euro compared to the dollar really should start to matter and should be underpinning a bit of earning strength in the Eurozone.
All right, Max, great stuff. Thanks so much. Let's get to some of the trenders in today's market. I'm joined at the desk by our very own Josh Schaefer. You can scan the QR code below to track the best and the worst performing stocks here of the session. There we have it here. All right, let's talk more broadly speaking and take a macro view. The S&P right now, as we look ahead to President Trump's inauguration on Monday. When you take a look at the S&P 500, historically, the index tending potentially to rally in the 3 months following a presidential inauguration. This is according to data coming out from Jefferies. So if this trend plays out, would it be a relief here for investors who saw that the post-election rally stall out at the end of 2025, end of 2024, the start of 2025? I guess how much should we really be buying into this theory? Historically speaking, it's obviously always hard to predict the future, but I guess maybe we should be a little comforted.
Well, past performance is no indication of future results, right? Should we start with that? Should we start with this time might be different? But I guess I will lay out the case, Shauna, for why this time could be a little bit different, right? So we have a story that's going up over the next couple of days explaining how a president has never really entered a stock market like this one, right? So yes, we have a new president come in every 4 years, but take a look at the equity market right now. You have 40% of stocks, or basically 10 stocks in the S&P 500, right? About 40% of the index is just the top 10 stocks in the market. Valuations are at about levels that we saw in 2021 and not seen other than that than the dot-com bubble, right? We're in a Fed period right now where we're wondering, is the cutting cycle over? Could they potentially hike at some point this year? You were just speaking with the strategist who argued that conversation's largely over, but that conversation could come back, right? There's just a lot of things happening right now that don't necessarily have to do with the incoming president, Donald Trump, and don't necessarily have to do with his policies either. Then when you add that in, there's a lot going on there, but I do think you can take the Jeffries note and also spin it positively and think about what Bank of America's Michael Hartnett said today about Trump potentially just being supportive of the stock market, right? And those takes still exist, right? Deregulation is good for financials. Trump's America First policies could be good for small caps. We saw those rallies play out in the month after the election. They dissipated, so now maybe they actually have a little bit of room to run. I think there's a part of this. We had the post-election rally. We came back a little bit. Well, at least Trump isn't entering the stock market at its peak like it felt like he was going 3 weeks ago, right? Some of these trades, financials, small caps, even the S&P 500, are not back at the levels they were peak post-election. So there is a little bit more optimism that is perhaps not fully priced in at that level.
I guess also the question is how much maybe does the strategy really need to change, just given the fact that we could see an increase in volatility because of the fact that we could see more of a whipsaw nature. Maybe it's not the best way to describe it, but back and forth flip-flopping here coming out from the administration, and maybe how much of that is going to be preemptively already priced into the markets just in terms of trying to get ahead of the news rather than reacting to it.
Yeah, it's a question of what feels least priced in right now, right? And I think what strategists would tell you is probably least priced in would be perhaps the U.S. economy underperforming, right? If some of these policies turn out to actually hurt economic growth. Right now, the market is sort of positioned for a U.S. exceptionalism sort of trade, probably a strong dollar, probably rates continue to remain relatively high. If those things start to reverse pretty aggressively, I think that would sort of shift the narrative here. So it's really about what has the market already started to anticipate with Trump. So if the dollar keeps chugging a little bit higher, that's not necessarily shocking at this point, right? That's been the trade. It's if that doesn't happen, what does that actually mean for the market? And that I think would cause even more volatility, and we'll start to maybe get some of those answers in the next couple weeks, months. I think that's the looming question, right? Is how long does it actually take for some of these policies? Specifically, I'm thinking tariffs. Everyone wants to talk about it right now. It's the big talking point on earnings calls. It was the big talking point in the Fed Beige Book. People are really waiting to hear what happens there. How long does it actually take to get answers? Because I agree, it's going to be jittery until we do.
Yeah, exactly. We heard a little bit from Besant yesterday, and he kind of tamped down some of those wild expectations when it comes to tariff, maybe pointing more towards the fact that it could be more of a negotiating tactic. But time will tell. All right, Josh, thanks. Well, the Biden administration confirming funding for clean energy projects just days before Trump takes office. The Department of Energy announcing financing for Rivian to construct a plant in Georgia, as well as a loan for Plug Power. Our very own Praz Subramanian joining us now with those details. The Biden administration, once again, trying everything it can here for renewable, for clean energy here ahead of the transition.
Right, trying to get ahead of that transition there. You know, this is money that's already been it's approved for dispersal. Rivian and Plug Power did what they needed to do to get these funds actually fully committed, and now they're being dispersed. And look, this for Rivian in particular, this is their future, right? They need this money, $6 billion, to make that Georgia factory. This plus their deal with Volkswagen kind of gives them the runway they need to be a successful EV startup, right? And to continue with their newer models. A lot of this funding actually is going to places like Georgia, right? We mentioned these are red states that may not want to lose these projects. It's a little bit complicated as to what they can do, whether they can actually stop it. I think Ramaswamy of Doge and Musk have talked about potentially looking into these deals, but call them last minute funding. But it's probably going to be difficult to stop the funding after now they've been approved. So we'll see what happens. But, you know, pulling funding, it might not be so popular either. So we'll see. As you say, time will tell.
Time will tell. All right, well, let's talk a little bit about tariffs and the impact that that could have on the auto sector. That's one of the overhangs here, more broadly speaking, with the industry. You and I both had the chance to speak with Tom Donnelly. He's Mazda's North America president and CEO earlier this week about the impact on tariffs, what it would ultimately mean for his business. Let's take a listen to what he had to say.
What's clear is no business in any industry can absorb the magnitude of what's being talked about here. These are decisions that take, have a months to potentially year time frame in terms of the adjustments you make.
Surprised that's how Mazda is thinking about it. I guess, how big of a challenge do you see it being for the industry?
I was surprised when he said no industry could absorb the magnitude of that. That was kind of surprising to me. I know the auto industry is scrambling to figure out what they can do. With Mazda in particular, they assembled in Japan, their home market, but also in the US and Mexico. So they're trying to shuffle their production. Other companies are doing the same thing, but that takes time and it costs money, and you got to set up expensive supply chains. So this is happening already with an auto industry in flux, right? We have a good year for the industry last year, but you have high pricing, you have high finance costs, you have some companies having bloated inventory. So they're struggling to kind of sell vehicles. You have the threat of tariffs. And then we haven't even talked about the EV tax credit going away. A lot of companies invested billions into that, and that might make it harder to sell that product. So this is where the auto industry finds itself. But with Trump, again, I got to say one last thing. He's unpredictable by nature. He might say, you know what, let's keep the tax credits, lower the tariffs, or reverse, do high tariffs, and get rid of the tax credit. So it's hard to say what's going to happen, but the auto industry is definitely in a tough spot right now.
Yeah, certainly. And I was speaking to Tom Narayan over at RBC a couple of times here over the last several months, and he was just talking about how unpredictable Trump is, how that makes it so tough for automakers in general to do business because of that planning aspect that you were just talking about. Obviously, it takes time to adjust to these potential tariffs. All right, Pras, thanks so much. Well, coming up, we will continue the conversation surrounding tariffs and other proposed Trump policies on the economy, what it ultimately means for economic growth. That's coming up next on Catalysts.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
From Wall Street to Main Street, America is gearing up for Donald Trump's second term as president. And President-elect Trump is promising big changes. Investors have questions, and Yahoo Finance is bringing you the answers. Will Trump's second term as president bring another year of strong gains for the market? What does the future hold for cryptocurrencies? And which companies are most exposed to those proposed tariffs? Tune in for conversations with experts, analysts, and former administration members, starting on day one.
President-elect Donald Trump officially retaking the White House on Monday. Trump is expected to sign several executive orders on day one that could impact the economy and the markets. Our next guest is here with three key policies for investors to watch under the incoming Trump administration: tariffs, corporate tax changes, and also immigration. Joining me now, I want to bring in Jeffrey Roche. He's a chief economist at LPL Financial. Jeffrey, it's great to speak with you here this morning. So let's start with your number one thing, and that was tariffs. We just heard from Trump's pick for Treasury Secretary Scott Bessent yesterday. He had this to say about the approach that he sees the Trump administration taking with tariffs. Let's take a listen.
The American people should think about tariffs in three ways under the Trump administration. One will be for remedying unfair trade practices. Two, maybe for a more generalized tariff as a revenue raiser. A third use of tariffs, as you said, as a skilled negotiator.
So, Jeffrey, I think the big question here this morning as we look ahead to the next 4 years is the economic impact, right, that tariffs could potentially have here, not only the U.S. economy, but the global economy. How are you evaluating that?
Yeah, well, first off, thanks for having me again. Good to join you this morning. Just a reminder for the listeners, we're not walking into a dark room and not knowing exactly, how tariffs do impact an economy. We do have a Trump 1.0 case study. And I think it's really important to look at the numbers. You look at a chart of CPI and PPI, which is producer price index, and you realize, in 2017, 2018, 2019, businesses didn't fully pass along costs. And that was during a time when China was growing amazingly stronger than the U.S. Tables have turned, actually, in 2025. So I think that scenario is very helpful. I don't have a very negative view as we go into the Trump 2.0 because we have that case study with us to study how things happened with that.
And then, of course, the other big factor is tax cuts, right? And just in terms of to what degree that is going to facilitate or offset the debates out there, just ultimately some of the pricing going forward here for the U.S. Scott had this to say when he was asked just about the plans for the extension of the 2017 tax cuts and the importance of tax cuts for the U.S. economy.
This is the single most important economic issue of the day. This is pass-fail. That if we do not fix these tax cuts, if we do not renew and extend, then we will be facing an economic calamity.
Jeffrey, would love to get just first your thoughts on the fact that he described it as the most significant economic question here of today.
Well, that might be a little bit hyperbole, but I do think it's extremely important. You can't ignore deficits. You got to pay for those tax cuts somehow. And you got to address the massive income inequalities really ever since the pandemic. Certain parts of the economy have done quite well. And others not quite so much. So taxes, just to zone in on that topic, because I do think it's one of my top three in addition to tariffs. The second is that tax rate. I do know that when you look at, for example, the NFIB surveys, we had a really fantastic rebound in businesses reporting plans to expand. And I think that's partially due to the fact that the Trump administration does plan to lower corporate tax rates. I think that is incredibly pro-business. And we do know from previous cycles, pro-business policies seem to be the best variable to play with when you do think about the challenging deficits right now.
Jeffrey, to wrap this up, the number three most important thing is immigration. And of course, Trump has promised to start mass deportations. What's the economic fallout there?
Well, it's not going to be felt evenly across the economy. Clearly, the construction sector, leisure and hospitality sector, those areas are going to be hurt with perhaps a little tighter immigration policy. But I do think it's fascinating. We do get some really great data from the Bureau of Labor Statistics on foreign-born workers. Now, granted, that includes those here legally, but it does include immigrants and some illegals. And when you look at the foreign-born participation rates and employment to population ratios, we don't have those rates as high as they were back pre-pandemic. So it's very it's actually likely that tighter immigration policies would actually nudge domestic-born workers to re-enter the labor force, and that certainly would be a good thing for Americans.
So you don't see a crackdown of that.
श्रीवास्तव जी क्रूड ऑयल देखो क्रूड ऑयल फिलहाल के लिए अगर ये सपोर्ट ब्रेक होता है तो फिर थोड़ा बेरिश ही रहेगा बाकी मुझे लग रहा है शायद ट्रम्प व्हाइट हाउस में ट्रम्प की क्योंकि मंडे को तो आपका यूएस मार्केट बंद है वहाँ हॉलिडे है हमारा वहाँ ओपन रहेगा लेकिन वहाँ हॉलिडे है तो उसका वेट शायद करे बाकी ये अगर ब्रेक डाउन होता है तो फिर थोड़ा बेरिश साइड पे देख सकते हैं एफईजी से रिटर्न कर गया एक और एफईजी बना हुआ था उसी से रिटर्न कर गया बाकी नेचुरल गैस ने रीटेस्ट कर दिया सपोर्ट था ब्रेक डाउन कर दिया था डायरेक्टली बहुत वॉलेटिलिटी करी फाइट बहुत करी थी बट हैंडल नहीं कर पाए रीटेस्ट करके सेलिंग आ रखी है लेट्स सी नीचे तक आता है अब या फिर नहीं मैं ना वो ऊपर हाई अब दोबारा बाई मत करना इसमें ऑलरेडी 2 बार बाई कर चुके हैं वैसे ही रिस्की ट्रेड था ये तो अब बाई मत करिए अवॉइड ऊपर ऑलरेडी इसमें एक नया एफईजी बना दिया इसने में और कितना टेस्ट करेगा 6 टाइम ऑलमोस्ट टेस्ट कर चुका है अब ब्रेक होना चाहिए 344 से 346 के बीच में पुराना एफईजी है जैसे यहाँ पर एफईजी भी है पीएम हो गया लेट्स सी कितना मूव करता है अब आज के दिन लास्ट ट्रेडिंग सेशन है ट्राई करना है तो मिनी कर लो फिर ऑप्शन वगैरह मत लेना रेंज में चला गया तो फिर कुछ मिलेगा नहीं क्रूड में यूएस में तो आई थिंक टिकटॉक बैन हो गया था उस पर सुप्रीम कोर्ट वहाँ के सुप्रीम कोर्ट ने भी हाँ कह दिए जो लॉ बना था सो आई थिंक 19 2 दिन और चलेगा यूएस में फिर 20 को बैन हो जाएगा टिकटॉक इंडिया की तरह। व्हाइट हाउस की ओर से एक स्टेटमेंट आया है, टिकटॉक शुड रिमेन अवेलेबल टू अमेरिकन्स। हाउ? White House support keeping TikTok available for US user, potential shift in stance on Chinese-owned app data security concern.
News when you wanted with Bloomberg News Now. I'm Nathan Hager, and we do have news from the Supreme Court. The justices have upheld the law that threatens to shut down TikTok in the U.S. as soon as this weekend, ruling unanimously that free speech rights must yield to concerns that Chinese ownership of the wildly popular video sharing app creates a national security risk. That ban is due to take effect on Sunday. Tamlin Basin is a tech analyst at Bloomberg Intelligence.
We don't think that they can do all that much to delay this January 19th deadline from taking effect. But what we are seeing is a little bit of momentum, again, on a bipartisan basis. They really gotten in action last night when we saw Minority Leader Chuck Schumer say that he favors a delay. Now, what this would be a delay would be to find an American buyer for TikTok.
Bloomberg Intelligence tech analyst Tamlin Basin says no American buyers are lined up yet, but Senate Democrats have introduced a bill that would extend the deadline to find one for another 270 days. Moments before the decision, President-elect Donald Trump said he discussed TikTok in a call today with Chinese President Xi Jinping. Trump says they also discussed trade and fentanyl. He said it was a good call for both China and the USA in a post on Truth Social. China is sending Vice President Han Zhang to Trump's inauguration on Monday. On word of that call, stocks are soaring. Right now, the S&P 500 is up 0.9%. The Dow Jones Industrial Average is 0.8% higher, and the Nasdaq Composite is leading the gains up 1.4%. Stocks are now on track for their best week since Trump's election win in November. That's news when you want it with Bloomberg News Now. I'm Nathan Hager. This is Bloomberg.
There are two kinds of people in the world. People who think about climate change
and people who are doing something about it. On the Zero podcast, we talk to both kinds of people. People you've heard of, like Bill Gates.
I'm looking at what the world has to do to get to
necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
Dan Pinto is sort of the person in place. He announced his retirement. I mean, the twist was that Jen got put in the COO position, so the immediate knee-jerk response was, okay, so she is the new heir apparent, and immediately
She said, no
sort
way.
of dashed.
No way.
But she did say, not at this time.
Okay.
So that's important, and it just may be that Jamie Dimon, this bank has built an amazing culture. They've created so many amazing leaders. They have a strong bench, and they may just want it to keep people speculating. It could be any one
Keep
of
the
these,
parlor game
any
going.
one of these leaders.
Yes.
It could be Jen. It could be Marianne.
Right.
Doug Petno just got a nice promotion. It could be Troy. It could be
I got
Mary Erdos.
I got 8 ways to go here and the time left, but we got to go there. Over the last 10 years, folks, J.P. Morgan has grown at triple nominal GDP. Goldman Sachs has grown at almost triple nominal GDP. Citigroup is not. They've grown at roughly nominal GDP. Citigroup. How's Jane doing?
I think Jane is getting it done. Citigroup, as we know, back in Sandy Weil's day, he built this
The
supermarket,
shopping
that
mall of finance.
everything,
Yes.
and then they've been selling ever since. Corbat did come in and do some downsizing. Jane has come in and she's done more. We're going to look to see if there's an update. They're spinning off their business in Mexico. So that's going to be a big sale that'll take place later this year. And it's been a slog. It's a slog for them. They also have some regulatory issues. We talked about that. We'll be looking for their expense guidance
Now that
as
you're
well.
doing global strategy, so we're not going to be able to talk to you in about 90 days. Allison Williams, if J.P. Morgan's doing 3 times nominal GDP shareholder return over the last decade, a la Paul Krugman a week ago, are we seeing a concentration of capital as pre-2007?
I mean, it is interesting because coming out of the crisis, right, we have these systemic buffers, higher capital charges. JP Morgan faces, higher capital charges than their peers, and they've continued to get bigger. Part of that has been the global markets landscape, right? It's interesting to see what's happening over in Europe. With the U.S. peers have gotten bigger and bigger. Europe has not, except for UBS that acquired Credit Suisse. I don't think anyone expected G-SIBs to merge. But I think what Europe needs is a cross-border deal, and it's just so difficult. It's just difficult, and the politics of it.
With Commerce Bank
it's
Unicredit,
tough.
it's not happening.
It's tough.
टेस्ट में नेचुरल गैस में थोड़ा क्वांटिटी का संभाल के थोड़ा और ऊपर आए तो मज़ा आएगा सेलिंग करने में। ब्रेकडाउन तो हो चुका है ऑलरेडी इसका। ऊपर तक अगर आता है ना नेचुरल गैस अराउंड हियर, यहाँ से एक सेलिंग का प्लान करेंगे। अच्छा सपोर्ट ब्रेक हुआ है, थोड़ा सा और ऊपर एक्सपेक्ट कर सकते हैं। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। 61 लाइक्स हो चुके हैं, 100 लाइक्स इज द टारगेट। लेट्स सी टारगेट क्या रखा जा सकता है। ये अच्छा रिस्क रिवॉर्ड नहीं है, नॉट अ गुड रिस्क रिवॉर्ड ट्रेड। 1:1 ही बन पाएगा, लेट इट गो। नीचे और कहाँ है सपोर्ट?
Sea cargo is responsible for 3% of global greenhouse gas emissions annually. As Mexico's first carbon-neutral port, ICTSI subsidiary Contecon Manzanillo is setting the standard for progress.
The economy doesn't feel that strong, yet the Fed seems to be responding to that.
Everywhere I look, I see more inflation, not less inflation.
We're pricing in a stronger U.S. economy for longer.
Economic paralysis isn't really our outlook. We think we're going in with significant momentum.
The economy's been resilient, and it demonstrates that it might be able to continue to grow right through the end of the decade.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
From New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Thursday on a 3-day winning streak on the S&P 500, following the best day for equities on the S&P, the Nasdaq, the Russell since November.
Hi, Dan. This is Mark. So you're going to be sitting on quite a bit of cash in a very strong US dollar environment. So you've got a great currency behind you. You've got some money to deploy. Are you tempted by some of the other sectors around the world? Does Asia look cheap to you, or some parts of Europe? Is there anywhere you're thinking of deploying your cash outside the United States?
Yeah, I mean, we actually took some positions in emerging markets because we think all the rhetoric and all the fear around Donald Trump and tariffs, you know, it's funny when you hear people just sort of take him at his word at, oh my God, he's going to put 60% tariffs on China or whatever, and then they panic. And then you figure out, well, he's a businessman. And you've already had 4 years of this, where that's a starting point in negotiation, and where you ultimately end up is typically a lot better than that. So to your point, Mark, if you look at the relative valuations around the globe, yes, on a going forward basis for 12 months, the S&P is sitting at about 22 times or so. But if you look at some of these other markets, you've got the Nikkei sitting at about 19 times. You've got the Indian stock market sitting about 20 times. But the China stock market is sitting about 13 times. So a lot of these other markets have underperformed for the last 2-3 years. They're very cheap for obvious reasons. People are afraid of tariffs coming out of President Trump. But I think to some degree, and you saw that with some of the moves since the beginning of the year, is maybe they're a little bit overdone. And so that's where I'm looking, because the valuations, to your point, as you brought up, are a lot more compelling there. And then also in the US, the markets have really been driven by 7 stocks, the Magnificent Seven. And I think there's going to be an AI digestion phase. And we've been writing about this now for several months. And you're seeing signs of it from some of what Microsoft has said over the past month, which we can get into. But if that trade starts to fall apart, and given you've got 7 stocks that are somewhat tied to the AI trade that are driving the US market, that are 35%, let's say, of the S&P 500, and are trading at valuations in the low 30 times range, then you've got a huge problem potentially. And that money could also flow into these foreign markets that are a lot more hated, where the valuations are cheaper.
Dan, we'll pick up on AI and chips slightly later. Just to pick up on what you talked about, deploying your assets in markets, in Asia, emerging markets included. You talked about that low valuation in China. And as you said, it's low for a reason. Is it compelling enough for you right now to be pumping money into that market?
Yeah, I mean, we own some stocks in there, but the thing with China, which makes it difficult, is 2 things. They've talked about in the past where handing out checks directly to consumers, they view it as a form of welfarism, rightly or wrongly. And they don't want people to get addicted to that. So you don't get this overstimulation that you've seen in markets like the US in particular, where they were handing out checks for people unemployed, or in Europe. And so you don't have that big bazooka effect, for lack of a better term, that will drive valuations and markets up on euphoria. And so any kind of recovery is likely to be a lot more measured. The second big problem, quite honestly, is the same one Japan suffered through for decades, which is there's only two real ways to grow the real economy, right? There's population growth, and then the productivity increases on that population growth. Well, in China, for the first time in 60 years, the population went down, and based on the demographic trends, they're probably going to go down for the next decade at least. And so much like Japan had to suffer through that, unless you get a massive increase in productivity, which given some of the restrictions on technology coming out of the US, it's hard to believe, those are some of the things you're going to have to struggle with. So for us, we picked cash as our top pick, but we have four other names. Two of them, Cisco and Adtran, are sitting in the telecom services space. We like the mid-cap stocks today. One of our other top picks, which is KBWB, which is the bank ETF in the US, that benefits from deregulation and tax cuts. So there are other names that we like in the US. We're just saying that it could be a very volatile year, and don't be surprised. And that's why we don't have a Magnificent Seven in that group of five, which we've always had one or two stocks in there. Last year, for example, we had both Meta and Amazon in our top five picks. We don't have one of those names in there this year because we do think there's some real AI digestion risk and there's better places to deploy. And all of those names I mentioned, mid-cap value, the bank ETF, Adtran, Cisco, those other four names, they all have very compelling valuations relative to their peers or the market.
You like mid caps? Why not small caps? They also have compelling valuations.
Well, it's a great question, Heslinda. The big reason's the following. If you think about what I'm worried about, which is the Fed having to raise rates potentially as you get towards the end of this year, small caps struggle in that environment because they just happen to be smaller. And so a rate environment that's more beneficial to them really helps them out a lot more. And also, if the economy is slowing down, they don't have as much revenues to cover the fixed costs. If you look at the mid-cap space, by definition, they're mid-cap, right? So they're a little bit bigger. They can handle a tougher operating environment. But that's also why we say it's mid-cap value, not mid-cap, because mid-cap growth has also benefited from the same trends that have driven the overall market. And that's why we're saying mid-cap value is more interesting, because the S&P 500 over the last 5 years, if you think about it, first, it was a couple of years of investment during COVID because everybody's going online. So you have all this internet infrastructure spending happening. Then for the last 2 years, it's all been about AI. And so the S&P 500 over the last 5 years is up 82%. The mid-cap value space has underperformed that by 35% over that period of time and trades at a 17 multiple, not the 25 times trailing multiple that the S&P 500 is trading at. So, and you've seen this during 2022 when the Fed was hiking really fast. And quite honestly, during 01-02, when you had the tech bubble break, which if it gets really bad in AI, I don't think it'll be that bad, but it could happen. That also held up very, very well. And so in a tougher environment, they also hold up nicely. And things like tax cuts and deregulation help the mid-cap names more than they're going to help the S&P 500 names, where they've already got low borrowing costs. They're huge. They don't care as much about that.
Hi, Dan, it's Mark again. You were talking about the potential risk of an interest rate hike in the States. Well, we got one very much on the radar here in Asia. There's a lot of talk that the Bank of Japan could be raising interest rates next week, of course, from very, very low levels. Now, that may well give some support to the Japanese yen. Do you think that will work out in some way as a positive? People will be more attracted to Japanese markets because of a stronger currency, or is that going to be something which breaks the sentiment? There's been a lot of money rushing into Japan over the past couple of years. Is it good or bad if they have an interest rate hike next week?
Mark, you framed that beautifully. I mean, I always say it's never the data. It's the market's reaction to the data, right? Because if I tell you, hey, inflation's going to go up 6% over a year, you may go, oh my God, that's terrible for markets. Except if it's 2021, in which case the S&P went up 27%, right? So I think it'll actually be good for Japan because the reason they're having to raise rates is maybe faster growth, some inflation. People really hate deflation, and Japan's been struggling with that for decades. And so I think in Japan's case, with the support, as you rightly pointed out, for the currency, if I were to bet, I think it's going to be more supportive for their economy versus negative. And so that's kind of how I would think about it as it relates to Japan specifically. The valuations, because the market has rallied so much from the lows, it's not hugely compelling at 19 times versus, you know, the China market sitting closer to 13 times, but it is lower than the S&P at 22. And obviously a lot, you know, the AI companies for the most part are all sitting in the US. And so foreign markets by definition have struggled because of that. And the dollar, as you pointed out, relative to the yen, the dollar by itself has gone up from 101 at the end of Q3 to about 109 at the end of Q4. And so that's put tremendous pressure on anything that isn't US based, right, for that reason. And so we'll see what happens going forward. But I think the way you framed it was perfect.
Right.
And I tend to be more on the bullish side on it.
You know, Dan, this is a theme in the tech space, isn't it? I mean, that's what we're seeing with the Max 7 as well. They just keep bidding up the valuations.
Yeah, absolutely. And quite honestly, for the last couple of years, that's been the right thing to do because the AI trend has been so strong. But I think what investors should be concerned about is if you look at the biggest spender by far on AI CapEx, it's Microsoft. And part of that is obviously Microsoft has a 49% economic interest in OpenAI, which started this whole AI theme, which with their introduction of ChatGPT at the end of 2022. And Microsoft's CapEx has been growing at 70 to 80% year over year for the last 6 quarters, if you include December. But on January 3rd, they came out in a blog post and said, we're going to spend $80 billion on CapEx in their next fiscal year, which ends in June. But if you go and do the math, they already spent $20 billion in September quarter. They guided that up for the December quarter. And so you go, well, wait a minute, that means there's more than $40 billion in the first 6 months of fiscal 25, which means they're going to spend less than that in the next 6 months after growing 70 to 80% year over year for the last 6 quarters. So if you're any kind of chip company that sells into Microsoft or any of these other big hyperscalers, I think you're going to see a dramatic slowdown in revenues by the time you get to the middle of the year. And by the way, that's what you saw after all that investment during COVID. Because don't forget, NVIDIA, which is the poster child for this trade, their revenues before COVID were negative year over year for about 3 quarters. And then COVID hit, and then the revenues surged to being up over 80% year over year by the beginning of 2021. Because we're all locked up, right? We're all going online. Then once we all get unlocked, those revenues went from up over 80% year over year to down over 20% year over year. The stock got crushed, went down over 60% during that move from peak to trough. And then you got the AI trade and you're back up to these levels. But I think you're going to see another slowdown after growing for 2 years over 100% year over year in revenues.
Dan, NVIDIA is not in your top 5, but that doesn't mean you can't still make money with NVIDIA. A lot of the guests that we've had on the show say that it is a must in your portfolio. We know that it's risen 800% over the last 2 years. There's still money to be had, right? Even if it's not going to be at the pace that we've been seeing in the last 2 years.
As I said, the last time you had to go through a digestion phase, after COVID, NVIDIA's stock went down over 60%, 60 from peak to trough. Right now, forecasts are for NVIDIA's revenues to grow over 50% this year. I don't think it's going to be even
around the world to build the project because you don't know whether you are in for tax liabilities, which you never knew you were supposed to pay, whether you are in.
What about when it comes to crypto IPOs and unlocking some?
I'm waiting. I think Circle is going to be a big one. I feel like Kraken is going to be another big one. Falcon X is getting prepared. Anchorage, which I'm very excited about. I feel like there are going to be some of the going to stay. I think it is now when we look at the crypto, Bitcoin, ETH, Solana, like just the crypto token perspective, we're going to have a lot of
and Coinbase. CEOs that have contributed $1 million to the fund include Apple's Tim Cook and OpenAI CEO Sam Altman. Well, coming up, Wealth is dedicated to all of your personal finance needs. Brad has you next.
Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
$50 on the S&P 500. So I think, something like 13-14% from here is actually a pretty good year.
It's really interesting, especially considering the cautious optimism that you were discussing versus something like what Jamie Dimon was talking about in a CBS interview earlier this week, which was
5-year average. And the last name is Quanta Services. And Quanta Services has a record-breaking backlog, strong demand for future products. Data centers, aging power grid are the reason why this company's moving forward.
You hear that the court is saying, nope, in this case, national security concerns, those trump the ability of a foreign adversary to speak. This is a historic minutes after the judgment has come out here.
Which is actually a flip-flop from when Trump tried to get TikTok out of the U.S. during Trump 1.
Started to make some gains after that core CPI print came in softer than expected. And then today, as we near closer and closer to the election, we're just seeing a boon in this cryptocurrency. And that's lifting other types of cryptos, other types of crypto-related stocks like Coin.
That's according to data from the eToro investment analyst. Great to
Davis, the AI engine at the heart of the Dynatrace platform, doesn't just see every entity in your environment, it instantly knows how they all relate. So if a problem occurs, we show you where it is, why it happened, and the business impact, so you can prioritize action and trigger auto remediation.
Novo Nordisk's Ozempic and Wegovy will be targeted in the next round of Medicare drug price negotiations, that's according to officials. Now, the blockbuster weight loss drugs are among 15 medications on this list, which also includes treatments for cancer and treatments for asthma. Prices negotiated in the second round of talks will take effect in 2027. Drug makers have until February 28th to decide if they will participate in these talks. So a lot to unpack here. And we have Novo Nordisk, the share price up on the screen right now. So let's start there. You're looking at losses of just about 4%. Why? Well, lots of discussion here this morning on ultimately what this could mean for Novo Nordisk's bottom line if, in fact, this were to go through. Now, we know the last round of the IRA negotiations gave Medicare an average 22% price reduction for the drugs that had been on this list. So again, that could potentially really have an impact to Novo Nordisk's bottom line here going forward. But of course, lots of questions, just ultimately how this all plays out, what happens under the Trump administration, whether or not they're going to do away with the IRA, whether or not these IRA negotiations are going to follow through, what regulators are going to enforce. So again, this isn't set to take place or isn't set to go into effect for a couple of years. And there's a lot of questions out in the street as to how realistic or how likely this is going to be here.
Yeah, one of the big numbers that stuck out to me, and Xavient is one of the firms out there that was really doing some research around the cost implication and healthcare costs tied to GLP-1 medications, healthcare costs tied to the obesity or obesity as well in general, exceeding $260 billion annually, and the corporate side of this as well, and how they're looking for, because it's the negotiations that take place, but also how corporations, typically for any employer-sponsored healthcare plans, where they are also picking up the cost here too. And so some of those healthcare costs that the corporations are focused in on is this overall figure of that $260 billion annually tied to obesity. And of course, we know for some of the weight loss drugs that have come forward, there are a lot of different measures that are coming forward in the future here, trying to make sure that it's everything from an oral pill all the way to what's already existing on the market right now and any types of treatments. And I think even as we get into, and even as we go further into the throes of 2025, this is going to be a continued grappling point. How much does the corporation pay in the employer-sponsored healthcare plan versus what the government is actually going to be accounting for as well? And you have an incoming administration that has, not been cheerful of weight loss drugs to this point as well. So,
yeah, lots of questions about ultimately. I mean, we'll see what happens with HHS and all that going forward. But again, these drugs accounting for $41 billion in annual Medicare spending, about a third of Part D drugs dispensed at the pharmacy again. So putting that into context just in terms of how big of an impact this could potentially have.
Apple edging higher after its worst day since August, following reports of weak iPhone sales in China. Market research firm Canalys, suggesting Apple fell to third place for smartphone sales in China in 2024. That's behind Huawei and Vivo. Apple is set to report quarterly results on January 30th. Here, we're taking a look at shares, though, up by about 1.3%. This kind of runs in synonym with some of the counterpoint research that we had seen to start off the year as well, just suggesting the share gains that we had seen by some of the other China homegrown and Asia Pacific homegrown smartphone manufacturers.
Yeah, exactly. When you take a look at the trends inside China, a bit worrisome. We've seen that reflected in shares of Apple now for the last several trading days, last several weeks. When you take a look at some of that underperformance, especially relative to some of its larger, not larger in comparison to Apple, but other large tech giants as well. So again, we've talked about this underperformance here. Certainly the stock taking a pretty dramatic leg lower yesterday. You can see the 5-day chart up on your screen. You're looking at losses of just about 6%. I think going forward, lots of talk about tariffs. Now, Apple largely expected to be exempt potentially here from any tariffs from the Trump administration. But we have seen that casting a bit of a shadow and overhang here on Apple and some of the other tech giants as we talk curbs in terms of what is being done with it inside the chip sector. So certainly the larger tech names do have some to worry about. I think overall, when you take a look at the latest data and the research that's out from so many analysts on the street, including Bush's Dan Ives, are still very optimistic on big tech under Trump, talking about lighter regulation and how that is going to be beneficial here in the longer term. But I think one of the constants that we've heard over the last several weeks, and really going back to the election ever since President-elect Donald Trump was elected, was one of the big concerns on the street is the unpredictability, that nature here under President-elect Trump. And we're seeing that reflected in the markets. And that's, of course, expected to increase some of that volatility then going forward.
Yeah, and it also comes back to how much reliance.
What we were able to do with Dynatrace and with Grail was take, for the cost of the other platforms, strip that down.
Some of the biggest beneficiaries of the 170 million Americans TikTok users looking for alternatives. And Apple temporarily pausing its Apple Intelligence-enabled news notification summaries. That's after complaints it repeatedly made factual errors. Now, this affects iPhones, Macs, and iPads with its latest beta software update. And Intel shares rising on speculation it's an acquisition target following a report from tech site Semi-Accurate claiming to have read an email about a company trying to acquire Intel whole. Yahoo Finance has reached out for comment. Intel has struggled over the past year to keep up with chip rivals. The stock down more than 50% over the past year. And that is your Yahoo Finance Market Minute. For more on what's trending on Yahoo Finance, scan the QR code below to track the stocks of the day.
नेचुरल गैस सडन 2 to 3 पॉइंट अप डाउन मोमेंटम और नीचे सपोर्ट है, वहां से फिर से बाय कर सकते हैं। 352 एंड 360 दो टारगेट।
Where we've got Dynatrace deployed and it's doing its root cause analytics and we've identified auto remediations, we're seeing improvements of mean time to repair going from 4.7 hours to under a minute.
Housing in this period?
I will say that it has been quite varied.
News when you want it with Bloomberg News Now. I'm Nathan Hager. The Supreme Court's put the future of TikTok in this country in a little more doubt. In a unanimous ruling, the justices found Congress was right to require China's ByteDance to sell the app on national security grounds. Bloomberg's Ben Bain says this decision was not a surprise.
When they had oral arguments over this about a week ago, it seemed like the justices were very receptive to the idea that this law was constitutional.
Bloomberg's Ben Bain reports the law takes effect Sunday. President-elect Donald Trump has promised to save TikTok and could choose not to enforce the ban when he takes office on Monday. CNN is reporting Trump says he will make a decision on TikTok. Trump says he discussed TikTok and trade, fentanyl, and other topics in a phone call today with Chinese President Xi Jinping. The conversation could set the tone for relations between the two biggest economies. China's readout says both sides agreed to establish strategic communication channels and maintain regular contact on issues of common concern. Markets are reacting well to this call. Right now, the S&P 500 is up 1.1%. The Dow Jones Industrial Average is 0.9% higher, and the Nasdaq Composite is up 1.6%. The S&P is on track for its best week since Donald Trump won the election back in November. Israel's high-level security cabinet has approved a ceasefire and hostage prisoner exchange deal with Hamas. It now heads to the full cabinet for a final sign-off. Bloomberg's Oliver Crook is in Tel Aviv with more on how it'll work.
This is going to be done in several phases. So the first phase will be 3 female hostages will be released on Sunday. In exchange for that, there will be Palestinian prisoners that will be released by the Israelis. And basically, over the sort of ensuing 3 or 4 days, every three or four days, you'll have 3 or 4 hostages released. And then you'll have the same thing on the other side from the sort of Palestinian prisoners.
Bloomberg's Ollie Crook reports 2 far-right members of Prime Minister Netanyahu's cabinet voted against the deal. They say they want to resume the war after the ceasefire until Hamas is completely destroyed. President-elect Trump's pick to lead the Department of Homeland Security is up for Senate confirmation hearings today. South Dakota Governor Kristi Noem says she will reverse what she calls the open borders policy under President Biden.
The number one threat to our homeland security is the southern border. And my mission is to build trust by securing our border, and that we are making sure that criminals that are perpetuating violence in our communities are removed from this country.
Homeland Security nominee Kristi Noem also told the Senate Homeland Security Committee homegrown terrorism is on the rise in light of the New Year's Day truck attack in New Orleans. The Treasury Department has slapped sanctions on the actors behind 2 major cyber attacks that the Biden administration says were backed by the Chinese government. They include the so-called Salt Typhoon operation against U.S. telecoms and the Treasury hack that included Secretary Janet Yellen's computer. Officials have said the Treasury attack did not take anything classified, but the attackers seemed to focus on Treasury's role in sanctions and intelligence. The Biden administration has added 15 drugs to its list of medications up for price negotiation under Medicare. They include Novo Nordisk's wildly popular Ozempic and Wegovy weight loss shots, which list for about $1,000 a month. More from Bloomberg Intelligence senior pharma analyst Sam Fazeli.
They're not going to change their list price necessarily. They're going to end up having to write a check to the federal government for whatever that difference is in terms of the negotiated price. Not sure this will actually help the patients necessarily, depending on the way the plans are operated.
Sam Fazeli with Bloomberg Intelligence. Novo Nordisk also announced people lose more weight if they up their Wegovy dose, but not as much still as rival Eli Lilly's Zepbound. Novo Nordisk shares right now are down more than 4%. Eli Lilly is lower by more than 2%. President Biden's making a symbolic move in his final days in office. He has declared the 1972 Equal Rights Amendment the law of the land. It's not likely to have much legal effect, though. Presidents don't play any role in certifying constitutional amendments, and the U.S. Archivist says it is still short of ratification. 38 states have signed off on the ERA. That is enough, but 3 didn't do so until after the 1979 deadline. Could there be a Week 18 in the NFL? Commissioner Roger Goodell says it's the logical next step.
We would take a preseason game away. So we would keep within that 20-game framework. We actually started at 14 and 6 preseasons. We went to 16 and 4, and now 17 and 3. So 18 and 2 is a logical step, but we would only do that with the players.
NFL Commissioner Roger Goodell says that move to 17 and 3 has actually seen fewer players get hurt since it went into effect in 2021. Goodell spoke with David Rubenstein on Bloomberg's peer-to-peer conversations. That's news when you want it with Bloomberg News Now. I'm Nathan Hager. This is Bloomberg.
So you cancel on time from Yahoo Mail. Oh yeah,
There are two kinds of people in the world. People who think about.
We have some breaking news on TikTok. The Supreme Court upholding a law that threatens the U.S. TikTok shutdown here in the U.S. Now, that ruling is set to take effect on Sunday. The ruling here saying that free speech rights must yield to concerns that the Chinese control of the app creates a national security risk. Now, this was a unanimous vote. The High Court saying today that Congress acted constitutionally when it did require ByteDance to sell the video sharing app by January 19th or face a ban. Now, this decision, of course, opening some questions just about what ultimately happens here for TikTok. Of course, you have the changing administrations. The incoming Trump administration, President-elect Trump, has been supportive of TikTok as of late. He also mentioned the fact he just held a call with President Xi Jinping of China just minutes ago, saying that TikTok actually was discussed during their conversation here this morning. So let's talk about what is next here and the implications of this ruling. For that, we want to bring in Alan Rosenstein. He's Associate Professor of Law at University of Minnesota Law School. And Alan, it's great to have you here. So let's talk about what's next. What happens now that we have this ruling?
Well, what happens now is that on the 19th, on Sunday, the ban goes into effect. What we expect is that app stores like Apple and Google will take the TikTok app off of their stores, that Oracle, TikTok's cloud service provider, will stop providing TikTok services. And TikTok itself has said that it will actually fully shut down operations in the United States, even though technically doesn't have to under the law.
Max, when it comes to the odds of enforcing, I think that's a big question right now, because that also appears to be dwindling under the President-elect Trump administration. How does that play out? What does the legality of that look like?
Well, it is within Trump's power to direct the Attorney General not to enforce the law, but the real question is whether non-enforcement is going to make a difference. The law doesn't need to be enforced for it to matter. If you're Apple or Google or Oracle, your lawyers are going to start telling you on Sunday that you're bound to this law and that if you violate it, you are potentially opening yourself up to some serious legal liability, up to $5,000 per user. And TikTok has 170 million users, so that adds up pretty quickly. So Trump can say that he's not going to enforce the law, but the real question is that going to be enough for the Apples and Oracles of the world to continue doing business with TikTok? And I have no inside information, but if I was their lawyer, I would not advise them to.
When it comes to, I guess, the likelihood of what happens, discussions, of course, of a TikTok sale going to Elon Musk, how exactly that would look for our viewers, for our community right now, wondering whether or not they're going to have access to TikTok come next week. What would you say?
All indications suggest that they will not have access to TikTok.
And when it comes to the potential, because a lot of questions are also big tech's role in this, right? When it comes to the Apple's App Store, when it comes to Google, the fines that they could face, right? If they don't enforce this measure, that's also on the table.
That's right. I think that's the main consideration. But also, it's important to point out that TikTok has said specifically that although it itself is not targeted under this law, the law is not enforced against TikTok, it will shut down all services in the United States come Sunday. And I think the reason they're doing that is to send a message and to make very clear what the impact of a TikTok ban could be, and therefore to put pressure on Congress and the Trump administration to do something.
In these incredibly complex environments, end-to-end observability is no longer optional. It has become mandatory.
Than they did have a couple weeks ago, late in December. I'm not surprised to see it because of the supply and the demand. And a lot of people, to be honest with you, that I speak to aren't even aware of the price gouging law, because if you ask me, I didn't even know about it 3 weeks ago. We haven't dealt with this type of natural disaster. So it's something new that we're trying to navigate through day by day here. Good news is the ordinances are changing, which means that the process is going to be a lot faster to hopefully get these people back to building. But again, that's going to be a whole nother story, because we're seeing leases at a minimum of 2 years with multiple year options, because people are understanding it's probably going to be a 4-year process to get their house rebuilt.
Yeah, Josh, I wonder just briefly if you can quantify, because we heard that California Governor Gavin Newsom, of course, is prohibiting more than a 10% increase and through March 8th. But for the listings that you've seen come online, or listings that were already in existence that have now seen price jumps, I mean, how are you seeing that quantifiably, and what type of percentages are you coming across?
Well, here's the issue. Nothing's going to stop somebody from doing that. In the long run, yeah, of course, they may get in trouble. They may be in a situation where they're going to have to pay back the difference of where they were listed at compared to where they are listed at now when the people move in. But the issue is, you put a house on the market and it's a good lease, or an apartment and it's a good lease, you're still going to get inundated with 50 lease applications. These people are willing to pay for it at the moment, because what is their other option? A lot of them have insurance that are paying for it, which is why the homeowner or landlord that is leasing out the house thinks that it's not a big deal because the insurance is paying for it. So it's yet to be seen what's actually going to happen with all this. Again, I understand it. But of course, people, they got to follow the rules. You can't do this to people who are in this type of situation.
Yeah, I want to get to some tips for LA residents in a moment. But first, you mentioned insurance there, and insurance companies, they have been reportedly reducing some of their coverage in California. We've heard that. It seems like that's heading toward a crisis of its own.
Yeah, so I'm on with my insurance broker every single day. It looks like anybody who was well insured and did the correct paperwork, it's going to be about 90 to 100 days before they see their check. That's for someone who's properly insured. 90% of the people are underinsured. They're not going to get the money back to build the exact property that they were in. Those people are going to have to go to battle with the insurance company. Could be 6 months, could easily be a year. So also what's interesting that we're going to see is different waves of buyers and tenants that are going to be coming through. It's not just the mad dash for the next 3 weeks. You're going to see it again in 3 months. You're going to see it again 3 months after that. And also what's really surprising, and maybe this has to do with the income level of the Palisades. I live about 10 minutes away from there. So that's the area that I'm concentrating on, is Malibu and the Palisades. What is interesting is the amount of people that have just said, you know what? Time to move on. We'll get that check. In the meantime, we're going to go buy a house, because this is going to be 4 years and we need to start our life as soon as possible. So that's interesting.
Okay, just lastly, while we have you here, Josh, and it's good that you're continuing to keep a pulse of all of your clients, having your regular meetings with your team as well. And we appreciate you sharing some of these stories, but some of the tips as well that you might have for people who are looking for shelter, those who might be viewing, or those who have family members that might be viewing and able to pass along some of these tips.
Yeah, definitely call multiple realtors. And this is coming from a realtor. Call 10 of them, call 20 of them. Get on the phone. Those are going to be the people that are going to have the pocket listings. If you're waiting to look on things like Zillow or the MLS, it's probably too late. Also, I would say this, and I want to put this out there because I'm doing a lot of interviews. LA, California, it's going to bounce back. We are down right now. We've been through a lot, but we've also been through a lot before. We are LA strong. We will rebuild places like the Palisades, long-term investment wise. I love it. I would put all my money in that area if I could. It will come back. It might not come back with the same homeowners, but it will come back with a lot of new homeowners who are going to start their lives over there again.
Josh, thanks so much for taking the time here and sharing some of your time, especially at such a critical juncture here for LA and for California. We appreciate it.
Thank you for having me.
Certainly. Stay tuned. We've got more Yahoo Finance after the break.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
The secret to success when investing for retirement may actually be pretty simple, even boring. Carrie Hannon joins us now to explain why passive investing has proven to be a winning strategy. Carrie.
Yeah, hi, Brad. Well, the proof is in the pudding, I like to say. These index funds regularly clobber actively managed mutual funds year after year. Yes, there's a percentage that does with actively managed accounts that do fantastically well. But the bulk of them, roughly 80% or so, outperform, the index fund is outperforming the actively managed fund. So we're talking about the S&P 500 index and broad-based indexes that track a certain basket of stocks or bonds. And so, I'm a big fan of index funds for retirement accounts because the costs are lower. Number one, that's a huge point. They're managed by computer. You don't have the active management fees of trading in and out of different securities. They're super simple. And if you can just, balance across a basket of stocks, equities like the S&P 500 index, and some index bond funds, you're set. And when the markets go a little haywire, you don't have to panic. You've got some diversification right there in front of you. And in fact, Warren Buffett has even said, a few years ago in one of the annual meetings at Berkshire, he said, hey, for most people, owning an S&P 500 index is the way to go. It is super simple, and just year after year, they clobber the actively managed funds. Yeah, it's a little boring, but I'd rather go with boring. And the fact is, Brad, most people actually do own index funds in their target date-based retirement fund. So say you have a target fund in your 401k plan that you've set, I'm going to 2044, say. That account, that target date retirement fund is made up of index funds. So you're already an index fund investor. But, I just think year after year, we have multiple studies. And I wrote this story just now because 2 new studies have just come out highlighting this actual return thing. So, I think it's worth throwing it out there. It doesn't mean don't invest in other things, but for retirement savers and even retirees, this is a really steady Eddie way to go.
Carrie, thank you so much for breaking this down. Appreciate it.
Thanks.
According to a survey from Yahoo Finance and Marist poll, 47% of Americans say that the cost of living is their biggest obstacle to saving more. Other issues include unexpected expenses and too many financial obligations. If you're looking for a new way to make every dollar count, you may want to consider ditching the strict budget and instead embracing living frugally. Here to explain the frugal living philosophy, we've got Jill Seriani and Jen Smith, co-authors of Buy What You Love Without Going Broke and co-hosts of the Frugal Friends podcast. Great to have you both on with us. So Jen, let's start with you. What is frugality and how is it different than just setting a budget?
Yeah, so frugality often gets a bad rap as being cheap or miserly, definitely not fun. But for us, being frugal is being a good steward of your resources, all of your resources. So that is, of course, your money, but also your time and your physical space, your mental energy. And it benefits you, but not at the expense of other people. So a great example we like to give is fast fashion. We don't get the cheapest shirt possible that's made by potentially slave labor or at the expense of somebody else's well-being. We try to shop sustainably so that it benefits us, but not at the expense of somebody else.
Jill, what are 3 tips to live more frugally?
So it's really important that we look back and understand our current spending. We recommend doing a 90-day transaction inventory, which is gathering your bank statements, your credit card statements all in one place and observing what are my current spending habits? How have I been spending money? Where is my impulse spending happening? And that can inform the changes and shifts that we can then make going forward. The second thing is to identify what you value. And we've identified kind of a good place to start is with the 4 F's. That for most of us, we share these common values of family, friends, faith, and fulfilling work. And where we can increase our engagement in those 4 categories, often without even needing to spend money, and then figure out what we want to be spending on from there. But we can find that our impulse spending can significantly decrease when we're getting more of the things that actually matter to us. And finally, incorporating the habits and behaviors that are going to align our money with those things we said we want more of, and finding alternatives to the impulse spending that we're typically doing, coming up with a dopamine hit list that doesn't involve spending money. Maybe that means that I'm going out for a walk, or I'm going to exercise, or I'm going to spend time with friends, or I'm just going to watch funny videos. All of these things can give us the rush that shopping also gives without hurting our wallets.
Jen, I wonder, what's your advice for anyone who struggles with overspending and perhaps chronically?
Yeah. Not to give up with this lifestyle. So often we yo-yo diet with money, and it's because we've learned a lot of our financial consumption from our food consumption. And so we'll go all in on budgeting, and then we break one category and we're like, okay, I'll quit. I'll start again next month. But to really make financial changes and improvements in your life, you have to stick with it. You have to continue to make these little changes, re-enter if you make a mistake, and stick with it, because that's where you're going to see these long-term things we talk about financially with retirement and getting a new house or a new car. Those are the things that it will be possible only if you continue to stick with it and learn from your mistakes.
Jill, just lastly here, how do you make room for spending on small luxuries? Because I for one, I'm an experienced person. If I'm in a certain city and I hear, one of my favorite bands is in town, I might say, you know what, I'll splurge on that, even if it is a experience economy luxury.
It really is important to be able to spend on the things that are going to be life-giving to us. We don't believe that frugality is about deprivation. And so when we can identify what we value, the things we want to say yes to, it can then be really easy to identify the easy no's, the things that don't actually matter to me, that I don't need to be spending on all the advertisements on Instagram, and I don't need a luxury car, or I don't need all of the most recent skincare products. Instead, I want the concerts with friends, and I want the travel experiences with my family. And we can kind of give and take in that way when we've been able to identify what don't I want to spend money on, so I can feel really confident about the things I am saying yes to.
Great tips and advice. Jill and Jen, thanks so much for taking the time here with us today.
Yeah,
thanks for having
thank you
us.
for having us.
Certainly. The Biden administration announced its final round of student loan forgiveness before President-elect Donald Trump takes office on Monday. Biden is clearing over $600 million in debt for more than 4,500 borrowers. Some of that debt will be canceled through the income-based repayment plan, but a big chunk will be for students of DeVry University. Back in 2022, the Department of Education found that the for-profit institution, quote, made widespread substantial misrepresentations about its job placement rates. So 4,100 borrowers who attended DeVry will have their debt forgiven. This is in addition to approximately 1,800 former DeVry students who received forgiveness in 2022. Even with obstacles along the way, like the Supreme Court blocking Biden's plan to deliver wide-scale forgiveness for tens of millions of borrowers, the president will leave office having forgiven $188.8 billion in student debt for 5.3 million borrowers. Coming up, if you're still paying off those holiday gifts, don't despair. We've got steps on how you can pay off your debt and start saving. That's next.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
A programming note. On today's episode of Warrior Money, hosted by former Congressman Patrick Murphy and veteran investor Dan Coons, General Wesley Clark discusses why the best leaders start at the bottom.
I think there's no real substitute for experience. You just have to learn it. And it takes a while. It's not something necessarily that just comes out of a book. And so in my experience, the best generals are those who, or in fact, the only generals who they start at the bottom and they work their way up. And they've seen it all the way through. And I think that's also true in business. The best business leaders I've seen are those who have had their hands on the real thing at the bottom, not those who are shoved into an organization at the top because they're just financial managers, but they're people who really understand the stuff of the business.
You can catch episodes of Warrior Money Fridays, 12:30 p.m. Eastern Time on Yahoo Finance or wherever you get your podcasts. According to LendingTree, 36% of Americans took on debt this holiday season, racking up an average of nearly $1,200. And if you're one of them, you're not alone. I'm in that bucket as well. But are not sure how to pay it off and start saving? Our next guest is here to help. We've got Ross Mack, host of Financial Freestyle, joining me now in studio. Ross, good to see you. You've got 5 steps in your New Year's financial resolution playbook. The first is to make a budget. So how do you get started on that effort?
Listen, I think when it's all said and done, it's very important to control your inflows and outflows. You got to write it down, which doesn't seem sexy at first, but you got to write it down. You got to know what your annual expenses are, but I actually want to break it down on a monthly. So you want to know, and I always try to bucket it in a 50-30-20 rule, right? When it comes to budgeting, you want to know your wants, your necessities, and obviously investing and saving and paying down debt. And the next step, right, is you have to save $1,000, right? It sounds kind of weird, but 44% of Americans can't cover a $1,000 emergency expense. What happens? Oh, now they have to take on more debt at higher interest rates. And so I think when it comes to that second step, you really want to do that. And then third step, right, is now let's actually focus on paying down that debt. There are a lot of ways, whether it's, saying, okay, do I want to do the debt avalanche method, debt snowball method, or find ways of saying, let me get a 0% APR credit card and kind of roll it over here while still being, disciplined when it comes to paying it down. But now, guess what? You're only paying down that principal. And then so when it comes to the fourth step, now it's like, look, the average American is living paycheck to paycheck, but one thing you want to do is actually have a fully funded emergency fund. I think quite too often you find people, especially, when we lived through COVID, you saw people, if you lose your job, guess what? Now, you're relying on relatives, taking out more debt. And so you want to have a fully funded emergency fund, which I determine as saying 3 to 6 months of your necessary expenses, right? That being whether it's your rent, mortgage, grocery bills, your health bills, et cetera, right? And then lastly, you want to start investing. I think it's very important that you understand you can't save your way to wealth. You have to start investing, right? At a bare minimum, right? You want to find a way to outpace inflation. And so when it's all said and done, you want to do that. I have a actual free financial resolution playbook at ross.maconomics.com.
Just quickly, we only got about 30 seconds left here, but when you think about check-ins along the way, how do you create those conscious check-ins to make sure that you're staying on track and on plan?
Absolutely. Everything starts with the budget, and why I say that is because for every step that I said, it should be budgeted into what you're trying to do on a monthly basis. So if you're trying to get out of debt, guess what? In your necessity, you want to say, okay, I want to put $200 a month to start getting out of my budget. And then the next thing is, okay, I want to put $300 a month after you're finally out of debt, right? To say, okay, I want to start building up my emergency fund. Oh, and more importantly, I now want to budget every month for investing. I think, once you set up auto investing, auto deposits, et cetera, it becomes seamless.
Ross, thanks so much for taking the time here with us today. Everyone, you can catch more of Ross Mack on episodes of Financial Freestyle Mondays at 12 p.m. Eastern Time. Catch them on Yahoo Finance or wherever you get your podcasts. That's it for Wealth, everyone. I'm Brad Smith. Thank you so much for watching. Guess what? You can stay tuned for Market Domination with Julie Hyman, Josh Lipton. That comes up at 3 p.m. Eastern Time. You don't want to miss it. Here's a look at the U.S. major averages on the way out.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time. From Yahoo Mail.
Welcome to Capital Gains, Yahoo Finance's unique look at how U.S. government policy affects your bottom line. I'm your host, Rochelle Akufo, and of course, we're just a few days away from President-elect Trump being sworn in as the new president, and we're already seeing some reaction as a reality of the new incoming administration and some of the policies that have been tossed about start to come to the fray. So we're going to be looking at some of the market's response, and we're also going to be looking at some of the key issues, whether it's tariffs and immigration, and really the impact of what's ahead for the U.S. economy. So, of course, I want to bring in my co-stars, Ben Werschel and Rick Newman. Of course, later on, we're going to have Shai Akabas from Bipartisan Policy Center joining us to also flesh out some of these. But I want to first start with Ben and what's on your trusty note cards this week.
Yay, good to be with you guys. So what I have on my card is Trumponomics 2.0. So the markets, as you mentioned, the markets have been waiting, guessing, speculating, hoping, whatever on Trump, and it's here. But depending on when you're listening to this, the inauguration is just going to be a few days away. And one kind of through line of the week I thought I could highlight to start us off is an increased kind of market volatility and attention to Trump and sort of what's going on around his orbit. It's obviously going to be a taste of just what's to come next week after the inauguration itself. Three quick examples for you guys. First is tariffs. We've had about 2 weeks now of a kind of semi-public debate about tariffs. What is Trump going to do on tariffs? You know, we see these plans floated clearly from his aides. They haven't even been presented to Trump of, you know, maybe it's going to be a little more friendly, maybe it's not. We don't know. And the markets are reacting to that. You're seeing the dollar go up and down in response to that. And that's clearly because this is one of the big uncertainties for Trump going forward. A second is kind of interconnected issues of inflation, the national debt, and taxes. Again, this is a place we're beginning to see even more attention from the markets. The bond market is clearly kind of nervous about whether Trumpflation is in the offing, and we're seeing things move there. And then the third, because of course we need three for a trend, is the kind of close market attention this week to Scott Bessent, who had his confirmation hearing to be Treasury Secretary, and it was kind of everything because of all this uncertainty around Trump. A lot of attention there about what signals he's sending. Is he gonna be a defender of tariffs in Trump 2.0, even though he's offered critical commentary in the past? So all of these together kind of show kind of just a little taste of what's I think is to come on the markets and Trump, and kind of a volatility that we all remember from 1.0 to 2.0.
So I've been looking at what you just mentioned is happening and has been happening in the bond market. You can't fake the bond market, and the bond market is nervous right now. And we're seeing that in this strange divergence between what's happening with long-term interest rates, which you can think of the 10-year Treasury bond as a proxy for that, and what's happening with short-term interest rates. So the Fed has cut short-term rates by a percentage point during the last 4 months since September. And during the same period of time, the 10-year has gone up by almost the same amount. So the short-term rates going down, long-term rates going up, that's unusual. It's not necessarily any single thing, but it is mainly it's a concern that we're going to have higher inflation in the future, not lower, but higher inflation. And why might that be? Number one, economy's pretty hot. We saw that with a really strong jobs report for December. But without a doubt, another factor is markets are worried about what's going to happen with the Trump tariffs. If they go into place as Trump has threatened to put them in place, they would probably push prices up and generate inflationary pressure. Trump also wants to deport migrant workers. That means labor costs could go up as we have fewer workers. And then there are concerns that we might finally be getting to the point where the U.S. National debt is just too big. And it's going to start having negative effects, which will be a different cascading problem. So we're finally going to get to the point when Trump takes office that we're going to stop speculating about some of this, and we're going to start to find out what Trump's actual policies are. So I say bring it on. Let's get this show started and see what's actually going to happen. But Ben, maybe you could just talk a little bit more about what Scott Bessent, the incoming Treasury Secretary, has had to say about tariffs, because a year ago he didn't like tariffs, right?
Yeah, for sure, Rick. As you mentioned, it was less than a year ago that in a letter to his hedge fund, he talks about tariffs being inflationary. And what we saw this week in his confirmation hearing was a kind of Wall Street version of what Trump talks about on the campaign trail. He was a defender of tariffs. He talked about how kind of Trump tariffs are going to be a three-pronged strategy. One is to stop unfair trade practices. One is to stop other geopolitical issues. And a third is what he called a generalized tariffs, or a blanket tariff on to raise revenue, which is what Trump wants to happen. The markets are really nervous about that. But this is clearly sort of in some form is going to be on the agenda. And Trump even went further this week and talked about an external revenue service, in addition to the internal revenue service, that would be a kind of clearinghouse for the amount of revenue he wants to bring in. So they're clearly there's an element of tariffs that are negotiating point, and Bessent talked about that today. But there's an element of here that they just want to change the kind of budget landscape of the U.S. through tariffs. And there's a lot of skepticism, as right now tariffs are about 2% of U.S. revenues.
I wish we could find out.
It's interesting because we did get some of the color on Bessent's ambitious 333 plan. And Rick, I know you've been taking a look at that and really sort of digging into it. It makes for a nice catchphrase, but break that down for us and what the reality actually looks like.
Do you guys remember 999?
I do.
And of course you do. Herman Cain. I mean, so this is like 1/3 of the Herman Cain. Take Herman Cain's 999 and just divide by 3. That's for political geeks. Okay, so Scott Bessent's 333 plan. Most people probably don't know what this is, but he says his goal is to raise GDP growth, real GDP growth, adjusted for inflation, to 3% per year. He wants to reduce the federal deficit to 3% of GDP, and he wants to add another 3 million barrels per day of U.S. oil production. So I have been going through all of these things and saying, well, where do we actually stand right now? And what's the likelihood that any of this could ever happen? And I hate to disappoint Scott Besson or anybody who likes this idea, but 333 is going to end up being more like 271. It's not going to be 333. I'll just very briefly go through each of these. So GDP growth of 3%. GDP growth during the last, since 2010, has averaged about 2.3%, and the Congressional Budget Office thinks it's only going to be about 1.5% during the next 10 years. And there are reasons for that. I mean, we have slowing population growth, we have declining immigration, we have an aging society, and those things all push growth lower, not higher. So I'm not sure what magic button Scott Besson's going to push that basically doubles GDP growth from 1.5 to 3%, but he thinks he will. So number two, let's go to the federal deficit as a percentage of GDP. Right now, the deficit is about 7% of GDP. Now, he wants to push it down to 3%. But guess what? Trump's talking about fully extending the tax cuts that expire at the end of this year. That would add more money to the national debt, not lower it. And again, the Congressional Budget Office thinks that not even factoring in any deficit spending by Trump, we're going to be at 6 or 7% of GDP for the foreseeable future, not 3%. And getting from 6% deficits to 3%, really hard. That's a ton of cutting. That would piss off a lot of people. Finally, oil production. We're at record levels of domestic oil production right now. It's about 13 million barrels per day. So add 3 million, you're getting up to 16 million. Again, forecasters just don't think that's going to happen. They think we might tick up a little bit, but guess what? The energy firms that would do all this extra drilling don't want to. And the reason they don't want to is they like oil prices where they are. If you put more oil on the market, the price goes down and their profits decline. So even though Trump's going to be friendly to the fossil fuel industry, not too many people think we're actually going to see a big boom in U.S. energy production. So good. I hope I hope we get to 333. It's worth trying. I just don't think anybody should think it's realistic.
And so one of the things that they were talking about in the Besson hearing was really the impact of tariffs. Obviously, we knew that tariffs were going to be front and center there, but they also talked about eliminating the debt ceiling. There were a lot of things thrown around. We did see some bipartisan agreement, especially from Senator Elizabeth Warren there. Obviously, I'm not sure people quite understand. There are quite a few legislative steps required. This isn't a snap of the fingers sort of thing. But there are some key dates coming up that people should really keep in mind beyond the inauguration and obviously some of the day one issues. Ben, what do you think we should be focusing on right now in terms of what's coming up?
Yeah, so there is, as you mentioned, there's a lot of deadlines coming up on this debt ceiling issue. Our guest coming up will be. Well, I definitely want to ask him about that. But we have a budget process that will try to avert a shutdown that happens in March. They're talking about a reconciliation bill in April, and then this debt ceiling that could come a few months after that. And overall, the conventional wisdom has been that the debt ceiling is going to be kind of an easier lift because Republicans are in full control, which I think is largely still true, but it's getting more complicated by the day. Trump kind of tried to get it into the December back and forth unsuccessfully, but what he did succeed in doing was making it possibly part of the reconciliation bill. And for a lot of technical reasons that we don't have time for on the podcast, that's tough because you basically need an entire all the Republicans to then vote for it. And there's a lot of Republicans who part of their brand is not to vote for the debt ceiling. So it's going to be a kind of ongoing thing. Besant today was sort of funny on it because he both defended the debt ceiling a bit as a premise, but then talked about if Trump wanted, he'd get rid of it. So it's going to be a kind of an issue that crosses a lot of paths, and it's not exactly clear the process to get it done. And it'll get lifted eventually. Besson said as much today, but it could be kind of a lot between here and there.
Everybody should read Ben's stories because he covers every bit of this in detail. And when it happens and you need to know about it, Ben will tell you. That's how I find out about it.
That sounds most of us. Ben is our guru over here. Now, we are going to be talking to our guest, Shai Akabas, on the other side of this break. So do stay with us on Capital Gains. Welcome back to Capital Gains. We want to now bring in our guest, Shai Akabas, Bipartisan Policy Center Executive Director of Economic Policy. Thank you for joining us on Capital Gains. First, want to start with a key discussion, and obviously because of the deadlines coming up, the debt ceiling. Now, we saw in discussions today during Bessent's hearing this week about eliminating the debt ceiling. What do we know about how that math would work and what the repercussions would be?
Well, thanks so much for having me. The debt ceiling limits the amount that the federal government is allowed to legally borrow. That doesn't really matter, except that it causes panic in the financial markets when they think that we're not going to be able to afford to pay our bills. And by when I say when it doesn't really matter, it's not an economically significant figure in and of itself, because we've already committed ourselves to doing the spending, and this is just allowing us to borrow to pay those bills. Now, the rub this time around is that markets and credit rating agencies are already getting nervous around the size of the debt that we have. And eliminating the debt limit wholesale could cause them to have further concern that we are unlikely to address that underlying problem that continues to grow in size. I think you're going to hear that from a lot of congressional people on both sides of the aisle, particularly Republicans. And ultimately, I think a debt limit deal could have a element that addresses the underlying fiscal problem paired with the debt limit. And so we've seen that in the past where there are these negotiations between the two parties to get to a debt limit extension. This time around, there's talk of it going through the reconciliation process and being passed only with Republican support. That would be an anomaly when it comes to history. And I think ultimately there's a decent likelihood that it requires both parties to pass. And then you get into these conversations about what gets tacked on. And could you see an element that gets tacked on that de-risks the debt limit for the future? So it effectively would eliminate the risk that we see, but also has a fiscal element tied in. So that requires a debate to happen regularly about how we're going to address the growing debt problem that we have as a country.
Shai, I want to push harder on this question of what if we just got rid of the debt ceiling? I mean, you know the history of this, I think, probably better than any of us. But the reason this went into effect decades ago was not to police the amount of borrowing. It was just to create one authority for total borrowing, so the Treasury didn't have to come back to Congress every time it wanted to borrow money. And now it's gotten to it's gone to the other extreme, where once every couple of years we seem to have this threat of a default. And in those downgrades from the credit rating agencies that we've gotten so far on U.S. debt, mostly they've not really said the U.S. is borrowing too much. They've said we're downgrading because of political dysfunction, which seems to be a direct reference to the showdowns, to these risks of default. And if you got rid of the debt ceiling, you still would be piling on the debt, which we seem like we're going to do anyway, but you would just be you would not have these periodic risks of default. So what is wrong with that?
You make a great point, Rick, and I think there's two responses. One is, it is absolutely true that the debt limit in its current form is an ineffective form of budgeting. It's part of the budgeting by crisis that we've gotten into as a country. It's the debt limit, it's the government shutdowns, it's the continuing resolutions, it's the inability to just control our fiscal picture. But what's also true is that the credit rating agencies in their recent warnings have pointed to the fact that the dysfunction in governance is going to lead to an inability to actually address our debt problem. And I am concerned that just waving the debt limit away eliminates this at least stoppage point where we confront the fiscal picture that we have and have a discussion about it. Now, the discussion today is highly inefficient because it's not usually about solutions to that budget problem, which largely revolve around fixing the entitlement spending that we have as a country and the tax code that we have to bring in enough revenue. They often fall on a small portion of the budget that's not really driving the problem anyway. But I am concerned that ratings agencies are going to grow increasingly alarmed about our inability to deal with the underlying problem if resolution to the debt limit is not paired with some type of fiscal rectitude, be that actual policies that improve the picture or a process that gets us to debate the underlying causes and solutions to the problem. So that, I think, is the nice marriage where, yes, we should de-risk the debt limit and it should not pose this constant sort of Damocles for our economy, but doing so in a way that is mindful of the fiscal situation we find ourselves in is the right way to do that.
What's your assessment at the moment of the atmosphere in Washington in terms of its ability to take on these fiscal challenges you're talking about here? A couple signals we've seen this week. One I saw you highlighted, which is a plan from a Republican. His name is Jody Arrington, that actually talks about painful cuts, talks about big things that we could trim to actually get this under control. Another one to flag too is that the top tax writer, Jason Smith, seemed to signal that the tax bill that's coming could not be paid for basically because they think tariffs are going to bring in so much money, which I think budget watchers are going to question for sure. I guess given these different signals, what's your sense of kind of your hope of responsibility here in the months ahead?
Well, I'm enthusiastic that we're taking a comprehensive look at our tax code because we do that all too infrequently. We only do it when there's these massive bills that come on the table and there's actually a debate about the underlying tax code. What I think is important in this moment, in this inflection point for fiscal policy, this is a year, as was noted, there's going to be recurring opportunities to address the fiscal picture. The tax cuts legislation is going to be perhaps foremost among them. And in the context of that, we need to think about what is tax policy that is conducive to economic growth, that is supporting working families and businesses, but is also fiscally responsible. And for that reason, we are thinking about policies that can help pay for tax cuts that Republicans want to extend. We should be looking at the most economically powerful elements of TCJA to extend. And to offset that, we should be looking at things that don't cause a huge economic drag. Pairing those together will result in a package that maximizes the economic growth that we get from these tax reforms and also minimizes the drag that we'll get from a growing debt burden.
So Shai, in that regard then, obviously you look at a lot of different formulas and models here. What are the top three most viable ones that will cause at least the least damage to the economy or perhaps offset?
We know that legislators are already starting to talk about this and look at specific policies, some of which BPC and others have been putting out there. So for example, on the state and local tax deduction, this is a huge issue for many Democrats and Republicans, and particularly important for the Republican constituency that is part of their conference that is prioritizing this from primarily states that have high state and local taxes. And they would like to keep that deduction, or restore it, I should say, to a higher level than it is today under the Tax Cuts and Jobs Act level, which is limited to $10,000. We have put out compromise approaches where you could perhaps lift it for married couples that are to a level that is over that $10,000 level, but maybe even trim it from the $10,000 level, or at least keep it at the $10,000 level for singles. There are other numbers being thrown around like $100,000 or higher. That benefit would largely go to high income families. You could also limit the state and local tax deduction for corporations, which is sort of a distinction that is currently in the tax code. They are still allowed to deduct those state and local taxes without limit. So that's one place that I think is going to be central to Republicans' ability to get agreement. There's other places that they could look at to make the tax code more efficient. So for example, the charitable deduction, extremely important, supports a lot of critical causes around the country. But right now, that only goes to people who itemize their deductions, and that's a very small portion of the tax-paying population. Could you democratize that and curtail the benefit a little bit at the higher ends, provide it to more people, and save a few dollars in the process without dramatically affecting charitable giving? I think there's a formulation there that could be a viable option on the table. So it's items like that that can help pay for some of the tax cuts that Republicans are interested in doing. I don't know if those will end up carrying the day, but there's lots of items on the menu, and what responsible members of Congress should be looking for is to pair those with the tax cuts that they want to drive forward.
Shai, there have been so-called bond vigilantes warning about a U.S. debt crisis for years, and perhaps you could even say decades. Do you think this is it finally? I mean, people are now looking at what's happening in bond markets with these long yields going up a little bit. Is that the beginning of the debt crisis? Are you not sure? If it's not, how will we know when the debt crisis is here?
Fantastic question. I am increasingly concerned that we are getting close to that tipping point. the most frequent question I get is, what is the level? We're right now, we're at about 100% of GDP, meaning that debt held by the public is about the size of our economy. That's a very high level. It's almost unprecedented in US history, and we're headed much, much higher than that. When do we hit that point that it becomes a huge problem and we start seeing really dramatic market reactions? Is it 110%, 120%, 150%? We don't know. What I am fairly confident of is that we have passed the point where we could hit some type of major economic downturn or unforeseen event. Think of COVID, think of the Great Recession, others, that causes us to need a forceful federal response. And in that federal response, we may need to take into account what those bond vigilantes or what the markets are going to do as a reaction. That's not a strong position for us to be in as a country. When we have to determine our response to a crisis of the moment by what others are going to do in reaction to that, it means that our response is not being dictated by the fundamentals of the crisis itself. It's being dictated by the broader exogenous economic circumstances. And we don't want to find ourselves in that situation. That's why we need to get our arms around this problem sooner rather than later. To date, we've been the proverbial frog in the pot where the water is getting warmer and we think it's just feeling nice and cozy in there until it gets too hot where we start to burn. And I'm afraid that we're going to get to that point before we realize it. And only when we realize it are we going to have to start implementing really dramatic policies that are not in the best interests of our economy and our country moving forward.
Before we let you go, Shai, I wanted to end on a perhaps more upbeat note that if the proverbial pot here doesn't boil before we get to that point, your group really looks at bipartisan policies that might be under the radar that could be areas of agreement. What are you looking at that we're not talking about? What are you looking at that could be an area that might surprise us in the years ahead, where the parties could come together, if there's any?
Yeah, it's really important, Ben, because amidst this, there are so many issues that we can be working on constructively together. And the reason why this deficit problem is so concerning, in addition to what could turn into more of a crisis, is that it's preventing us from focusing on the investments and the other elements of legislating that we should be doing to secure American families, to make working easier for American households, for parents in the economy. So I think that working families agenda, we've heard it loud and clear from the last election. Both parties, I think, have, that those kitchen table issues really drove the day. And members of Congress are focused on trying to make improvements there. Most of those, though, cost money. So it's important to think of those in the context of the fiscal picture. But when we look at policies like the child tax credit and paid family leave and childcare, affordable childcare, those are all things that help parents go to work and be productive members of the economy, help support workers, and create a more robust economy for the future. Another one is small business. We just put out a big agenda for small business earlier this week, and that is an issue that I think could drive legislating in Congress where both parties feel the need to support businesses and create conducive conditions for them to thrive in an economy that will end up ultimately helping everyone and also improving our deficit picture, because part of the answer to the deficit problem is economic growth, and policies like immigration and labor market supports and lots of others, energy policy, those all factor into that element.
From the BPC, thank you so much for joining us
Thanks,
here on
Shai.
Capital Gains.
Appreciate it.
Well, that does it for this episode of Capital Gains. A big thank you to Shai, Rick, and Ben for joining us today. Now, make sure you like and subscribe Capital Gains, and be sure to tune in for Yahoo Finance's special inauguration coverage on Monday. You won't want to miss it. We'll have special guests giving their business and finance takes, so be sure to tune in. But that does it for this episode of Capital Gains. We'll see you next time.
Welcome to Warrior Money, the show devoted to supporting our brother and sister veterans in business. I'm Patrick Murphy.
And I'm Dan Coons.
Joining us today is a highly decorated Army general who received the Presidential Medal of Freedom. He's a former Supreme Allied Commander of Europe for NATO and a former presidential candidate in 2004. He went on to found the investment bank Envera and the strategic consulting company Wesley K. Clark and Associates. Please welcome General Wesley K. Clark. General Clark, thanks for joining Warrior Money.
Well, thank you. Thanks, Patrick. Good to see you both.
Hey, so we start out every show with bluff, bottom line up front. So let me go from the jump here. You served at the highest levels in the military and in business. What were the lessons learned that you can share from those two transitions?
So the first thing is technical competence. You got to know what you're talking about. In the military and in business, you've got to be able to read a spreadsheet. Got to be able to question the assumptions in business and in the military. You got to know the technology of the troops or the aircraft or the ships that you're sending, down to the details. So I think there's no real substitute for experience. You just have to learn it, and it takes a while. It's not something necessarily that just comes out of a book. And so, in my experience, the best generals are those who, or in fact, the only generals who they start at the bottom and they work their way up. And they've seen it all the way through. And I think that's also true in business. The best business leaders I've seen are those who have had their hands on the real thing at the bottom, not those who are shoved into an organization at the top because they're just financial managers, but they're people who really understand the stuff of the business.
Yeah. We Dan and I come originally from the Philadelphia region, and we talk about the largest media company in the world is Comcast, started by Ralph Roberts, a Navy veteran, but he started literally climbing poles before he acquired a cable company, et cetera. So we hear you. Hey, sir, you started out, obviously, West Point graduate, valedictorian. You were a Rhodes Scholar. You were a company commander in Vietnam. Let's just talk. How are those early experiences formative to your life and your success?
Well, first of all, West Point was just a great learning experience. I was really lucky there. I stood high in the class, and I got a lot of exposure to officers who were the instructors, and so they really helped me understand the military profession as a profession. So I wasn't just a lieutenant when I went in. I had connections to majors and captains who had shared with me their experiences. So I felt more of a bond to the profession. And then when I got wounded, I think there's something about being wounded in action and laying in a hospital and bleeding and seeing other soldiers there. You're part of the profession of arms in a way that is deeper than simply raising your right hand and taking the oath of commissioning. So that's the first thing. The second thing I think is what I learned in Vietnam is that the academic credentials they don't mean much. It's really about credibility and trust with the people you work with. And I was the I think only college graduate in my mechanized infantry company. I was one of the older guys in the field. I was 25 when I got shot, and I don't think any of the troops there in my mech infantry company volunteered for Vietnam. I had a few high school graduates and had a lot of people who didn't go to college. I don't think any of them really understood calculus. A lot of them didn't get along with each other. I had white guys from Michigan. I had Mexican Americans from Texas and California. I had African Americans from the South and from the North, and I knew that when we were on patrol, I could sniff and smell people were smoking dope out there, and that was not only against the rules, it was extremely dangerous. And yet, and here's the teaching point for me: they came when I was under fire and pinned down. They ran across a bridge into that fire to basically set up a base of fire. They overran the base camp. They saved me. And a lot of them had FTA on their helmets, and they were counting, how many days they've got left before they could go home. And it wasn't like they were trying to win a medal or stay in the Army. They just, they were good people, and they were ordinary Americans, and they believed in me because I was a captain. I treated them with respect, but more importantly, I had the imprimatur of the United States. I was there, U.S., on my collar as an officer, and they put their trust in me. And so I think that, it's really about trust and credibility in leadership, and also not expecting everybody to have the same credentials you do. You don't have to be an Ivy Leaguer. You don't have to have gone to Stanford or Yale or something to be a good businessman or a great American. It's really about what's in your heart, and it's about your commitment and determination.
Sure, I'm named after a Vietnam veteran that gave the ultimate sacrifice. I think a lot of folks, especially younger Americans, don't understand, when your generation came back from Vietnam, we didn't separate the war from the warrior. And, your generation could have sat home when we came home from Iraq, and, you guys were the first ones to be, to us from Iraq, Afghanistan, coming home and saying, welcome home, brother, welcome home, sister. So I just want to say salute you for doing that and for your whole generation.
Well, Patrick, thanks. But, I want to say something else about this, because my generation didn't think about money. It just wasn't that big a deal. I can't explain why. I went to a very good high school, public high school in Little Rock. There were a lot of people whose parents owned businesses, but they didn't say, hey, I'm going to go out and make $1 million on Wall Street. They didn't even enter anybody's mind. They were going to be teachers. They were going to be scientists. They were going to be engineers. They were going to become college professors or lawyers. It wasn't about money. And I think at least when I talk to young people, the money dimension is a lot higher. People seem to recognize today that it's the sine qua non. You've got to find a way to make money. And, it's what some people think that why would you go into the military? Because it's public service. And for my generation, who were raised by World War II era veterans, public service that's what it was about. It wasn't about you. There was a sense of collective teamwork in the country in which we believed in each other and believed in the country. And we talked about the common good. And I was a camp counselor at the Kiwanis Boys Club camp for a couple of years, and a staff member a couple of times there. And, you taught these young men about leadership and about commitment and about helping others. And that was the basis of life. And so it's hard, when you're older to really understand what another generation feels. But from the tenor of the culture, it seems to be a little bit different than my generation.
Yeah, General Clark, that's a really appropriate kind of segue into the next part, which is when you've served at the highest levels in public service and the highest levels in government, how do you find or try to transition to your purpose in the private sector after you've done those things in the public sector? I'd love to understand a little bit more about how you made that transition happen from the levels you did serve into the areas that you were able to support, and how you created that world for yourself.
Yeah, well, it was a tough transition because when I came out of the military, we had succeeded in Kosovo, but there was still a lot of frustration about it, and people didn't really understand it. And so I got out of the military. I had a nice retirement ceremony, and I was going to become an investment banker. I'd always been interested in technology. At one point in high school, I thought I was going to become a theoretical physicist. And so when I'd read business magazines and they talk about science and technology and engineering, I couldn't wait to actually put my hands on it and start doing it. It was really exciting because in a way it was going back to the beginning and saying, I want to get my hands on something. I want to really do something real. But I decided to accept a position down at Stevens Group in Little Rock, Arkansas, to learn business and learn investment banking. And I did, but I ended up, I couldn't keep my mouth shut. And so when I saw what was happening after 9/11, and that we were going into Iraq. And immediately after 9/11, I was told by friends in the Pentagon, hey, we're going to war with Iraq. And I'm like, why are we doing that? Did Saddam Hussein have something to do with 9/11? And the answer was no. And so, and I had seen all the intel just before I retired, obviously. And there were no nuclear weapons there, and we'd gotten rid of the bio weapons. Maybe some chem stuff was still left around, maybe not. But the point was that I saw a really fraudulent effort to portray Saddam Hussein as a national security risk that wasn't true. If you had really been sincere about wanting to stop nuclear proliferation, you'd have done something with North Korea then. When I'd been the J5, we had started a negotiation, a process to get their nuclear materials out and put them on a path to a different solution to their energy needs. But Congress sort of dropped that, and the Bush administration didn't pick it up. And sure enough, nuclear power North Korea emerged. So I thought the whole effort was fraudulent, of taking us to war. And I felt it was a really hard thing, Patrick, because, Don, for me, those men and women in uniform, they're my brothers and sisters. And I loved them. I trained them, and they just followed orders. They were told to do it. Not keeping my mouth shut, I got drawn into politics, and Ted Kennedy liked me, and pretty soon there were tens of thousands of people online urging me to run for president. It was pretty hard to say no.
All right, General Clark, we're going to get more about the Draft Clark movement in just a second. We'll be right back with more Warrior Money after the break. All right, welcome back to Where Your Money. We're joined by General Wesley K. Clark. General Clark, you were just about to talk about the draft General Clark movement back in 2004. I just came back. I was just coming back from Iraq. I was part of the invasion force with the 82nd Airborne Division. Unfortunately, I had lost 19 of my brothers over there. But at that time, you know, people were all across the country recruiting you to run for president of the United States. In 2 weeks, you raised about $3.5 million, that draft General Clark movement. Can you walk us through what was that like and what were some of the lessons learned?
Yeah, it was a really great experience, honestly. But it's like everything, like I said before, if you don't have experience, you're not going to be that good at it. And I didn't have any experience, and so it was my first foray into politics, and it's become my last. But I had a great time. I went to 5 states. We raised about $22 million. I met a lot of wonderful people. I heard a lot of stories. I learned about the inside of party politics firsthand, and it also brought me in much closer touch to the economic, social, political conditions of different states, different people, different classes of people across the country. So it was a great learning experience. And you know, as they say about politics, you'll never have more fun, and then they vote.
Yeah.
And so, I loved talking to people. I loved giving those speeches and stuff, but then they vote. And so Joe Biden had told me before I ran, he said, if you got a 1 in 3 chance of winning the Democratic nomination, he said, you should run. And I thought, gee, he's not being very kind. I mean, shouldn't he tell me I'm going to win it? But Joe was right. I did pretty well, but I didn't win the nomination because things like that take years of preparation and reflection and study and, you know, something extraordinary. So, but I had a great experience at it. And then I had to go back into business and really commit myself to it, which I tried to do.
Yeah. So when you did make that transition from the presidential election campaign, which had to have been an amazing time of your life, to then go to the business, how did you find your way into the business community? What did you decide to do?
Well, I had been on a couple of boards before that, so I called business friends, and they kindly let me be a consultant to Goldman Sachs on some boards, and so that was very helpful. And I worked with a fellow Arkansan, James Lee Witt, and he had he'd been the director of FEMA, so I became the vice chairman of his company. I helped with relationships and things like this as I learned a little bit about disaster mitigation. And then I also became chair of an investment bank, a small bank that was a private bank on Wall Street. And I had already passed my FINRA exams. And so then I thought, okay, what is it that you really are interested in? And I thought energy. Energy because it's the closest thing I could get to national security and not be doing that. I didn't want to quite do that. And so I worked on energy. I worked on a board of an oil refinery. I tried to help out with wind turbines and solar and batteries and various different boards and companies like this. And then in 2010, 2011, I was asked to participate in a group that was doing conferences that would bring together Eastern Europe, Africa, the Middle East. And so I had known Eastern Europe. I hadn't been back over there. I hadn't tried to do anything in there in the 10 years since I'd been retired. But as I went into the conference business and looked at it, clearly there was a role to play in trying to help East European countries develop economically. Because really economic development is the foundation for national security. If people don't have jobs, if they're not happy about their country, they're not likely to be prepared to defend it. And so it was really about economic development. I worked some in Romania. And then when Maidan happened in Ukraine, And then the Ukrainians had asked me right away to come back because they knew Kosovo, they knew what my role had been. I was over there with another former Defense Department leader on the 31st of March, 2014. We saw the aftermath of Maidan. We talked to the government, and I went back many times over the next couple of years, and I've still been in close touch with Ukraine. And so trying to work foreign policy, really the same kind of concerns I had when I was in uniform, when I was the J5 and NATO commander, I've tried to follow through with on an eleemosynary basis. Business is still business, and we've got an investment bank and a consulting company, and we manage to keep the doors open, the lights on, and have a few people. But it's not about money. It's really about trying to do worthwhile things for others in this country and abroad.
Yeah, you've lived a life of service and purpose in that way. And earlier in the conversation, you talked about the orientation to money and dollars. Can you talk a little bit about why do you think that more veterans aren't in political public service? Why do you think that mood's changed, and why do you think that culture is where it is now? And more importantly, maybe how do we fix it? How do we get back oriented that right direction?
Well, I think we had after World War II, obviously, so many people had served that it was kind of an anomaly that we had so many veterans in government, but they stayed in government for a long time. You know, America runs on like 40, 50, 60-year cycles. Politicians have ideas early, they come in early, they stay late. Strom Thurmond, died at 100, still in office, and as a senator from South Carolina. And so these positions change slowly. A lot of my generation was anti-war. They didn't accept the military, and we got rid of the draft. And so it was only normal that young people didn't go into politics after they'd been in the military. They did go into the politics anyway. They didn't need to be in the military. There were a few people from my generation, like John Kerry, who believed he needed to serve first, but most didn't. They just went right in. So I think we're seeing now more veterans actually trying to come into politics on both sides of the aisle. They see things that they've seen life's rough edges, let's say, in the military. And some of them have seen things they didn't want to see. And they've seen places and people that needed help, and they want to make a difference. And so they understand what a wise man in Little Rock told me when I first got out. He said, you may not like politics, but it's the way the country's governed. So you got to understand it, and if you get a chance to lead in politics, you should do so. And so I took his advice. I did my part. I did my best, and we've got a lot of veterans today, I think, who would really welcome the chance to serve in elective office. But it's a competitive process. There are lots of people who want that opportunity to serve. And so as Senator Mark Warner told me when I asked him, I said, Mark, how should I think about politics? I'd first gotten I was out of the military at that point. And people had asked me to give speeches to the Republicans and the Democrats in Arkansas. And he said, here's a way to think about it. He says, number one is, don't get into politics if you're afraid to lose, because almost everybody loses the first time in politics. The reason is the incumbent always has an advantage, and usually there's more than one challenger. Said number two, he said, politics is not for everybody, because there's times in your life with family considerations, business considerations, personal considerations, where you simply can't quit your job and run for office. It may not work for you. He said, it worked for me. He said, I did it. I ran for the Senate in 1996 and I lost. He said, it worked for me, but it's not for everybody. He said, third is, you have to understand when you go into politics, you can lose everything. You can lose money, time, profession, family, reputation. Everything's at risk. He said, so my advice to you, he says, if you can avoid it, don't do it. That's the advice a lot of people would give you about the military too. You know, when you go in the military, you are taking a risk.
Right.
And my grandson's at West Point right now, and I look at these young men and women there, and I think to them, I think about them, and I think their future is it's unknown. No one knows what the future holds, and when you're in uniform, you've pledged your support and your very life to the service of your country or at the direction of the commander in chief and the officers over you, you just don't know what the future is going to hold. It's an enormous leap of faith in life and in democracy and in yourself. And so, I think that's the thing that I think maybe a message to young people from this is don't look for guarantees and certainty as a young person. It's illusory. You're not going to find it. You may think you have it. You may think you're locked for life when you're 25 years old. Not going to happen. Life always has its ups and downs. You got to be able to take the bad times with the good times. You got to pick yourself up. You got to look yourself in a mirror every morning and say, I'm a good person. I'm going to do a good job today. I'm going to take care of other people. If you do those three things, life will work out right for you. Whether that means you end up as a general or a multimillionaire, or whether it means you end up as a beloved grandfather, you just don't know. You don't know. It unfolds, but you have to be willing to take risks as a young person.
Hey, sir, before we let you go, we do this end of every segment with this warrior Q&A, which is a couple of rapid fire questions that we go through real quick. So who's a warrior, who's somebody you served with that inspires you?
General man.
Awesome. What habits do you think have helped you achieve success?
I'm really interested in things. Curiosity, I say, and persistence.
Last question. What's some money advice that you know now that you wish you know when you're younger?
Well, I think you got to put aside money for yourself, and you got to be pretty disciplined in saving and putting it into things. And I think you have to follow the markets to some extent. I don't think even if you're in the military, you can simply say, no, I get a government paycheck. I'm not interested in finance. You have to be interested in finance because it is the bread and butter of the country. And so many other Americans are interested. And we want you to have a good life, even if you're in the service. And especially if you're not in the service, I think you have to take care of your finances. You have to read the newspapers. You have to watch the stock reports. You have to understand what companies are about, what a corporation is, and so forth, because it's the bread and butter of America. You just have to do it.
Yeah. Well, hey, sir, thanks so much. It is the bread and butter of America. And that's what makes our country great, because we're the number one military in the world and number one economy in the world. We got to keep it that way because it's not our God-given right. So we so appreciate you having it on. Dan and I, that's why we have the show Warrior Money. We talk to young Americans, a lot of veterans, a lot of troops, talking things about delayed gratification, about being smart, about putting some of your paycheck away to invest it for long-term, kind of frankly, that nest egg, as you mentioned. General Clark, thank you so much. Listen, that's our show. Listen, subscribe, or review Warrior Money on Apple Podcast, Spotify, or wherever else you get your podcast, or find us at Yahoo Finance. I'm Patrick Murphy.
And I'm Dan Coons. We'll see you next week.